Okay, so we have your W-2 and mortgage deduction, your receipts, charitable deductions, mileage claims. Let's see, are we missing anything else? Oh, do you owe any use tax?
What's use tax?
It's usually owed when you buy something from an out-of-state company or website that didn't charge you California sales tax. So do you think you may owe use tax?
Gosh. You know, I did a lot of online shopping this year. I think I have some receipts from a few things I bought.
Oh, that's easy to add in on your return. Let's see what you have.
Oh.
The revenue collected from use tax helps pay for important California services like public safety, healthcare, and schools. Remember, when you file, pay your use tax. To learn more, visit boe.ca.gov. Paying your use tax. Good for you, good for California.
You ask and we listen. Together, we've designed a California State Board of Equalization website with you in mind. The convenient login button allows you to access many of our online services from anywhere at any time. Drop-down menus make navigation easy. You can do everything from filing a return and making a payment to finding permits and licenses. Our interactive banners highlight the latest news, programs, and services. Popular topics help you find information quickly. The How Do I and Business Center sections offer you even more helpful resources, including individual tax guides for various industries. We also want to hear from you. Tell us, how was your experience? Your feedback is important because it helps us provide you with an improved and more interactive website. So check it out at boe.ca.gov. It's designed with you in mind.
The Taxpayers' Rights Advocate of the State Board of Equalization wants you to know you have rights. As a California taxpayer, your rights are protected during the assessment and collection of taxes, including the right to courteous and prompt service and the right to be treated fairly during all dealings with Board of Equalization employees and officers of the Board. Publication 70, Understanding Your Rights as a California Taxpayer, and Publication 145, California Taxpayer Advocates, can be useful in learning about your rights. If you feel the BOE has not resolved your concerns adequately, please contact the Taxpayers' Rights Advocates Office at 1-888-324-2798 or email us. The Taxpayers' Rights Advocate of the State Board of Equalization. We're here for you.
It's easy to buy things online these days, but did you know you may need to pay tax on those items?
Really?
It's called use tax. And just like sales tax, the use tax you pay to California will help fund important services like public safety, healthcare, and schools. But how do you know if you owe use tax? When you buy things online, look to see if you were charged tax when you checked out. If you weren't, you may owe use tax. It's easy to figure out how little you may owe. For most purchases, you don't even have to save your receipts. Just use this convenient use tax table, available in your income tax instructions. Find your adjusted gross income to see how much you may owe, and enter that amount when preparing your state income taxes. It's that simple. No looking through files and no hassles. You've paid your use tax for the whole year.
That was easy.
Paying your use tax. Good for you. Good for California.
We're committed to supporting our communities, teaming up with businesses large and small, improving our roads and schools, investing in law enforcement and our environment. Together, we're funding a better quality of life. We're the California State Board of Equalization. The BOE was created in 1879 to equalize property tax assessment practices throughout California. Our responsibility has grown quite a bit since then. Today, the BOE administers more than 30 taxes and fees that provide 1/3 of all the revenue generated in our great state. And we're efficient. More than 99% of the money you contribute supports services and programs that benefit all of us in California. When you drive down our many highways, see a police officer helping someone in need, or enjoy a walk along a pristine beach, think about what makes it possible. Whether you're a business owner, making a purchase, or just filling up your gas tank, your contributions are important to our state's economic health. And the greatest part, we're doing it together. We're ready to work with you. Take advantage of our free seminars, helpful classes, instructional videos, and mobile applications. Also, use our online services. It's easy to do business with us from anywhere, at any time. Our partnership equals success. Learn more at boe.ca.gov. Together, we're supporting our communities and funding a better quality of life.
Okay, so we have your W-2 and mortgage deduction, your receipts, charitable deductions, mileage claims. Let's see, are we missing anything else? Oh, do you owe any use tax?
What's use tax?
It's usually owed when you buy something from an out-of-state company or website that didn't charge you California sales tax. So do you think you may owe use tax?
Gosh. You know, I did a lot of online shopping this year. I think I have some receipts from a few things I bought.
Oh, that's easy to add in on your return. Let's see what you have.
The revenue collected from use tax helps pay for important California services like public safety, healthcare, and schools. Remember, when you file, pay your use tax. To learn more, visit boe.ca.gov. Paying your use tax. Good for you. Good for California.
You asked, and we listened. Together, we've designed a California State Board of Equalization website with you in mind. The convenient login button allows you to access many of our online services from anywhere at any time. Drop-down menus make navigation easy. You can do everything from filing a return and making a payment to finding permits and licenses. Our interactive banners highlight the latest news, programs, and services. Popular topics help you find information quickly. The How Do I and Business Center sections offer you even more helpful resources, including individual tax guides for various industries. We also want to hear from you. Tell us, how was your experience? Your feedback is important because it helps us provide you with an improved and more interactive website. So check it out at boe.ca.gov. It's designed with you in mind.
Okay, we're going to call the board to order. Okay, I'm going to invite Member Harkey to lead us in the pledge. Please stand.
Repeat after me a pledge to the greatest nation on the earth. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. We're going to do a couple things out of order. The chair is on his way in, so he should be here shortly. So we're going to, we have some, a recognition and a resolution for Mr. McGuire, and then we have a legislative committee report too that I know that the chair is interested in. So we're going to hold those till he gets here. He should be here shortly. But we're going to go ahead and begin with the Business Taxes Committee. So I'll turn that over to the chair of the Business Taxes Committee.
Thank you very much. We have several items today, and I would like to first bring up, thought I was ready. Okay, the first item on the agenda is Regulation 1590, newspaper and periodicals.
Oh, here we are. Mr. Chair, we just started with the Business Taxes Committee.
Thank you.
If you want to go back and start over, that'd be fine, because we haven't actually started. We just did the pledge.
We haven't done anything yet, so
Okay.
would you like to just...
No, just continue.
Oh,
We knew you had an interest in the ledge, so we were waiting that you got here for that.
thank you.
Appreciate it. Appreciate it.
Okay, staff accompanying Suzanne Bueller. Charlotte, you want to introduce your staff, or you've got any staff, Suzanne?
Mr. Larry Mandel and Mr. Scott Claremont are supposed to be joining me, but I'm not sure that they're aware BTC was
I
in the-
think they're coming up the rear there.
Oh, awesome, thank you.
Backup's on its way.
Good morning, I am Suzanne Bueller with the Sales and Use Tax Department. We have 2 agenda items for your consideration today. We will take each agenda item and their respective action items separately before moving on to the next. With me for agenda item 1 are Mr. Larry Mandel and Mr. Scott Claremont from our legal department. Staff requests your approval and authorization to publish proposed amendments to Sales and Use Tax Regulation 1590, newspapers and periodicals. The proposed amendments clarify the application of tax to newspaper subscriptions that include both paper and access to digital content. Staff recommends that 53% of the charge for these subscriptions be presumed to be for the non-taxable sale of the right to access digital content. Taxpayers may rebut this presumption by producing documentation establishing that the non-taxable allocation is greater than 53%. We do have speakers on this agenda item. We'd be happy to answer any questions you may have after their presentation.
Thank you very much. Are there any questions from the board? No.
You got a speaker.
Oh, okay, I'm sorry, he's not part of staff, I'm sorry. Excuse me. Yes, sir.
Madam Chair and members of the board, my name is Jim Ewart. I'm the General Counsel for the California Newspaper Publishers Association. We want to thank you, Madam Chair, for spearheading the effort here and for your staff's work, as well as the staff of the BTC. We think this is a good regulation, good amendments to the regulation that we've lived under since about 1991 now, and we urge an aye vote.
Thank you. Are there any other speakers? Any member of the public? Board members? Have any questions or comments?
Move to adopt staff recommendation.
Second. A second, but I'd like to just say this was a very, very cooperative effort between the industry and the staff. I really appreciate the staff efforts of trying to move and the industry's efforts of moving so that we've got something that works for everyone. It's a good compromise position, and I want to thank you all for working collectively together. Thank you. It'll benefit the state of California. Thanks so much.
Thank you.
Okay, we have a motion and a second. Any opposition? No? Okay, so moved.
Thank you.
Thank you.
Joining me for Agenda Item 2 will be Mr. Richard Parrott from Special Taxes and Fees Department and Mr. Robert Tucker from the Legal Department. Staff requests your approval and authorization to publish proposed cigarette and tobacco products tax regulation 4076, wholesale cost of other tobacco products, and regulation 4001, retail stock. The proposed regulations define and clarify the terms wholesale cost and retail stock as they relate to the cigarette and tobacco products tax. In addition to the definitions, both regulations provide examples to assist taxpayers in the application of tax. Regulation 4076 also includes a rebuttable presumption for showing a transaction was at arm's length. We do have speakers on this agenda item, and we'd be happy to answer any questions you may have after their presentation.
Okay, thank you. Any speakers from the public? Come forward and state your name and affiliation for the record, please.
Thank you, Madam Harkey. Randy Cheek with SEIU Local 1000. We do have some concerns about the regulation that deals with humidors, in that you have regular retail product that will be mixed in with product that is not taxed yet, and therefore that gives our inspectors, whom we represent, a problem when they go into a section and they don't know which one has been pre-taxed and which one hasn't been taxed. That also provides, if you go into some of these humidors, you'll notice that they may not have personnel in there, and someone can go in and take a non-taxed item off the shelf and go to the clerk and pay for it, and therefore that will cause a loss of revenue for the BOE, and we feel that this particular item, and I believe it's under number 2A, it talks about the walk-in humidors. We believe that that could be a problem for our members, and we also believe that that could be a loss of tax revenue. So therefore, we would like you to take that into consideration. We do have an oppose on that particular position.
I believe, just for the record, we did take that into consideration. Ms. Bueller, could you define the differences between the two items? And when something is moved from overstock, in essence, to retail stock?
I will defer to Mr. Parrott. That is his area of expertise.
Yes, Richard Parrott with Special Taxes and Fees. We have in the regulation where the product must be segregated, separated, and clearly labeled. The wholesale or the non-retail stock will still be sealed in the original manufacturer packaging, and that's the distinction in the regulation to cause the difference. So we felt it was very clear, even in the walk-in humidors, that product would be separately set aside from the retail stock and still sealed in the original manufacturer packaging.
Thank you. I know we worked on this for several months to try to get it right so that we couldn't have a fudge factor in it or could decrease.
Yes.
This resulted, members, as of a case we heard, I think our first or second month, where there was an issue as to what was taxable, what was not. So I appreciate the SEIU's concern. I think we tried to address that over the several months. It's been probably 9 months, I think, in the works. So with that, are there any other speakers? Board members?
Madam Chair?
Yes, Chairman.
Only because I wasn't really a party to the process. I just want to make sure that SEIU and the department have reconciled their differences, and they're in agreement that this works for the individuals who are on the front line that are required to enforce the law. These are the individuals that are out there in the field. As much as I appreciate the administrative oversight, I have a tendency to give credence to those individuals who actually have to enforce the law itself. So the questions of both of you have, and I'll first go to SEIU, have you had an opportunity to reconcile your concerns in this regard?
No, sir, we have not. I last spoke with one of the inspectors, and their concern was that a customer can come into a walk-in humidor, see that the product was on the retail side no longer available, look around the humidor and see that, oh, there's a El Presidente over there, go over to that box, open it up even though it may be sealed, and purchase the product. And that they felt that it wasn't clearly delineated as to what was taxed and not taxed inside the humidors. And that gave them some pause, and as you know, that probably don't have enough inspectors out there right now, so that's probably part of the issue. It causes them to have some confusion, and therefore they felt that this was an issue with them.
Have they put forth a recommended solution, or are they contemplating and would like an opportunity to do so?
They would like an opportunity to do so.
Okay, thank you.
Chairwoman, I have comments too. Thank you for your comments, Mr. Cheek. I'm also concerned with the definition of retail stock as well. First, can you clarify there's a portion of the regulation that deals with an individual that holds a distributor's license and a retail license, and basically saying, and I'll paraphrase, that if you're in that situation where you hold both licenses, you can have the stock on the distributor side stored on the location but separate from the inventory that you're going to sell? Is that kind of a good paraphrase of it?
That's correct, yes.
So at what point will this distributor, and is the distributor mainly distributing the product to himself on the retail side?
Correct.
So at what point will the distributor self-assess the excise tax and remit to the board? And then how do we verify this?
The distributor would do that when they take the product from the sealed original manufacturer packaging, break that seal, and put it on the shelf that's intended for retail. Then at that point, that would trigger a taxable event that would be reported on their distributor's tax return for that period. And then that would be verified also through our audit program.
My concern is that process, taking it from the back room to the front room and now reporting it, is going to increase the cost of our licensing act and our distribution when our inspectors get out there and try to verify if this product is taxable or not taxable. I'm also concerned that it's going to raise the cost, it's going to provide more administration burden to the BOE. And considering that we're talking about distributors, retailers that are just basically selling to themselves, it seems to me a more bright line test would be that when they acquire the product from the wholesaler or whoever they're acquiring it from, that they know that they're going to sell it to themselves at some point in time, that they might as well go ahead and pay the excise tax up front. So
Yeah.
I do not support 4,001. I also believe that it's going to encourage the underground economy, and it's just opening the door for noncompliance.
Okay.
Other board member comment? Mr. Runner?
Yeah, just a quick question in regards to my understanding of the process. I assume SCIU brought this up in the IP process?
I'm not sure they have, no.
Well, then, it's, okay. It's difficult for me when we have an IP process, which then includes these kind of discussions, then to come to the board if they didn't engage during the time when these were supposed to be talked about. Because I think we can, it seems to me this is a solvable problem. I think, I mean, unless you expect a store to have two separate humidors, and in order to do this, you know, move stock from one place to the other, I just don't think that's reasonable for business. But I guess I'm a little kind of concerned that if the process, I assume SEIU was aware of the IP process.
I am not sure that we were, no.
Well, let me ask.
I wasn't part of that.
Okay, let me ask, what's our normal process in regards to invitations to the interested parties meetings?
Generally, we have a stock list that we go from, and then also pull in the industry that is specific to the topic, and do searches for industry organizations as well as large retailers that we look at.
Would we normally then include then representing then staff who would be enforcing of that? And would SEIU be notified, or would staff be invited and be aware of the IP process?
The investigations division was represented in the meetings, yes.
So they were in the meetings?
Yes.
And okay. Again, it's hard, it seems to me, again, just process-wise. We have IP processes so that we can kind of iron out these issues. That's the whole purpose for why we do it. And so it's hard then when we come to a board meeting if all of a sudden we have objections that were never even raised in the IP process, and we have the investigators there that are the ones that are helping to craft the solution. You know, again, what I'm hearing, I think, is that they're just, that right now, at least what I'm hearing, is that you don't believe that there is a way to separate retail sale if it's all from stock that isn't for retail, if it's all in the same big humidor, walk-in humidor.
I wouldn't say that. I would say that our inspectors were concerned about delineating those products.
Were your inspectors different than the ones that were in the IP process?
I do not know who was in the IP process.
Well, we've got to fix that. We've got to fix this so that when we have an IP process, that we have the right labor folks that are in the IP process, so we don't end up with these kind of issues. You know, so I guess I'm personally satisfied the IP process was there, the inspectors were there. I think, you know, again, the guidelines to separate retail sales from stock made sense. Remember, we got in this problem because of the fact that there was a robbery, people couldn't keep track of what was in, what was out, and so we were trying to solve that problem. And I would just encourage everybody who's out there when we have an IP process to participate so we can solve these problems in the end, not when we get in front of a board.
Mr. Holman.
Madam Chair, just from a historical perspective, members, the IP process and this process is a continuous process. Individuals participate at that level. If they're not, or for whatever reason, don't have an opportunity to participate at that level, or if the information that is developed and consummated at that level, upon review of that, their only alternative is to come before the board and then express their concerns. If for whatever reason, the IP process itself is not guaranteed to dictate or delineate what the suggestions that are made in the hearing. For example, staff is not required to accept all suggestions and to incorporate that in their ultimate recommendation. And when that doesn't occur, the public's only position is to come before the body and then express their concerns about the final results. The other inherent difference from SEIU's perspective and the employees that work, that may be there in advisory capacity to provide advice to staff, the investigators, they have a different perspective oftentimes than from a labor perspective. And so you've got two situations, often up to 5 different situations where individuals are ultimately will come before the board, which is part of the process and part of the duties that we have in order to take that under consideration. We cannot summarily dismiss concerns because they didn't participate in the initial process. This is a part of that process. Their participation at this point is welcome, and the members, I suggest we just put it over, allow the parties the opportunity to work out their differences and bring it back to us.
Ms. Ma?
Yeah, I would second that motion just because I still don't think it's going to be clear, like in the case that we had, what is taxable and what's not taxable. I mean, if it's in a wrapper or not in a wrapper. If they open the box, they don't open the box. So, I think we should either have it one or the other instead of having someone decipher whether it really was wrapped or not wrapped.
There's a motion and a second, and I would just like to comment. We went through a very long process with this. I believe Mr. Silva was involved, staff was involved. We had members of the industry. I believe we had labor, should have. And I appreciate your concerns because this is a public hearing. But I would like to suggest if we're going to hold this over that we bring it back next month and that we encourage everyone to get really involved if we could. Excuse me. We have a problem with doing that.
Next month, because of the timeline for putting things on the public agenda notice, I don't think would be quite feasible. So I would ask that you give us a little bit more time.
For March?
And I would also like to suggest that perhaps we bifurcate the two regulations, and perhaps since we're only having issues on the 4001 retail stock, that we have a separate vote on 4076.
That's fine.
Correct. Okay, that's fine. Okay, so is that agreeable to everybody? Is your motion for?
Yes.
Okay, so the retail stock is the one that we have an issue with, correct? So there's a motion to put that over 4001, retail stock to put that over until March. And there was a second from Ms. Ma? Okay. Any opposition? Okay, so we'll be.
Madam Chair, if you will, I do believe Mr. Runner's point does have significance and this is to the general public, to the extent possible. It is helpful to have all of the insight in each phase of the process, but it's also understanding and respectful to allow this process to take its course as well. And I thank everybody for their participation, particularly the chair. She has been, conscious of this and working diligently trying to work it out. And so
This has been a very
long process.
Long and difficult process establishing what's what. And I would encourage the members of SEIU to look at the recent case over the last year and find out how this came to being, review the tapes, the board hearing. It was, it's quite a process for a small store that has one humidor, and it's quite an expense to pay the taxes on all of it up front versus as you bring it into the inventory, which I think.
Democracy at its best.
And one quick item too, if we can ensure that in the IP process, because again, I get the fact that investigators that may have been in this process were not the same folks that maybe deal with the issue in regards to the SEIU. So I guess I'd like to know that when we do an IP process that affects staff, that we actually go the extra effort to include the fact that we know that whatever staff is in that discussion is also then at least, I guess, using the same eyes as SEIU would be, as their union would. So again, we don't end up with this bifurcated issue and assume that there's staff that was participating, but that staff didn't necessarily hold the views or concerns of the union itself. So I think that's an important discussion to have at the front end, so that we don't get here at the back end.
Well, it's okay to bring this back. I'm happy to have the discussion, and we'll go over it again, but it's a very, very difficult process, and I really encourage your members to get involved so that we can fine-tune this. I think we did, but I respect that, this is a public hearing, and so more time is not a problem. Thank you. So then, do we have a motion on Regulation 4076, wholesale cost of tobacco products? To move that item?
I'll move the, okay, so
We're bifurcating.
Right, and 401 is the one we put over, and
Right.
I'll move the the recommendation of adoption of the regulation of 4076.
Do I have a second? I will second.
I thought we were okay.
I thought we were okay, too.
Oh, I'm sorry. Second.
Okay. We can't blame SEIU for not showing up. Okay, here we go. Okay, we have a motion and a second to adopt Regulation 4076. Any objection? Such will be the order. Thank you very, very much.
Thank you.
Thank you.
That ends the Business Taxes Committee, I believe.
Members, let us return to the Legislative Committee out of respect for the legislative members that are here. We want to...
Excuse me, Mr. Horton, I think we need to make up our special presentation.
Okay. Thank you, Mr. Runner. My apologies.
I think we need to take up the special presentation.
I agree. Mr. Runner just advised me that that wasn't taken up. Let's do that at this moment, and then to the members of the legislature, we will expediently get through this and then begin to address your matters, just in the essence of providing you an opportunity for your timing. Ms. Richmond, next matter.
Our next matter is a special presentation of a board resolution to Jeffrey McGuire.
Yeah. I don't have the resolution, but I've been known to elaborate.
One of these?
Mr. McGuire, we want to, on behalf of the board, we want to thank you for your service over the last 30-plus years. You have brought to the board enormous amount of experience, and your historical knowledge and relationships that you've developed over the years is invaluable. And we very much appreciate the service you provided to the people of the state of California during this time. We wish you much success in your journey forward, and you go with our blessings, our encouragement, and our support. This resolution says a lot of fabulous words about a wonderful person, but know that we very much appreciate you, and be it resolved that we, the members of the Board of Equalization, do hereby extend to Jeff our highest commendation for his outstanding record of personal and professional achievements and for his dedicated service to the State Board of Equalization and the state of California. Our congratulations on his well-earned appointment as Chief Deputy Director of the Department of General Service, and our best wishes for continued success in the years to come. We hope that you can accomplish the things that we set forth to accomplish and provide the employees of the Board of Equalization with a new building as soon as possible.
Well, thank you, members. I have spent 32 years of my working career with BOE as my home, and I do want to just thank the members that I've worked with over the years, all the practitioners, the business owners, the taxpayers, and most importantly, all the staff that I've had the privilege to work with and accomplish a number of things to help improve the state of California and the way that we administer the tax programs. And I'm very honored by your resolution, and I look forward to our continued partnership in my new role as the deputy director, or the chief deputy at Department of General Services. And again, I just want to thank everyone for the friendships that I've made over the years. And I look forward to working with people in a new capacity in the future. So thank you.
Mr. McGuire, we would ask that you indulge us and allow us to take a picture with you so we can make this, consummate this in the history of the Board of Equalization. All right.
I would just like to make a quick comment. I have not known you very long, but you led a fabulous staff. You did great work. Your 32 years kind of speaks for itself. To rise in an organization like this and to the sales and use tax, which is our biggest department, to head up that and have such respect from the staff that reported through you is admirable. So I want to thank you for your service, and I look forward to working with you at DGS as well.
Member Renner.
I think it's a strategic placement for the BOE, and we have high anticipation to helping us solve our problem. Thank you, Jeff.
Member Ma.
Yes, thank you. Since you've been here a long time, you understand some of the challenges that we have, and so we look forward to working with you over at DGS under the new director, Daniel Kim, and hopefully you'll be a great advocate for us, and we look forward to our continuing relationship with you.
Member Stovall.
Thank you, Jeff, and Controller Hughes thanks you as well. She appreciates all the service you provided to the Board of Equalization and looks forward to working with you at DGS.
Thank you. All right, let's do the picture.
Years for break room.
Members, now let us go to the Legislative Committee where Member Fiona Ma is the chair. Member Ma?
Thank you very much. We are going to convene the Legislative Committee. We have 4 bills on the agenda today, and we will start with AB 567, Tax Amnesty Medical Cannabis by Assembly Member Mike Gibson. And Ms. Pilsticker, perhaps you can read the introduction and the summary, and then we will have Mr. Gibson present and open it up for questions from our members. Thank you.
Thank you, Ms. Ma. Existing law imposes a sales tax on all retailers for the privilege of selling tangible personal property at retail, and that includes medical marijuana. This law would require the BOE to develop and administer a tax penalty amnesty program for sellers in a medical cannabis-related business. And it also applies tax amnesty to the Employment Development Department as well as the Franchise Tax Board. For our purposes, we have analyzed the sales and use tax portion of the bill.
Mr. Gibson, welcome.
Thank you very much, Madam Chair, and to the board members. In The Wizard of Oz, Dorothy said, "There's no place like home." I'm happy to be back here at the State Board of Equalization, and now I'm presenting Assembly Bill 567, which seeks to increase the revenue by providing a tax amnesty period for medical cannabis businesses that fails to pay their taxes historically are now looking at being in compliance. In the past, many businesses were afraid that by paying sales tax to the State Board of Equalization, they would be exposing themselves to the subject of the federal prosecution. Guiding from the United States Department of Justice has stated that the federal government will refrain from prosecuting cannabis businesses that operate in the state that has developed a legal framework. Now that California has officially taken the step to establish a regulatory framework, we have the opportunity to engage these businesses and to ensure that they pay their fair taxes. This measure will also require local jurisdiction to deny business license to companies where it is determined that they owe back taxes for the businesses for the prior operating year. I would like to start by accepting the amendments. Like to strike Section 2 of the bill, which deals with the dispensary employee, and update the date that the amnesty period takes place in the year 2017. In closing, AB 567 will increase tax compliance and revenue to the state of California. I respectfully ask for your support with this piece of legislation.
Thank you, Mr. Gibson. Members? Yes, Ms. Surcharge.
Since AB 567 involves the tax administered by the Franchise Tax Board as well, the controller would not participate on this vote.
If we have a vote.
If we have a vote.
Okay. Members? Any questions? Madam Harkey?
Hi, I had an amendment. My concerns revolve around accepting large amounts of cash. I have expressed them to Mr. Gibson as well as members of this board. I found that there were several other avenues that we could take or that the dispensaries could take to get their cash in, and one of them being that they make either smaller, more frequent deposits. There are other means to rather than electronic funds transfer, such as money orders. Oh, excuse me. I just got told this was a different bill. So, Mike, this is okay. I'm sorry. I apologize to the audience. This is going to be, I'm going to be on the other one. So, anyway, this bill I have no problem with. I think it makes sense. And, you know, although I have issues with a lot of other items, I think this bill makes sense to allow a tax amnesty to get the funds in, and we'll see how we collect.
Thank you very much.
Yeah, so I do have a question. Your amendment is to start the period in 2017?
Yes.
So presumably, the governor would sign it. We would send notices to all of the dispensaries out there, encourage them to register and pay, and give them a whole year to be able to comply?
That is correct.
Okay. Mr. Brenner?
Yeah, just a quick, I was just reading some notes here. I noticed that it does include the State Franchise Tax Board, correct?
That's correct.
Okay. And the interesting issue is, at least according to what we've identified, that there's not a dispensary that has made, to their knowledge, deposits for income tax. Whereas on the other hand, we struggle with the issue of cash payments and that's coming in, and we think that's important. So I think particularly, I think it's going to be interesting for FTB as we look at that particular side of these businesses and the income tax side too. So I think it's an important step. I think, you know, bringing the groups out of the shadows, getting them into the full stream there is important. And I do think we do have some tremendous issues, and I think we'll be addressing those a little bit later when it comes to cash, because what this means is there will be more cash coming in. And we still have some tremendous problems, obviously, with how it is that we in our offices take this cash. And I know a number of members are trying to figure out how we can do that in a safe way that lets taxpayers pay their tax, but at the same time works in a way that keeps our employees safe in the process. So
absolutely.
Thank you for this step, Mr. Gibson.
Thank you.
Mr. Horton.
Thank you, Madam Chair. Thank you, Assemblyman. Well, that's this is probably the first time I've said that. I usually refer to you as member. Member Gibson, thank you so very much for bringing this important matter forward. As we all know, there's a serious issue in this industry. There's a bifurcation of those who want to comply, and they are participating in every way that they can in order to have a regulatory process that allows them to comply with the laws that are proposed by the governor and the legislature, even to the extent of advancing initiatives that they believe will even put stiffer restrictions on them and guidance to protect the public, which is our primary interest, at the same time to provide revenue to the state of California, which is secondary or third to this. The primary issue is protect the public. But there is the other side. There's the shadow side. There's the side that is intentionally participating in illegal sales, illegal activities. And we want to encourage both to come forward, register, and contribute to the state of California as a productive, honest, taxpaying citizen. And I believe this opportunity of an amnesty will allow them that opportunity, that chance to do that. It has proven over the years to accomplish that objective. The one thing, Ms. Pilsticker, I believe the revenue estimates are relatively low, and would encourage us to take another look at that and incorporate, in the event that the bill is extended to 2017, incorporate the potential of legislation passing in 2016, which would encourage far more individuals to be engaged in the retail sale of cannabis. I would encourage you to take a look at that. With that, members, I move that we support the legislation. At the same time, give consideration to the issues at FTB. I know you are aware of those. FTB is committed that they are technical in nature. They are committed to resolve those issues and bring them forward during the legislative process.
So I do have a question for Mr. Gibson. So where in the process is your bill? Is this a 2-year bill? Or is this your first year, or is it a 2-year?
2-year bill.
2-year bill. So where is it in the process?
Right now, it's in Senate rules, right.
Okay, so it passed the Assembly, and you've made the amendments. It's in Assembly rules, and then it's presumably going to go to
committee, Senate side.
And then appropriations on the floor.
Absolutely.
Okay.
And back to the Assembly, I assume you're
Yes.
For concurrence, yeah.
For concurrence.
Ms. Harkey.
Thank you, Ms. Ma. One of my concerns with approving things early is that as they get amended, they may take a different turn, and it might not be something that I'm willing to support. So what is our ability to monitor this?
It's sitting right next to.
It's no sticker.
It's no sticker.
As you continue to sit next to.
Spoken to.
We will keep as.
Okay, my more concern, though, is that sometimes the BOE only addresses BOE issues, and there may be other things in the bills that I don't really want to have my name on. So depending on how they get amended, a lot of times things get thrown in that we didn't really realize. And the only thing that we have addressed in this bill is the BOE function. We did not address the drivers that I know are a problem, that dispensaries have drivers. I believe that there's an issue with who's supposed to be doing the driving. I know I attended a seminar, or not seminar, a workshop with where Barry Broad spoke, and definitely wanted them to be certified and drug tested, yada yada yada. And so I wonder where we're going with the legislation. So that's my only thing. It could be something's added. Could be something's added that to the betterment of the bill, or something that I find that might create a little more of a dangerous atmosphere. So how could we do this? Because I don't want Ms. Ma not to be actively involved.
Well, I think this year we're going to maybe try something different and see. I think it's very helpful for us to engage early and for us to be helpful in terms of giving you the correct cost allocation for appropriations earlier than later, in case you want to members want to narrow the bill or take into consideration other issues that may not have been addressed on the legislative side. So I really like us engaging early. Whether members want to support a bill individually, I think that is our prerogative. Mr. Horton may want to speak to that, or we can vote as a committee, and I think we will try to find consensus, if we can, to say, to kind of move forward as a BOE-sponsored bill. But I think last year we did take some positions and the bills changed, and then it became a little controversial because some members wanted their name off of it. And so that would be my proposal for this year, but I'm open. Mr. Horn.
Madam Chair, if I may make a recommendation and ask the author if he would accommodate members in the event that there is a change in the legislation that members have concerns about. Will you accommodate the members and notify the committee and make it a public notice that that particular member is withdrawing their individual support? In the event that support reduces it down to where you don't have the majority of the board members in support of it, we would also ask that you withdraw the support of the Board of Equalization as a whole in the fact that that does occur. The inherent danger of waiting till legislation is consummated basically means that you would have to wait until after the governor signs it because the legislation, as we all know, the legislation is subject to change in the last minutes of the process. But I think that courtesy of the board members will enable us to address our concerns. And so I think we all would encourage that if a letter is received from any member of this board, that letter be respected and addressed in a public manner so that everyone's aware of the position of that particular member.
Ms. Harkey?
Yeah, I appreciate that. The problem that I had, and I think I was not alone last year, is that, it's very difficult then to go to the author and say, you personally want to get off of his bill. That's kind of an insult. I would rather not support early on and kind of wait till it takes shape. Before the floor vote generally is the final bill, and maybe even in the committee if we see that everything's gelled appropriately. But I think that it puts us in the position of legislating, which I don't have staff to track all the legislation, and Ms. Peelsticker does where the board is concerned. And so this is my concern. And I did express this to Ms. Ma last year, and we kind of arrived at that if the board wanted to support independently through the process, that would be a good thing. If you want to just wait and see how it gelled, that rather than going in early and then, because we're just starting the season. I mean, this is it's January. So rather than going in early or February, we really should kind of hold off and see how this forms. And not any insult or saying we're not going to support, but I think individual members can go on, and then the board could vote as a group. So I just don't want to have to pull off once I'm on. I think that's in bad form.
Mr. Runner.
I'm kind of confused as to what's before us then. Generally the ones that I have difficulty with is when a bill comes before us and it's in concept, and then there's an idea that in concept let's move a bill. I have difficulty with that. I have less difficulty with language, and when specific language comes to us at that point. I guess I could go either way depending on how the board wants. This is a bill to which, with the current language, I could then support. I understand Member Harkey's concern in regards to what happens if the language changes, because I think this was actually a gut and amend and hasn't actually had gone to any policy committee, correct?
That's correct.
Yeah. So this has got a long ways to the process to still go through, but I'm okay with the language the way it is right now. And I think it is a bit of a challenge when we as a board then seek to vote to I don't know, I guess it's a language we're trying to do here, support or sponsor a bill. This is the chair's.
I think we're just issuing a support.
Is support? Okay. Is to support the bill. Again, I think the challenge that we have is if the bill changes dramatically, then you might lose individual members in that process. I guess I have a different issue. I don't mind going to an author saying, hey, take me off that bill now. So I'm okay with that, and I'm okay if that happens to go ahead and write a letter to each of the committees that it's going to saying, hey, I voted for this at one time, but it's changed. Here's why I don't support it anymore. I'm kind of okay with that, but I can appreciate other members may not be.
Yeah, so to the audience, I mean, we are not allowed to discuss issues with more than one member, and so the only way we can kind of resolve it is in this public context. So that's why if you're thinking, well, why didn't they work this out someplace else? Just come with, because we can't, and that's kind of the issue. But, it's good to hear members and how they're thinking, and also, of course, we're going to hear from Assemblymember Gibson as well, but I think we still have a couple of members here. Mr. Horton.
Thank you, Madam Chair. Members, it sounds as if though we're deliberating on whether or not we support any legislation whatsoever, and whether or not the board should just take individual positions. on legislation, which would mean that all the authors that are here today should pay close attention to the discussion, because you may only end up with individual support. I agree with Mr. Runner. I mean, I don't have a problem with withdrawing my name or telling anyone what I think at any given time. In fact, I'm prepared to tell them beforehand if I think it might happen. And I think it's inherent upon the Board of Equalization, as we have sought to over the last few years, and particularly most recently under the leadership of Member Ma, to position the Board of Equalization to be in the position of providing information, guidance, and understanding to the legislative process, as opposed to not being relevant to the process at all. And that it's important that they hear from us individually, and it's important when there is a majority vote, potential for a majority vote on the existing legislation, that they hear from us collectively. I believe it's part of our constitutional responsibility as a body to engage at that level with the legislature.
Ms. Harkey.
Okay, why don't we, just so that we can kind of get rolling on this, because there are some things that, you know, because generally speaking, I don't like to get on anything right now. But I am willing to make a motion that we, approve without additional amendments. And how could we word that such that any additional amendments to the bill would be brought to the board for review?
I think you could.
Even non-BOE issues, any language in the bill would be brought to us for review, and Ms. Ma could bring it up to the legislative.
One option would be to move to support the bill on the condition that if the bill changes, it's brought back to legislative committee to revisit the position that the board took.
I second that motion.
I'm okay with it. I just don't know how it practically works.
It doesn't.
I mean, the issue is, we've all been in the legislature, and that means that, and I'm concerned that all of a sudden an author will take an amendment in a committee, and then they could be 45 days away from us being able to then hear what that amendment was and decide if we still support it. Well, and if that happens in May, that's, so I just don't know how that actually would fundamentally work. So, but
Member Ma?
Well, I think, this is a long process, right?
Yeah.
This is a 9-month process. If members feel strongly that we should vote now to support the bill as is or in concept, I think we can do that.
Mm-hmm.
I think if members feel like we should wait another month, another 2 months, another 3 months, I think that is our option as well. And we can have Mr. Gibson come back if that is the will of the board. And I don't think we have to make a decision right now. But if members are interested in signing on now, early, of course, I think we have the liberty to do so. And members who do support a bill, as you know, we do go down and testify and, bring our trustee counsel to the extent that, we can help provide any sort of BOE numbers and revenue estimates, et cetera. So that is always an option as well. If members don't feel strongly at this moment to take a vote and support it, we can bring it back.
All right.
Mr. Horton.
Thank you, Madam Chair. To Mr. Runner's point, it sounds as if the motion made by Member Harkey actually defers to the chair of the legislative committee, which can be brought back at any given time, and we are basically, which I'm comfortable with, entrusting the legislative chair of the committee to disseminate the information to the other members, which is possible through our 3-day notice process. Members can make a decision within a 3-day period of time and then respond.
Not at a meeting, just as a 3-day.
Not at a meeting, then respond appropriately to Madam Chair, and Madam Chair, with the assistance of Ms. Pillsticker and her very capable staff, can move forward and make sure that we protect the member that has expressed a desire to be removed from the legislation. So it is practical, it is feasible, and it can work.
Brilliant.
So with that, Madam Chair, we sound as if though we've got the support. Member Harkey made a motion, I second. I call for the question. unless there's
Okay,
serious objection.
Mr. Gibson would like to,
We're not, just remember.
I know you're not.
Like to close?
Okay. To close or
Yeah, well, let me just simply say,
open this back up again?
let me say thank you very much to all the board members. I appreciate the robust conversation. And please know that we, in my office, will make sure to work very closely with Mrs. Pillsticker and this body on any amendments or changes to this bill. We will make the first phone call to you and make sure that the door of dialogue continues around this. We certainly would love to have the State Board of Equalization support on this bill moving forward. So again, I respectfully ask for an aye vote. Thank you.
Okay.
So we had a motion?
We had a motion and a second to
As is?
support this bill as is today. And if it does get amended, it will come back
To the legislative committee.
to the legislative committee for either a revote, review, or we can continue.
For review by all board members and action taken or not thereafter.
All right.
Okay, with the Controller's Office not participating in this vote. Okay, members, okay, we need a roll call or
She not
nodding?
participating. No objection.
No objection? Okay. So that will be the will of the board.
Thank you very much.
Okay. Thank you, Mr. Gibson. Okay, you have another bill?
Yes.
AB 821, sales and use taxes, payments, medical marijuana dispensaries.
Yes.
Ms. Pillsticker.
Yes, AB 821 requires, under existing law, we require taxpayers with monthly tax liabilities that average $10,000 or more to remit their sales and use tax payments by EFT. And failure to do so subjects taxpayers to a 10% penalty for their quarterly remittance and a 6% penalty for prepayments. Penalty relief is available when the person's failure to remit by EFT is due to reasonable cause and circumstances beyond his or her control, provided that the person files a relief request under penalty of perjury. So what this bill would do is, until January 1, 2022, allow a medical marijuana dispensary to remit amounts due by other than EFT. And the revenue impact would be no material penalty or interest revenue loss.
Okay, Mr. Gibson.
Thank you very much, Madam Chair and board members. Thank you for considering Assembly Bill 821, which seeks to support the California tax collection efforts by removing penalties associated with certain tax cash tax payments over $10,000 a month. Currently, all sales and use tax payments in the excess of $10,000 are required to pay through an electronic fund transfer. This requirement makes tax collection more convenient. However, businesses in the medical marijuana industry has been rendered unbankable due to the fact that the medical marijuana is still considered an illegal at the federal level. This has made it hard to comply with the law and lead most of the estimated 50,000 medical marijuana businesses to use cash when paying their taxes. Current law provides for a case-by-case waiver, but this process is still cumbersome. Whereas this bill seeks to provide a comprehensive solution by giving medical cannabis businesses an ongoing exemption. This bill will also save the state money. I would like to underscore, save the state money by reducing the administrative burden associated with the waiver process. In closing, I respectfully ask for your support in this very important piece of legislation.
Thank you very much. Ms. Harkey.
Well, here's where I started before, Mr. Gibson, and I know you're aware. I have a problem with accepting large cash. There are other methods of EFT, other methods besides electronic fund transfers, paying more frequently, money orders, or my office has been investigating the potential for kiosks and trying to keep the employees out of the cash handling business, as well as for public safety reasons, as more and more frequently. I think we're all setting this stuff up for the eventual legalization of recreational marijuana, and if that happens, we're going to have a lot more cash coming into our offices. And I don't feel comfortable with large cash. I think it just you're waiting for someone to, commit a crime, either external through somebody just showing up and holding everybody up, or perhaps even internally when cash is very difficult, and what if some cash is missing, and then you have to have supervisors verify and tally it up, which is one of the reasons that the BOE quit taking large amounts of cash, or had the policy not to. So I've requested an amendment that says that, basically, before January 1st, 2022, a person issued a seller's permit for a place of business as is dispensary as defined in subdivision N of section 19300.5 of the Business and Professionals Code may remit amounts due for retail sales at the dispensary by any means other than cash. So that would give options other than cash. And there are costs to cash. This bill didn't analyze it. This bill was analyzing the process for reporting. But we have been trying to figure out what, since the policy appears that it may change, what the costs actually would be. And we've got, we'd have to have, you have to have equipped with counting machines, ones that identify counterfeit monies, install extra security cameras over the receptors as well as is in the offices, request additional armed guards of California Highway Patrol officers, and other costs, more frequent armored car transports and liability insurance if we're starting to accept large amounts of cash. So there are costs that weren't considered because that's not what your bill was about. But I think that, as a board, we have to look at this and the security. I have my office in a BOE facility, my district office. And I would be very uncomfortable having, armored cars pulling up with cash on a regular basis. And if I'm uncomfortable sitting in my district office, I really wouldn't want to subject the BOE staff to something that I'm not comfortable with. So I've made I want to be sure that I've allowed for plenty of options, and I'm trying to do so. So I'd love to work with you on this. And I also want to ask Ms. Pillsticker, did anybody verify? I know that I've spent 30 years in banking and corporate finance, and I know that cash over $10,000 had to be reported at the federal level. You had to fill out the forms, and maybe Mr. Ferris could answer that. Is the BOE or is our buildings, our district offices required to complete forms to the federal government on large cash?
Randy Ferris, Chief Counsel. Member Harkey, my understanding is that governmental entities like the State Board of Equalization are not subject to those reporting requirements in federal law.
Okay, thank you. I'd asked that question earlier in the process, and I never got a response back, so I wanted to be sure I was clear on that. Okay, so I do have an amendment. I would love for you to accept it. I could understand if you don't, but anyway, that's my comment. Thank you.
So, thank you, Mr. Gibson. And I agree with Ms. Harkey that there are a lot of issues that we are all looking at, I think, in our offices. We prepare for more payments. Hopefully, the federal government and Congress will act on this and create a little flexibility for this industry that's licensed to be able to access the banking system. But right now, it's a Schedule I drug. Legally, they have some guidelines from FinCEN as well as the Cole memo where banks can bank, but it requires an increased or a very high due diligence in knowing who your customer is, in jumping through hoops. And so a lot of the banks don't want to expend the extra resources to do this extra due diligence, and so therefore they're just saying, we don't want to have to file the forms, we don't really want to go through this risk. So I think in the interim, banks are forced to sit on the sidelines. The dispensaries that want to pay their taxes want to comply, the ones that want to comply, but there's just no options for them. And so to have to penalize an industry for being forced to deal in cash, for me, is very unfair, and it is onerous. So I strongly support your bill.
Thank you.
You know, I think that we want cannabis industries, the cannabis industry to comply and to come forward, but to assess that extra 10% penalty for doing so is going to be perhaps burdensome. It may create folks not to pay. So I do think this bill is very, very important. And I understand Ms. Harkey's concerns, and I'm hoping that as we move forward with this track and trace system, that we will use or have the industry use technology, software that would be able to potentially download the sales taxes to the BOE daily, weekly, monthly, eventually, right? But again, it's going to still require a bank and the banking system, access to the banking system before we can do that. But I'm hoping that in the future, we don't have to collect all this big cash. We don't have to have kiosks. We don't have to, employ all that. But who knows how long that's going to take. So in the interim, not penalizing these folks who have no other option, I think should, is a good bill. And so I'm going to strongly support it, regardless of whether the board votes to support it. Mr. Renner.
Yeah, I don't know what the other options are. I mean, we've been exploring this issue for a number of months now. And I don't know what the other options are. Maybe if you've got some listed here? And what are they? Have you identified some other options for cash that I haven't?
Yes, I have. There are more frequent payments, I suggested. Money orders have been used by the industry for a long time, long before we got into this discussion. And the kiosk is an option. There are options, and we're continuing to explore the potential of a kiosk that would not require hands on the cash in the facilities. And it would be a cost, but I think it's a cost of doing business. It not only helps the BOE with point of sale kind of system where we would know and we would be able to track even on a daily basis, and what taxes were due, and the people walk in, they put their money in the kiosk in the store, and then they come over and they get their product delivered. So it helps that store as well from any potential for theft or money handling. On the BOE side, we could potentially do a kiosk system too, either on-site or off-site, that would prohibit, that would keep hands off the monies. That could be guarded. There's still some issues with it, but I think we've got a banking committee that we're setting up to try to resolve some of these issues. And I would seriously suggest that before we just start allowing large wads of cash into our offices on a regular basis, that we consider getting this banking committee in place so that we can help move this process along. Because I think there will be other options. There's multiple companies out there now trying to figure this out, and they have. And I've talked to the thing about the banking is that they can actually set up a kiosk for a small bank. It wouldn't be a B of A or Wells Fargo that does electronic screening. It would have to be somebody that knows the customer, that knows unusual activity, can flag it, and that's what we would want too. We don't want money laundering. So you want unusual activity to be flagged if the sales are extremely high at one time or another. So what I'm suggesting is that, I can't support this as is. I suggested an amendment that might kind of bridge the gap, but what I'm suggesting is that there are other avenues, and they've been used for a long time. So I want to continue. Okay,
my question was what you had. My understanding is money orders have the same problem with $10,000. In terms of reporting, so I
But
$3,000 is the threshold for.
Okay, but whatever. Yeah, so that means it's still a banking. It's still this basic same banking problem.
I've got a customer in San Diego that does $2 million in sales that pays by money order.
Well, again, maybe, but the problem is he may not be doing it legally.
You're still doing a maybe.
You're
not doing it legally now.
To me, the issue is I think there are going to be solutions in the future. The problem is right now. And I think that's my concern. And so I'm going to support the bill because I do believe we've got to come up with ways to deal with cash. But at the same time, I just don't think it's fair to anybody in business to then say, hey, look, we're glad you're paying your tax, but because you're in an industry that does not allow you to have a bank account or to pay it another way, guess what? We're going to go ahead and penalize you. I just don't think that is a fair system because there's no way for them to prevent themselves from the penalty. Sure. So I'm going to support the bill. I'm going to work really hard, though, to find those solutions. I know there's discussions about kiosks and whatnot. So far, I've not been convinced that a kiosk is ready to be placed. I've talked to bankers from lots of different states. There's banks that say they want to do it, and then all of a sudden they change their mind, they can't do it. So right now, I think we have a very specific problem, and that is we collect money, we tell them, we have them only pay cash because that's the only way they can pay cash right now, and then we say, oops, by the way, now you got to pay 10% more. I just don't think that's a fair way to honor a business.
Mr. Horton.
Thank you, Madam Chair. You know, as the sponsor of the bill, I've deliberated over this time and time again, and actively involved in the underground economy for the last, or forbidding and fighting the underground economy for the last 37 years. It's been an issue of my concern, and I'm not overly excited about the criminal activities that will occur from the illegal sales of marijuana. And so therein is the issue. The challenge is violating or not being consistent with the Federal Coinage Act, which basically says that U.S. currency has to be accepted or should be accepted in the rendering and payment of a debt. The second issue that we have here is that it is what it is. They're currently making payments. If it's under $9,000, it's no more of an incentive for a criminal act than it is if it was over $9,000 or $9,999. The criminal incentives still exist. I recently had my home burglarized, and quite frankly, they walked away with $13,000. So the incentives for the criminals that are out there to do the things that they do, go figure. The other inherent challenges are articulated by Member Harkey is of concern, but it's also in the purview of this body to figure that out. I don't believe that we need legislative authority to do so, and to the extent that we do, we would ask that the member so state in this legislation that defer to the Board of Equalization to establish the regulatory oversight necessary to implement this bill. That gives us additional purview. We've also looked at, as Mr. Runner shared, the Money Laundering Act. It's really not a threshold. The law basically says that if you know that there is a criminal act, the money is associated with a criminal act. The threshold is established primarily as a check and balance, kind of like a safe harbor. If it's $3,000, then of course you have to report it. Violation of the law is violation of the law, whether it's 50 cents or not. So looking at the alternatives that are out there is within our jurisdiction. If not, maybe we can look for legislation to accomplish that. For example, one of the solutions that we sort of considered with the armored truck was to see if the armored truck could be, the armored company can be an intake center for the Board of Equalization, and then provide us some sort of document that said that they've taken in and transferred to the bank on our behalf X amount of dollars. There's a gift of funds that's associated with that we may need legislation in order to address. But I share that only to say that I do believe that the wisdom of this body can figure that out. I do believe that we have the authority. Current law, federal law, I do believe federal law says that we should accept this cash irregardless of our feelings and so forth, not deny. Primary members is that the illegal activity associated with impeding a taxpayer from paying their tax liability is inherently challenging to this organization. And part of the reason that we have hundreds of millions of dollars that's going uncollected. There's enough money out there being uncollected that this bill will enable us to now make their payments that will provide the funding necessary in order to address the issues articulated by my colleagues. I too support the bill and would make a motion to support the bill.
Second. Excuse me, Ms. Ma, I think we do have another speaker for this item.
Yes, I see that. But Ms. Dowers, you want to make a comment?
No, we support the bill as well. The way I read the bill is really addressing taxpayers who have to file or pay electronically, and in this particular industry, they cannot file or pay electronically because they can't get a bank account.
Right.
So with that being said, we think it's a good bill. It does have a date that it will end January 2022. So hopefully by then, this industry will be banked.
Or you can say it would end sooner, right?
Yeah.
If it's banked.
Right.
Anyway, we do have a speaker here today, Kimberly Garlisle, a director at a therapeutic alternative here in Sacramento.
Good morning, board. My name is Kimberly Cargile. I'm the director of a therapeutic alternative. I also sit on the board for the Sacramento chapter of Americans for Safe Access, a patient advocacy group, and the Sacramento chapter of the National Organization for the Reform of Marijuana Laws, the Legislative Advisory Committee for the California Cannabis Industry Association, and the Board of California Growers Association. As an industry, we ask for support of this bill. We, as the new laws MMRSA have just passed, we are bringing our industry, out of the shadows into the light. That's going to bring a great deal of tax revenue to the state of California. And this 10% tax penalty is impeding that progress. I just wanted to respectfully address the concerns you had and the ideas of different ways that we could pay our taxes. One is the idea of money orders. I don't know if you've ever been to a money store where you get money orders, but that is one of the scariest places I ever go in my day. And taking $10,000 in there is really setting me up to be robbed, because the people in those money stores are often criminals, whereas the Board of Equalization, you rarely see criminals there. Those are good, hardworking people paying their taxes. I feel much more comfortable carrying $10,000 there than I do into a money store. The kiosk is a great idea. However, those companies know that we are unbankable, and they are charging thousands of dollars a month for us to work with them. It's really unreasonable right now. And so we are working really hard as an industry to move forward in the progress with banking. We support any options of banking and any reasonable options, such as the armed guard service, picking up the money from the dispensaries and taking it in, but the options that have been presented so far are hard to work with. So we feel that the state of California will receive much more tax dollars if we have an easy way to pay our taxes as we do now. Thank you.
Okay, any more comments, or Mr. Gibbs, Ms. Harkey?
I would just like to say I understand the difficulties. I truly do, but one of the advantages of kiosks, and may just be a cost of doing business, is the keeping of books and records, which we also have a problem with for audit purposes. So in essence, what we do is we ask you to tell us what you think you owe us and pay it. And I don't think we do that for other businesses. So I'm trying to get this on a fair level for all companies. And the kiosks are an option. I know they're costly, but I do think that maybe there might be some kind of way to cooperate on those. I do think that perhaps we could require those requesting the armored car to actually pay for that, so the BOE doesn't have to absorb that service. There are a lot of things that we could do, because this is going to cost us. And so I think we need to understand that this is not going to be free for the Board of Equalization, and to have other taxpayers absorb the cost of the industry is not usually what we do. So with that, thank you very much.
Thank you. Okay, Mr. Gibson, would you like to close?
I was just, again, thank you very much for the opportunity to present Assembly Bill 821, and respectfully ask for your aye vote. Thank you.
Okay, thank you. Members, we have a motion by Mr. Horton, a second by Ms. Stowers. Members, how would we like to vote?
I object, so.
Okay, so we're gonna, Ms. Stowers? Yes or no?
Yes.
Yes. Mr. Horton? To support the bill?
Yes.
Aye.
Aye, and then Ms. Harkey is a no, and Ms. Maz, yes. So 4-1.
Thank you very much.
Thank you.
So does that mean you go on individually, Ms. Ma?
No, I think it's going to be a BOE supported, sponsored bill. Supported bill?
Supported.
Supported bill. Okay, we are going to take the next bill, AB 1561, with members Christina Garcia, and I also see member Ling Ling Chang here. Sales and use tax exemption for sanitary napkins and tampons.
Good morning. Maybe
Good morning.
Hey, and tampons and sanitary pads. Thank you for allowing us today. AB 1561 would exempt menstrual products like tampons and sanitary napkins from sales and use tax. Before you is an opportunity to end an outdated tax that targets women for a function of their bodies. The fact that the economic effect of this tax is felt by only women is especially unjust when women still make less than men. We call tampons and pads feminine hygiene products. It makes us forget that these are actually necessary health items that women use on a monthly basis. It's women who are poor or homeless that have a harder time accessing tampons and pads when they need them. There are about 4.6 million women living in poverty in California. Many of them are of color. When you're trying to figure out how to make ends meet on less than $5 a day, sorry, I apologize. Every penny counts. If we can't make these products free, then we at least have to make them more affordable. I've been hearing stories about girls buying tampons one at a time at gas stations, making them much more expensive. Or girls having to miss school because they can't afford to buy the tampons that week. Our bill's about social justice. It's about eliminating a gender inequity in our tax code. Our taxes should not target half of our population just for being women over a function of our bodies we cannot control, much less ignore every month. I understand that there are concerns about any bill that would narrow the base of our sales tax and use tax. There is no doubt that our code needs to be reformed. But that is not the question before us. The question before us right now that we need to consider is whether California should continue to tax women on essential health items that is unique to them. In fact, I have not found a single example for a similar tax on men. As society progresses, our laws should too. Our tax code needs to reflect the fact that we don't live in a time where we tax women just for being born women. I respectfully ask for an aye vote. With me to testify today is my joint author, Assemblymember Ling Ling Chang.
Ms. Chang, welcome.
Thank you. Members of the board, thank you for the opportunity to speak to AB 1561 today. The tax on feminine hygiene products is an unjust tax. As Assemblymember Garcia has illustrated, these products are inescapable health products. By taxing these products, we're putting up a necessary barrier to a necessary health product. The absence of this kind of protection can lead to serious health issues, so this is about women's health. This bill is about tax relief for women. Collectively, we pay $20 million in taxes on feminine hygiene products. By putting that money back in the hands of women, we're creating greater access to very important health products, especially in low-income and homeless populations. That $20 million paid in taxes is only 0.01% of the annual budget. I am hopeful that we can afford to provide that to women in tax relief. Finally, this is about fairness. Government is taxing women for something completely out of their control. Feminine hygiene is not a choice and should not be taxed. There are health products we as a state choose to exempt, but the one health necessity exclusive only to women is still taxed. And as you can see, this is not a partisan issue. This bill has earned co-authorship from conservative Republicans and progressive Democrats. That's because we all care about the well-being of women and girls. They are our mothers, sisters, daughters, wives, and they're half the population. This proposal is important for all women across California, and it may not be intentional, but this is a targeted tax on half of the population, And on principle, this form of regulatory discrimination should end. And on pure economic grounds, this bill deserves our support. Thank you.
Thank you, members.
Move to support.
Second.
Any discussion, members? Ms. Dowers.
Sorry. BOE has indicated that the revenue loss is about 20 million, and that's just based on what women spend on the products. This bill, as written, will also allow care providers and hospitals to benefit as well. And because of that, I see that the revenue loss will increase. As such, the controller would not be participating on this item.
Okay, Mr. Horton.
Comment. First, I want to thank the authors for bringing the bill forward. I think it's an important discussion for the legislature to have, in that this is one of those issues that I think is very, very significant, and I plan to be supportive of the bill to allow, because I believe the legislature should have the opportunity to deliberate over these issues. I see it as a woman's issue, but at the same time, I see it more as a health issue, because there are non-medicine that men are required to take, but yet still they're subject to tax as well when they have certain health conditions. In the case of prostate and things of that nature, when they decide not to take medicine and they want to go an alternative route, there are alternative medicines that are basically unique to them, of which I think should be exempt as well. Any medical treatment of the human body should have a level of exemption and concern. My concern, which as I've had a chance to speak to the author about this, is that as it is currently written, the more affluent women in our society, Christine Walters, who makes $41 billion, will receive a tax exemption. Ms. Powell, the wife of Steve Jobs, who earns $19 billion, will receive a tax exemption. And quite frankly, I don't know that the state has enough revenue, and if they are going to use their revenue, it ought to be focused on those who need it the most, the poor people in our society, the working poor in our society. To the extent that we can recraft legislation to look at that, I would certainly encourage the authors to take that under consideration. But I am supportive because I think that is a deliberation that should take place in the legislative process. So I am supportive of the legislation and would join my colleagues who are also in support of the bill.
Yeah, so I think we had a similar discussion about diapers last time, in that those who can least afford it have to pay more proportionally to what they earn, and whether there was a way to carve it out so that those maybe who are on Medi-Cal or lower income, would be allowed the exemption, but not those that could afford it. So that's, we had a robust discussion on that last time, and I think Mrs. Gonzalez's bill is in appropriations. And so I'm also supporting the bill personally. I think it is not a luxury item, but actually a necessity for women. We're half the population, and it's just something that we can't help or choose every month. And so I'm very strongly supporting it. And if members don't have any other comments, perhaps you would like to close.
Madam Chair, if I may.
I'm sorry.
I would offer to the authors that a consideration of establishing a state income tax exemption that has a particular threshold that meets the population that you want to meet and address. I think that will accomplish the objective, or accomplish the thought process of not providing those who can afford to pay the tax, because sales tax, as we all know, is a very regressive tax. And so when we begin to adjust sales tax one way or the other, ultimately it hits the poor, and the poor ends up paying and carrying the burden of any tax credit because it's an aggressive tax inherently. So that's just my offer, that a thought process as you go through the legislative process.
And thank you. So in closing, a couple of comments. I think this is a discussion that will continue, and how do we get these products into the hands of low-income individuals? A waiver from the federal government so you can use your EBT card is one way to do it. So action from Congress would be necessary. And we're pushing that discussion. As a Latina, half of Latinas live in poverty right now, so we would be helping half. And while it would be a tax break for some of our wealthier females out there, I think the good that we're doing as a whole is easier when we're trying to manage out. And I think a tax exemption is definitely something we should explore as this issue continues to evolve, and additional ideas of working this. We have homeless women who are not doing taxes, and this tax exemption would not necessarily help them out either. But they are definitely buying this product every month. And so I think that discussion needs to continue. It's robust, and I think through this, many more ideas of how do we really get it to even our low-income schools is important. So co-author and I are very committed to that long-term discussion as we move forward, and thankful for the board's consideration today to allow this discussion to move forward in the legislature.
Okay, thank you. So we have a motion by Senator Runner, a second by Ms. Harkey. The controller is not participating, so that would be a 4-0 vote. And I would like to say, Ms. Pielstiger, since sometimes the votes may not reflect what's happening, whether it's a no vote or whether it's a non-participatory vote, perhaps when we issue the letter, we specify whether it's, 4-0, controller does not participate, or, 4-1. If you want members to say who did not participate, I think that is also Ms. Harkey with a no on the last vote. I think that's would send a message to the legislature in terms of like what really happened here, accurately happened.
Yes, we can do that.
Okay. Okay, good. Thank you.
Thank you.
Thank you. Okay, and our final bill, AB 1559, Tax Relief Disasters by Assemblymember Dodd and Mr. Les Spahn. His legislative director is here to present on his behalf.
Move to support the bill.
Second.
Okay.
This is getting more like the legislature.
Getting there.
Right. Under existing law, taxpayers are required to file sales and use tax returns on or before the last day of the month following the end of the reporting period. Persons who are late paying a tax fee or surcharge must pay a 10% penalty plus interest on the unpaid tax from the due date to the date of payment. However, they are granted an extension in the case of disaster for up to 30 days. Under this law, it would authorize the BOE in the case of a disaster to extend for up to 3 months the time for a tax or fee payer to file a tax return or to pay the tax. Interest relief is still a separate request, but this would remove the automatic imposition of a penalty.
Okay.
There's minor revenue loss related to foregone penalties for late returns and payments beyond the existing 1-month extension.
Okay. Thank you. Mr. Spahn.
Right. Very quickly, Mr. Chairman and members, I'm Les Spahn. I am Assemblymember Dodd's legislative director, and I'm here on behalf of Mr. Dodd to ask that the board consider supporting and sponsoring AB 1559 pertaining to disaster tax relief. First, Assemblymember Dodd sends his apologies for not being here himself. It's my fault. I didn't get it on his schedule soon enough, and he had a conflict, so I apologize. Assemblymember Dodd represents Assembly District 4, which includes part or all of 6 counties, including Lake County. You may be aware Lake County suffered 3 large wildfires, the largest and most destructive of which was the Valley Fire that destroyed nearly 2,000 structures and a number of commercial businesses, burned 78,000 acres of land. And interestingly enough, being a rural county where ranching is a very important economic activity, destroyed about 3/4 of the ranchers' rangeland and outstructures. About the same time as the Valley Fire, the Butte Fire erupted in Calaveras County, burning another 70,000 acres, destroying over 800 structures. And you may have noticed in the Sacramento Bee this morning, there was an article estimating that the insurance losses approached $1 billion. And as we know, insurance doesn't cover all the losses, and many of the residents and business owners and property owners were uninsured as well. So these disasters spurred Assemblymember Dodd to introduce AB 1559. We've spoken with Board Member Ma about the bill. Property owners, business owners, residents, it takes quite a bit of time for them to recover from disasters of this sort. They have to recover from structural damage, the loss of equipment and inventory, reduced distribution of supplies and goods, loss of business, loss of revenue. So AB 1559, as Ms. Peel's sticker mentioned, builds upon an existing board authority to grant a deferral of taxes and fees owed. Currently, you can do a 30-day deferral. This would grant a 90-day or 3-month deferral for each filing period, per filing period. We think this would provide meaningful tax and fee relief and go beyond simply tinkering on the taxpayer, fee payers' financial margins. We would welcome your support and consider sponsorship. Thank you.
Thank you, Mr. Spahn. Can you just also define who can ask for the deferment? It has to be as part of a declared disaster area, right?
Actually, it's a BOE declared disaster, and we have some specified conditions under which we would grant relief under that provision. It doesn't necessarily have to be a governor-declared disaster.
So how is that different, and how would taxpayers know that? Would we issue releases to folks, even if it's different, like Lake County? It was a state-declared
yes.
And a federal declared disaster area, but you're saying that it may not be the same definition.
Right. I'm aware that the BOE engages in fairly significant outreach when there's a disaster to let folks know of their rights under the laws that we administer. I would imagine that if it's not a governor-declared disaster or disaster that we're aware of, it might be a conversation that's had between a late-filing taxpayer who says, hey, my house burned down, I couldn't file on time, can you grant me some relief here? And then the BOE would look under the specified conditions and decide whether to grant relief.
Okay. So also on an individual basis. Ms. Stars?
I'm glad you clarified that, because when I looked at it, I was looking for the bill to say federally declared or governor-declared disaster. And it does not, but you go back to the original statute, it does not have that in it either. I think there's a need to have additional time. 1 month is clearly not enough. Mm-hmm. When, on the income tax side, it was the counties that we're talking about, Lake County, federal and governor, they actually received 1 year to file their income tax returns. And it's written in the statute that when there is a federal or governor declared disaster, there can be a postponement of filing tax filings, not just the income tax return, but even an estimated tax payment that may be due, and they will give them up to a year. I like the bill, but I actually think we may need 2 statutes. We may need a statute amending 6459 that provides for 3 months, as you suggested, but another statute that stands alone that deals with declared disasters and provide the BOE with a little bit more discretion on how much time the business may need to get back on their feet.
Okay. Mr. Horton.
Thank you, Madam Chair. In these situations where there's a state or federal disaster, or there's a trauma onto a household or family, oftentimes, if it's a fire, records are destroyed. It's very complicated in trying to pull it back together. It's important that the conditions are established to make sure that we are also protective of the state, make sure that we don't have situations where it's obvious that there's no impediment to filing your tax returns. On a secondary issue, when there is a problem and there is a challenge to California taxpayers due to a disaster, they should also be relieved of the interest, and because it's the same process. So from a process perspective at the Board of Equalization, it would relieve us of having to go through a separate evaluation on the interest, because if the penalty is relieved because of some extenuating circumstances, those same extenuating circumstances might very well have the same legal bearing as it relates to interest. And I'd ask that you consider that, possibly consult with our chief counsel on taking a look at that.
Absolutely.
Okay. Mr. Runner?
No,
Okay, Ms. Harkey?
there's a motion, Riz.
No? Okay. Okay, so the motion was made by Mr. Horton, Chairman Horton, and the second by Mr. Runner. And Ms. Stowers, are you an aye or no?
I'm an aye.
Okay, so.
No objection.
No objection, unanimous.
Thank you very much.
Support the bill. And I think that concludes our legislative committee. No, we have more?
We have board-sponsored proposals.
Okay. That's right. Sorry. Ms. Pielseger, do you want to move over to the middle?
Yes.
Thank you.
Okay. Are you ready?
We're ready, sorry.
Okay, yeah. The first proposal is a technical proposal that would extend the deadline for local governments to file appeals with the BOE related to taxable government-owned property or Section 11 appeals from July 20th to November 30th. Existing law exempts local government-owned property from property tax except when the property is located outside the local government's jurisdiction and was taxable when acquired. Appeals related to this property are known as Section 11 appeals. Current law provides that July 20th is the deadline to file Section 11 appeals, except when the assessor completes the assessment roll after July 1. In that case, the assessor is provided 2 additional weeks to complete and deliver the roll to the auditor. Section 11 properties differ from the deadline for other locally assessed property appeals, which generally is November 30th. So that is why this proposal proposes that the deadline be November 30th for Section 11 appeals to eliminate any confusion that may arise at the difference between the deadline for locally assessed property and Section 11 appeals.
Move the board sponsor Section 11 appeals.
Okay, do we have an author yet for these, or?
We do not have an author yet. I'm going to propose this as a committee bill.
Okay. Members, any?
Second.
Second, okay. Okay, Ms. Stowers made the motion, and Ms. Harkey seconded, and unanimous support.
Okay.
Next item.
The next item would reinstate various sections of the sales and use tax law and special tax and fee laws to continue to allow the BOE under specified circumstances to prorate the interest on a tax or fee electronic payment that is no more than 1 day late. Existing law until January 1, 2016 allowed the BOE to prorate the interest due on a late tax or fee electronic payment that is no more than 1 day late if the BOE members meeting as a public body find that it would be inequitable to impose interest for the entire month. This relief is available if the person was granted relief from all penalties applied to the payment and also filed a request for an oral hearing before the BOE members. When these provisions expired, taxpayers now will be charged a full month's interest even when their payment is only a day late. So this proposal would seek to reinstate those provisions. The estimated annual state and local revenue loss for this is $78,000.
Move support.
Second.
Oh, sponsorship. We're actually sponsoring these bills, right?
Yes.
Move sponsorship.
Yes, okay, so Member Runner moved, Member Horton seconded, and unanimous support. Next item.
Okay, the next item would allow a taxpayer making installment payments on an outstanding tax liability to file a claim for refund to cover the entire period. This proposal comes to us from the Sales and Use Tax Department. Under existing law, taxpayers may not receive a refund for an overpayment of tax if the taxpayer does not file a claim for refund within the specified statute of limitations. Taxpayers challenging an audit determination must file a formal protest within 30 days of the determination. And if they fail to do so, generally, they have to pay the tax and file a claim for refund. An exception is provided if the BOE exercises its discretion to accept a late petition as an administrative protest. If accepted as an administrative protest, the taxpayer is required to make installment payments while the appeals process is pending. A taxpayer must file a timely claim for a refund for each individual installment payment made toward an outstanding tax liability. And taxpayers who've entered into an installment payment plan often mistakenly believe that they need only file one claim for refund at the conclusion of the payment plan, rather than filing claims for refund for each payment within 6 months after the date the payments was required. Other taxpayers making multiple payments believe that upon paying the amount due and receiving notice of their appeal rights, each payment will be refunded, regardless of whether they filed claims for each individual payment. And once the statute of limitations has expired, the BOE cannot refund the overpayments regardless of either a cancellation or reduction of the originally determined amount. So this would allow a taxpayer making installment payments to file a single claim for refund before the outstanding liability is paid in full, and the single claim for refund would toll the statute of limitations as of the timely filing of a refund claim on the first installment.
I move to support this. I love this bill.
Okay, do I have a second, members?
Quick question, Madam Chair.
Okay, Mr. Horton.
Thank you, Madam Chair. Tell me, how does the Regulation Section 6902 with the current claim for refund process fit into all of this?
Well, the current claim for refund process would...
Well, I mean, specifically 6902. I mean, the process is a little more in-depth than that.
I don't have 6902 before me, but I can tell you that there are various statute of limitations set forth, and that with regard to installment payments, these are folks that have to make a claim for refund within 6 months of their overpayment of tax. So how this would work is that the taxpayer would file a late petition. They're required to enter into an installment payment agreement, and payments made before they actually entered into the formal agreement, as well as payments made subsequent to the formal agreement, would be covered by this protective claim for refund.
Okay. 6902 currently provides them 6 months. And so once they made their payments, they have 6 months to, and so this would extend it indefinitely.
It would not extend it indefinitely. It would simply say that, and this is only for late petitions. So once the petition is resolved and the board decides in the taxpayer's favor, then they could recover the entire amount that the board decided they were entitled to. If, however, they didn't have this in place, and this has happened before, where a taxpayer will make several installment payments, they don't make the claim until the end. Those first few payments they made, which are now past the 6 months, they don't get that money back even if the board decides in their favor, and that's what we're trying to specifically address here.
Okay. I mean, I'm supportive of the bill. I think it's a good concept. I would encourage staff to take a look at 6902, wherein once the board has made a decision, the claim for refund is tolled for 6 months, I understand, I believe, as it is. But any additional effort that we put forth, but I'd hate to have a situation where 6902 comes up in the legislative process and we're not responsive to it. So I would just encourage us to kind of consider that, take another look at that section of the law as we go through the process, so that we're in position to respond to it. So I'm supportive, Madam Chair.
I think this is just one of those issues where it's, it's very confusing to the average person. They don't know that they have to file each time. If you're a professional, you know the law. And I think this just kind of simplifies a little bit for the individuals or businesses that aren't in the business of tax. And then that they can, actually, if they get a favorable judgment, they can get a full refund of the taxes due. So,
and I would add that the Franchise Tax Board has similar authority with regard to protective claims for a refund.
Yeah, just kind of streamlines it.
Okay.
Thank you.
Okay, seeing no further comments, the motion was made by Ms. Harkey, seconded by Mr. Runner, unanimous support by the board. And our last item.
And I would invite Mr. Randy Silva from our Investigations Division to join me at the dais. Thank you. So suggestion 2.3 would specify that any person who possesses, sells, offers to sell, buys, or offers to buy any unaffixed cigarette tax stamps is guilty of a misdemeanor subject to applicable criminal penalties. It also authorizes the Board of Equalization to seize and destroy used cigarette tax stamps aggregated for reuse. Under existing law, any person who possesses, sells, or purchases any false or fraudulent cigarette tax stamps is guilty of a misdemeanor punishable by a fine or imprisonment of up to 1 year in a county jail, or both by fine and imprisonment. Existing law authorizes a BOE employee to inspect any place for which there's evidence of a taxpayer's failure to comply, and authorizes seizure, forfeiture, and destruction of the cigarettes when the stamp is affixed or the tax is paid in a manner that violates the law. Existing law does not provide for the seizure and destruction of used cigarette tax stamps aggregated for reuse purposes, and it does not provide criminal sanctions or penalties related to a person's possession, sale, or purchase of used cigarette stamps. So the proposed law would make it a misdemeanor for any person to possess, sell, or purchase any unaffixed cigarette tax stamps. I explained the applicable crime. It specifies that unaffixed stamps do not include any unused and unapplied rolls of stamps or loose stamps in the possession of a licensed distributor. So we're really just trying to go after folks that collect stamps, as you can see in that photo right there. This is something that Investigations came upon at a retailer. There's no reason to have those cigarette packages saved like that with the stamps on them, except to repurpose them on counterfeit cigarettes. But currently, we don't have the authority to seize that bucket of stamps.
Okay,
And-
Mr. Silva.
Good morning.
Good morning.
Good morning, Chairman. Good morning, members. As Michelle pointed out, basically we're starting to see a lot more of this. It started out in retail, just sort of your lunch-type bag with stuffing a few cellophane wrappers in there with the stamps, to where we're seeing aggregators that have as many as in the tens of thousands of these stamps. So we're recommending that the board support this bill to allow us to seize them when we're in retail, as well as educate that it's a violation to aggregate them, and as we currently do, pursue them criminally when it's significant tax evasion.
So one of my questions, I think, during the briefing was, how do people know, retailers, do they have the ability to check all of the stamps that come in to make sure that it's not counterfeit versus, maybe repurposed? Like, how do retailers know that they're getting the real thing?
Generally, if they're buying from a legitimate licensed distributor, they're in pretty good shape, but they have an option. This is a UV indicator that when passed over the stamp, it'll highlight some of the chemicals in it. They'll see a different reaction. This is available to retailers for purchase from the board's current stamp contractor.
How much is that?
I believe it lists for $5, and out the door ends up costing around $20.
And it's reusable or just
This is
after?
reusable. They can continue to use it by passing it over the packs and the stamp specifically.
That detects whether a stamp is counterfeit or not. It doesn't detect whether a stamp has been reused. That being said, that's why this proposal only deals with unaffixed stamps. So if a used stamp is applied, we would, on our inspection, be able to identify the brand. And if the brand doesn't match, then when we go back to the licensed distributor and talk to them about why that might be. And there might be some legitimate reasons for why that might be, and maybe not so legitimate reasons.
That's correct.
So this is more for the people who are doing it in mass, not necessarily the small retailer who bought cigarettes thinking that they were real and selling it, and maybe not knowing there's a device, but now knowing a device wouldn't be subject to the misdemeanor penalty.
Correct.
right? Okay.
Generally, what we look at is the invoices they have, and if the invoices support the cigarettes that they purchased that are the ones that are affixed with a repurposed stamp, then we're looking at the wholesaler or the distributor that sold those cigarettes.
And is there a recourse if they are selling?
It's when you apply a reused stamp, it's basically a counterfeit stamp.
Okay.
When it's actually affixed to a pack of cigarettes.
But when it's in that form, we don't have any
There's no crime.
jurisdiction, or
There's no
it's not in the
authority.
code?
There's no authority to seize it.
Okay. Mr. Horton?
Thank you, Madam Chair. This is a serious issue. The whole secondary market is an issue where it comes down to aspirin that have been taken off the shelf for whatever reason and being resold as the original product. So this is an issue not only with cigarettes, but an issue with all the other products out there that the criminals are counterfeiting and putting forth as quality product that's causing health issues for the people of the state of California, financial issues for the state of California, and perpetuating crime from my perspective. And it's generating a lot of money for the criminals to do this. So there's an incentive, the financial incentive. I'm supportive, but my concern, members, is that I don't believe the penalty necessarily fits the crime. You have a situation where an individual is arrested as a misdemeanor, pays a $1,000 fine, out in 3 months, and the thousands of dollars they have, the cash that they have, they get it back, even though we've done legislation to try to address that as well. But I'm very realistic when it comes to the legislature. This is probably the best you're going to get out of the current legislature.
You think the penalty should be greater? I do. Mm-hmm.
But, I don't think we're going to get it.
Yeah.
So I'm
That's right.
optimistic.
Yeah.
I mean, I don't think we're going to get it, not because the legislature is not prepared to apply a penalty to these individuals. Quite frankly, I don't think the legislature and the general public is fully aware of the significance of these criminal activities. Mm-hmm. This has been going on for years, and it's always a challenge. It's kind of indicative of a saying that someone once said, the greatest trick the devil ever played was convincing the public that he didn't exist. In many cases, people really don't believe that this exists. I remember Ma or myself over the years, we're in the legislature talking about the underground economy, the mafia, the Russian mafia, the Spanish mafia, and they're looking at us like we're crazy. And yet still not acknowledging that upward $9 billion, California's losing upward $9 billion. This is funding illegal activities, human trafficking, and a number of different issues. But hopefully we'll get there sooner or later. And the aggressive action of the Board of Equalization to prosecute, arrest, and so forth, we can confiscate the taxes, identify a level of taxation that we can kind of put some burden on these individuals.
Ms. Harkey?
I really support this, and I appreciate your efforts. It's just amazing to me, some of the little idiosyncrasies of the law where you can see that, but you can't touch it. And I think it's pretty apparent that the purpose is not just to collect them for wallpaper. It's a serious crime going on to repurpose. So I appreciate, and the more that we can actually protect the law-abiding citizens, the better for all of us. Thank you.
Mr. Renner?
Move to sponsor if we had a motion.
Okay.
Yes.
Second.
Okay. Okay, so Mr. Renner made a motion to sponsor, second by Ms. Stowers, unanimous support by the board. And I just want to reiterate that the 4 board-sponsored now pieces of legislation, we do not have a author yet.
Yes. Right.
And we're going to be going and seeking authors, and are any of these going to be combined into a omnibus tax bill, or are they going to be separate authors with 4 different bill numbers?
These will, well, with exception of the first proposal will be a committee bill most likely.
Committee,
But
okay.
the other proposals, since they're more policy-based, will be individual authors.
Okay. Okay, and so we look forward to you coming back with bill numbers and bill authors, and keep us up to date on the process moving forward. Okay, thank you, members. That concludes the legislative committee. Move to adjourn.
Thank you, Madam Chair. Members, we, just for the notification of the public, we'll take up an item with the goal of taking a lunch at 1 o'clock, a break at 1 o'clock, then come back, go into closed session, then return back and take up our items. With that in mind.
Can I just quick question on the agenda?
Sure.
Yeah, just a quick question in regards to agenda issues. And I know this is kind of in regards to the issue of the board reorg, and I know you had written a memo yesterday that we received. And I'd like for us to kind of formalize that issue and go ahead, and I'd make a motion that we put on the February agenda the board reorganization.
I second that. Second. Without objection, members?
And then one other
That should be the order.
one other quick issue. I know one of the other issues that you had written, I think there's been some discussion amongst board members, and I think it would be helpful, and that is to review the concept of chair rotation. I think it's an interesting concept, and I think it would serve us better if we actually had some options for rotation presented to us than at that meeting for the reorg. And so I'd like to ask if we can ask the chief counsel to kind of come up with some of those options to do that, because there's different ways you can rotate. And that way we'd actually have some ideas before us if we choose to do that. If we don't choose to do this, that way we'd go through a regular. So I guess without objection, I'd like to ask the chief counsel to kind of come up with those options for us as we're there.
So be it. I believe the option presented in the memo that I disseminated to all the members just simply dealt with the potential of rotation. The other option, as all members know, is not to address that at all.
Right. Right.
And so I think what to augment that, if I may, Mr. Runner, is to ask staff to give us a historical perspective of how it's been done.
Sure.
Because legally, I believe the board members have a significant amount of autonomy in determining how to do that.
Yep.
So it's not a legal issue, but maybe a historical issue may be helpful.
I think that'd be good.
In the decision-making process. Without objection, members, unless there's other direction to the members, to the staff, such would be the order. Much appreciated, Mr. Renner.
Thank you.
Ms. Richmond, our next matter.
Our next matter on today's agenda is item B, corporate franchise and personal income tax appeals and hearings. Item B1 has waived appearance, so our first hearing will be item B2, Michael J. Barkley and Laura Ann Barkley. Please come forward. Board Proceedings has received contribution disclosure forms for today's hearings from the parties, participants, and agents. All forms were properly completed and signed. All parties, participants, and agents are on alpha listings provided to your office. Each person sitting at the table will be asked to introduce themselves and, if necessary, their affiliation with the taxpayer for the record. 10 minutes is allocated for the taxpayer's opening presentation, followed by 10 minutes for the franchise or department's presentation, and 5 minutes is allocated to the taxpayer for rebuttal. Chairman Horton.
Thank you. Mr. Eberlein, would you please introduce the issues in this case?
Good afternoon, Chairman Horton, members. The issue before the board in this appeal is whether appellant's claim for refund for 2008 is barred by the statute of limitations.
Thank you and welcome to the board. We'd ask that you commence your presentation, being conscious of the advisement that you have 10 minutes to make your presentation. We will return and allow you 5 minutes on rebuttal at your convenience.
Thank you. My name is Michael Barkley. I brought this appeal. This will take under 6 minutes. This is a sad day. I am discouraged by the unsigned December 28, 2015 staff summary. It shows that the FTB has done an excellent job of obfuscating what they have done. Everywhere the summary says there was no adequate claim made, it should have said a thorough, specific, signed claim was made. Everywhere the summary says the FTB did not know or should have known, it should say the FTB did know. Where the summary says it would have been impossible for respondent to determine appellant's 2008 tax liability, it should say respondent already knew our 2008 liability was zero at the time we filed each of the 3 claims, plus, of course, our March 5th, 2014 letter they labeled a 4th claim. Where the summary says FTB may make assessments from any available information, it should say nothing allows the FTB to ignore contrary information in its possession. Where the summary discusses statute of limitation, it does not discuss whether or not RICO statutes of limitation have passed, if any. The staff summary and your publication 81 also point out that I have the burden of proof. How can that be? What staff and publication 81 are saying is that equities do not matter. The burden shift is an unfair reward for FTB collection mischief. Those of you who have prepared tax returns for a living know that a person's income and expenses are a sort of stream throughout their lives, chopped up into annual reporting periods for tax purposes. For most people, absent winning the lottery or some such, changes from year to year are a matter of degree. A person doesn't suddenly start a successful professional practice and then dissolve it within the same tax year, despite the assertions of such in FTB collections activity that I mentioned on page 1 of my October 20th, 2015 reply brief. You know that one of the first things you do in preparing returns for other people is compare prior year returns and subsequent returns if available with current records both before and after you prepare the current return. This reduces mistakes, and not doing it is malpractice. I have been filing my returns with the Franchise Tax Board since 1957. They know me quite well. The only exceptional thing about my 2008 income and expense stream is that my wife did really bad things with the money I borrowed in November 2007 to purchase the apartment building next door, which she wanted to do and I didn't. And then I had to dump stocks in that really bad time in order to pay for the real estate she did buy. The detailed schedule showing the awful 2008 capital losses from that activity I carried over to my 2009, 2010, and subsequent returns. As I list in the bottom paragraph of page 2 of my May 7, 2015 reply brief, that activity for 2008, which forms the entirety of the Franchise Tax Board assessment, is shown on those schedules which are also attached to those subsequent returns. As I list in the bottom paragraph of page 2 of my May 7, 2015 reply brief, those schedules fully document the carryover claim made on my 2009 and 2010 returns, which were filed before the running of the statute that the FTP asserts entitles them to confiscate our carryovers. The claim is shown in full detail. The amounts are clear. The source of the claim is clear. The claim is dated and is signed in each instant. But the Franchise Tax Board says, nope, wrong piece of paper. We can ignore it and not state that we are ignoring it or state why. And that way, we get to keep the money we weren't entitled to in the first place. That's their position, and they want you to join them in that. What is really missing from the staff report is that the Franchise Tax Board regularly makes demands of California taxpayers based only on less than all information they have in hand. That some persons within the Franchise Tax Board have chosen to do this cherry picking as a way to artificially inflate the Franchise Tax Board's collection revenue, that these are made through the use of U.S. mails, that these resulting demands are knowingly false and misstated, that these false demands are made through the use of U.S. mails backed up by force and fear, and that this practice is violative of RICO, the Federal Racketeer Influence and Corrupt Organizations Act, for which the statute of limitations did not seem to have passed, at least for those individual employees who dreamed up this practice, and that the practice is an act of moral turpitude, and anyone participating in it or endorsing it is risking whatever professional licenses they might have. The Franchise Tax Board asks that the Board of Equalization endorses the practice. You should decline. I can only hope that someday some ambitious federal prosecutor, to the great acclaim of many thousands of California taxpayers, will begin exploring the practice of the Franchise Tax Board personnel who are making these deliberately false demands and confiscations, and the practice will be halted and the practitioners brought to justice. My latest error is obvious. It's a belief that government employees will behave in an honest and ethical manner. I fear that I have been sadly mistaken. Even so, I ask that you find my claims on my 2009 and 2010 returns were sufficient, that my appeal be granted, and the carryovers reinstated. I need them to pay future tax obligations to the Franchise Tax Board, which it now appears I will have to pay twice. With that, I yield the rest of my time, and I would submit it respectfully, Michael Barkley.
Thank you very much. Members, let's go to the department. The department has 10 minutes to make their presentation. I ask that you commence with your introduction for the record.
Good morning, Mr. Chairman and members of the board. My name is Brad Catino. Sitting to my right is Margaret Monnier, and together we represent Respondent Franchise Tax Board. Appellants did not timely file their 2008 California tax return. Respondent received information that Mr. Barkley, the appellant husband in this case, had a filing requirement for the 2008 tax year. Accordingly, respondent sent him a demand for tax return in 2010. When Mr. Barkley did not respond to that demand, respondent then issued him a notice of proposed assessment. The proposed assessment became a final liability in 2010 when Mr. Barkley did not protest the MPA. FTB then undertook collection activity and received full payment for the balance owed. Over 3 years after the proposed assessment became a final liability, appellants filed their 2008 tax return in August 2013, more than 4 years after the original due date of the return. On their return, appellants reported a $0 tax liability and an overpayment, which they requested be applied to the 2009 tax year. Respondent accepted the return. However, it was prohibited by law from a 2009 tax year because the statute of limitations to claim a refund or credit had expired. Respondent subsequently issued a claim denial, which led to this appeal. Respondent was proper in denying appellant's claim for refund. Under California law, it requires a taxpayer to file a claim for refund within 4 years of the original due date of the return or within 1 year from the date of the last overpayment, whichever happens to be later. In this case, appellants filed their 2008 return, which serves as their claim for refund, in August 2013, more than 4 years after the original due date of the return and more than 1 year from the date of the last overpayment was received for the 2008 tax year. Thus, their claim was outside the statute of limitations. At this time, I'd like to briefly touch on appellant's argument that their 2009 and 2010 returns should be treated as a claim for refund for the overpayments made on their 2008 account. Neither appellant's 2009 or 2010 returns can serve as a valid claim for refund because neither return meets the statutory requirements of a refund claim under California law. In general, a valid refund claim must provide enough information so that respondent can determine the tax year for which the taxpayer is claiming a refund and the basis for why the taxpayer believes he or she is entitled to a refund for that tax year. There is nothing on either appellant's 2009 or 2010 return that provides this critical information to respondent. Neither appellant's 2009 or 2010 return even mention the 2008 tax year, let alone set out any basis for why they're entitled to a refund for that year. Instead, both tax returns actually request that any overpayment be applied to the subsequent tax year. Accordingly, respondent respectfully requests that it be sustained in this matter. I'd be happy to address any questions or concerns the board may have. Thank you for your time.
Thank you very much. On rebuttal, please.
Actually, both returns do show the 2008 detail that he's talking about as being missing, and they're signed. Thank you.
Discussion, members. Member Harkey.
Thank you. Mr. Barkley, why did it take you so long to file the 2008 return?
My wife bought 7 houses in 2008, and a 60-second answer, if I might. My wife died in 2006. A year later, I married her best friend, a woman I'd known for 20 years. She has many great and wonderful, admirable qualities. She was a straight-A college student in accounting, but she lacks a couple things, one of which is the skill and ability and the nature to budget. I actually thought that by now I would be living in my car the way things were going. The basis for all the property she bought in 2008 is a scramble. I have to straighten it out. I filed the federal return, and I found the state return in my file on the date that respondent mentions. Even so, I had filed the 2009 and 2010 returns with that detail in there that Franchise Tax Board used in their assessment, and those returns are signed, and the detail lists that shows the entirety of their assessment is 0, would be 0 if they'd used the actual numbers, if they looked at the actual numbers.
Okay, so I'm confused. So what you're saying is 2008, you weren't aware that you had to file it, or you just weren't prepared to file it, or?
I was aware I had to file, and I was going to finish fixing, that is going back and recreating the basis for those other 7 properties that my wife bought in 2008. And other things came up, and to my surprise, after the passage of the date he's talking about, I found it in the file, so I did mail it, and it was late,
Okay.
yes.
So you prepared it, just didn't get it mailed in.
That's correct. And I was very surprised and disappointed, and it's why I'm here, and I understand that I can lose this, and it is my mistake. But they did have all the detail they needed in order to recognize the 2009 and 2010 claims as valid.
Okay, and where was that information? I have a tax return here. Was it listed on your return, or how did you list it?
Okay. The refund claims for the carryover show the 2007 amount and the 2008 payment with the date it was paid on both the 2009 and the 2010 returns. Plus, they also show the detailed schedule supporting Schedule D for 2008, plus updates for 2009, and then more updates for 2010, where I'm taking the capital loss allowed against those next subsequent years. 100% of the detail that they relied on for making the 2008 assessment is included in the 2009, 2010 returns, and they are signed.
Okay, I can, to the department, I understand that we have criteria for protective claim.
Correct.
One of them being that it has to be clearly delineated. It should indicate, what I've got, what I have is that it should indicate protective claim at the top of the document, must be in writing, and state the amount, specific information about the pending case upon which the refund hinges and the specific issues involved. So we know that that is the story. When you look at the 2009 tax return.
Correct.
I do notice, and although it doesn't say specifically protective claim, it does state the numbers here that are totaled together to get $25,073. How is that? How do you look at that when you receive an income tax return similar to that? What happens to it?
Yes, my co-counsel will address.
Thank you.
Typically, when FTB receives a return, it goes through an automated process that looks for facial or inconsistencies on the face of the return. For example, the numbers don't add up, or a reported amount of a payment doesn't match what FTB's computerized records show. So unless there were an audit of the return, the kind of information that's set out on line 72, I think perhaps you are looking at for the 09 return, Ms. Harkey.
Right.
Unless, for example, that's a different amount from what FTB's records showed, it wouldn't necessarily be picked up. And since at the time the 09 and the 2010 returns were filed, the Barclays had not yet filed their 2008 returns. There might not have been, we wouldn't have had necessarily information available on the 08 account to match up with what is shown on this 2009 return.
Okay. I may come back, but
Member Stowell?
Just real quick, to the department, what is line 72? I don't have the tax return in front of me.
Line 72 is the estimated tax payments made by the appellants.
So they're saying that on line 72, they made an estimated tax payment of $25,073?
Yes.
From their 2008 return to, and are asking for those tax payments to be applied to their 2009 and 2010 returns?
So on their 2000, sorry for the
2010 return.
right, sorry for the confusion. The 2009 and 2010 returns on line 72 reflect payments made by the appellants. And they're asking, in those two tax returns, they were requesting them be applied to the subsequent tax year. So for 2009, they're asking if those payments be applied to the 2010 tax year, and on their 2010 tax return, have those overpayments be applied to the 2011 tax year. So does that address your question?
Almost. Let me just go to what I was going to first ask. When was the notice of proposed assessment issued?
The notice of proposed assessment was 2010,
What date was it issued?
January 20th, 2010.
When was
Sorry.
the 2000, go ahead.
Sorry, that was actually March. That was the demand for tax return. I apologize.
MTA was issued March.
March 2010?
March 29, 2010.
Correct.
When was the 2009 tax return filed?
In 2011.
Exact date. In 2011?
Yes.
And the 2010 return filed?
In 2012.
To appellant, if I cannot paraphrase, but I think you're arguing, are you arguing that when you filed your 2009 and 2010 tax return, the payment of $25,000 should have been sufficient to alert the Franchise Tax Board that zero tax was owed for 2008?
It should have been sufficient to alert the Franchise Tax Board to say, you put this money on here, where is it? Because you haven't filed 2008. And I'm sorry that I made the mistake of not filing 2008, but they just kept it to themselves. They issued a notice saying, we corrected a mistake on your return, but they didn't say what the mistake was. I don't know if that answers your question or not.
They issued a notice to you saying that the $25,000,
No, they didn't mention $25,000 at all. They said it was a mistake in your return, and we have corrected the amount.
with respect to the $25,000?
They didn't mention $25,000
You
at all.
don't remember? Okay, thank you. I think I understand where it's going now. FTB, in your records, do you show what type of notice you issued? Because what I'm getting here, if this payment represents an estimated tax payment that you guys did not have a record of.
Right. Yes, we sent a return information notice after he filed his 2009 and 2010 returns stating that it was an erroneous amount stated as an estimated tax transfer.
Okay. That's the notice I was looking for. Okay. Two appeals, can you go over the law again with respect to filing claim for refunds and what the law requires to show, whether it's a 540X or any other form?
The regulation requires that a 540X should be used for purposes of filing a claim for refund. However, in this instance, there wasn't even a 540 filed, so appellant's best course of action would have been the filing of the 540 itself. In a typical claim for refund situation, you file your return, go back, find additional amounts, and that's the reason you would utilize a 540X. But in this instance, I would say just appellant's filing of the 540 would have been appropriate
And
for the amounts that have been transferred into the year that he's now seeking the refund for.
Okay. Okay, thank you.
Further discussion, members? Member Harkey?
I just want to be clear. You did pay the 25, and the FTB received it. What was missing was the 2008 return that, due to a statute of limitations, was kind of beyond the refund. But the taxes were paid. We did know, the FTB did know enough to send a letter saying they had some confusion. And other than, filing a 540X, because the 540 hadn't been yet filed, it seems to me that maybe the 2009 and 10 tax returns that I know that Ms. Stowers doesn't have, but it does delineate 11,555 plus 13,518, totaling 25. There's some detail here and some dates as to what it applies to. It's kind of a constructive notice. I know it's a bit of a stretch, but this is an unusual circumstance. That's it. Thank you.
That's one comment. Let's clarify. I think that's where, let me ask the Franchise Tax Board, in your argument, you indicated that to have a claim under California law, it must identify the tax year?
Yes,
It must, and have a basis for the claim?
yes.
What statute are you referring to?
I believe that is section 19322.
I can't hear you, sir.
Sorry, that's section 19322.
19322.
Yes,
So is your argument that the information that's on the 2009 and 2010 returns do not meet the requirements of 19322?
that is correct.
Okay.
Further discussion, members, hearing none, Member Starr, move to take the matter into consideration, second by Member Runner. Without objection, members, such will be the order. Members, let's take recess. We will return at 1:45. I'd like to also take this opportunity to recognize a very talented individual. Ms. Treat is in the audience. Welcome to the Board of Equalization, Paula. Thank you very much, members. Board is hereby recess.
Thank you.
Recess or closed session, is it?
I would hope so.
I would.
But I don't.
Never can tell, can you?
We're ready.
Yeah.
I'll just take that pen.
Members, let us reconvene the meeting of the Board of Equalization. Ms. Richmond, what's the next matter?
Our next matter is closed session. The members will now go into closed session to discuss settlements and personnel matters.
Okay, so we have your W-2 and mortgage deduction, your receipts, charitable deductions, mileage claims. Let's see, are we missing anything else? Oh, do you owe any use tax?
What's use tax?
It's usually owed when you buy something from an out-of-state company or website that didn't charge you California sales tax. So do you think you may owe use tax?
Gosh. You know, I did a lot of online shopping this year. I think I have some receipts from a few things I bought.
Oh, that's easy to add in on your return. Let's see what you have.
The revenue collected from use tax helps pay for important California services like public safety, healthcare, and schools. Remember, when you file, pay your use tax. To learn more, visit boe.ca.gov. Paying your use tax. Good for you, good for California.
Members, let us reconvene the meeting of the Board of Equalization. The Board of Equalization met in closed session. Nothing to report out at this time. Ms. Lopez, what's our next matter?
Okay, our next item is B3, Robert W. Holman and Margaret E. Holman. Please come forward.
As the taxpayer comes forward, Mr. Johnson, would you please introduce the issues in this case?
Good afternoon, Chairman Horton, members of the board, John Johnson with Appeals. There are two issues before this appeal. The first is whether appellants have shown that respondents' proposed assessment is barred by the statute of limitations because a notice of the proposed assessment was not sent to the trust, but sent to them individually. The second question is whether appellants have shown respondents' determination that they are liable for the tax on capital gain based on respondents' finding that the trust was not a qualified charitable trust is an error.
Thank you. Welcome to the Board of Equalization. You have 10 minutes to make your presentation. Please be advised. We'll return and allow you 5 minutes on rebuttal. Please commence with your introduction for the record.
Good afternoon. I'm John Mulligan. I'm a tax attorney here with my client, Robert Holman. And unlike the prior case we heard, this is a dispute about FTB's interpretation of tax law. I'm not here to bash the FTB, although it would certainly be nice if Mr. Holman's decade-long ordeal was finally over at some point. Basically, Mr. Holman set up a charitable remainder trust in 2002, and he contributed a Pebble Beach house to this trust. At the time this was set up in 2002, Mr. Holman had substantial wealth before the market crashed and the real estate market went, and he wanted to provide some money to charity. The charitable remainder trusts are something that are sanctioned by Congress, just like private foundations, just like other charitable entities. And what they do is a taxpayer agrees to contribute an asset to the trust. And in exchange, the taxpayer gets an annuity for their life. In this case, it was 7.1%. But also in exchange, the taxpayer has to agree that at least 10% of the value of the trust goes to a qualified charity. And this is exactly what occurred in 2002. I don't think there's any dispute that this was a qualified charitable trust. And what happened in this case is that the taxpayers, due to very difficult circumstances in 2008, when the market crashed and they were getting a divorce, they terminated the charitable remainder trust, and they distributed about $2.2 million to a charity, so it accomplished exactly what the taxpayers said they were going to do. And then they also received the remainder of the charitable trust, which was about $5.2 million, and they paid taxes on that distribution, just as if they had gotten a distribution from any other entity. In fact, what happened was the trust received, or the charity received this $2.2 million probably 20 years earlier than it was going to receive it, because they weren't supposed to receive it until Mr. and Mrs. Holman were deceased. But they did receive it in 2008. In any event, back in 2005, what happened was the trust received the property in 2002. The trust then sold the property in April of 2004. And in 2005, the Holmans went to their CPA and they said, we're entitled to 7.1% distribution per year. We haven't received for prior years because the trust didn't have any assets. What are we entitled to receive? And the CPA calculated $1.168 million, $1,168,000 that they were entitled to receive. Under the IRS rules, this distribution occurred on April 11th, 2005. But the IRS rules allow the trustee to include any distribution that occurs before the tax return is filed to be placed on the 2004 return. However, the Holmans, because they're cash basis taxable, they received this distribution in 2005, and they paid tax on this distribution. In July of 2010, about 3 years after the FTB began examination of the Holmans' 2005 return, they sent a preliminary determination letter saying that the Holmans must report the proceeds of the sale that the trust made in 2004 on their individual tax return, based on the FTB's position that the exempt charitable trust was a grantor trust at the time of the sale. In other words, like a pass-through entity. The trust had sold it for $8.2 million, and there was $3 million capital gains. The Holmans had to then report it on their individual tax return in 2004. The FTB never audited the trust returns. They never advised the trust returns that their status was being changed from a charitable exempt trust to a grantor trust. And by the way, there's several steps here. If you change the status of a trust from a tax-exempt charitable trust, it doesn't automatically become a grantor trust. It becomes an irrevocable trust that pays taxes like a corporation. But the Franchise Tax Board went right through that, and they said, no, it's a grantor trust, and it's all taxable to the Holmans back in 2004. Even though they never noticed the trust, and even though the statute of limitations had passed as to the trust. So in 2010, the Holmans filed the response to the proposed assessment, and they got a notice from the Franchise Tax Board in May of 2011 that the matter was being assigned to a hearing officer. So we waited, and we waited, and we waited. 2.5 years later, 30 months later, the Holmans finally got another communications from the FTB saying that their case had been assigned to a hearing officer. A year later, after holding a 1-hour short hearing, the FTB issued a notice of action. So here we are today. As I understand the FTB argument, they are now contending that the April 2005 distribution of the Holmans was incorrect, and therefore the trust lost its tax-exempt status back to 2004 in April when the trust sold the property. In other words, the distribution happened in April of 2005, and the trust sold the property in 2004, and the FTB is saying retroactively the trust exempt status is revoked because of a 2005 distribution. That's their contention. I also understand the FTB to argue that because the Holmans put the property, the house, in the trust in 2002, and because they didn't move out right away, they stayed there for 6 months while they prepared for their move to Florida, while they got the house ready for sale, and then the house was rented for the last 6 months. Franchise Tax Board is saying that that is a prohibited transaction, that is self-dealing. Okay. So, and because of that self-dealing, they're saying that the trust lost its tax-exempt status, not only at the time of the self-dealing, but also a year later when the trust was sold the property. You know, it doesn't, frankly, from a practical purpose, and I deal with a lot of CPAs, it doesn't make sense that if a CPA argues, or the CPA, a taxpayer goes in to see a CPA, and the CPA calculates a distribution in 2005, and let's say for an argument that he incorrectly calculates it, then retroactively, the trust tax exempt status is revoked, even though the trust, at the time it sold the property, was a tax exempt entity. FTB is saying, well, let's go back a year and say you lost your status a year ago because of the 2005 distribution. Frankly, I deal with a lot of CPAs. Think about what a CPA then would have to do. What if the CPA miscalculates the distribution 2 years later? What if it miscalculates the distribution 3 years? If you buy the FTB argument, they're saying if a CPA miscalculates a distribution at any time, you go back retroactively and revoke the trust tax exempt status. That's just not the law. That doesn't make any sense logically. No CPA would ever take charitable remainder trust as a client. The FTB also argues that the act of the Holman staying in the house during 2003 was an act of self-dealing. Let's assume that they're right. What is the penalty for self-dealing? Congress has set up rules and IRS has promulgated regulations which says we have specific penalties that apply to charitable entities. They're called excise taxes, and they're under the IRS code 4741, 4742, and what they say is if a charitable entity, whether that's a charitable trust or a charitable foundation, if it engages in self-dealing, and this happens all the time with, they invest trust assets in their brother-in-law's partnership or something like that. Those are self-dealing transactions. The statutory rules are that there's an excise tax of 10% imposed by statute. The IRS comes in and says that was a self-dealing, 10% on the value of the self-dealing. Not only does it say that, but it also says if the IRS comes back in and you haven't corrected the transaction within a year, we'll impose another 10%. The statute doesn't say we're going to revoke your tax exempt status forever. The statute says you pay a penalty, you pay an excise tax. The Franchise Tax Board never even audited the trust, never assessed that penalty, never tried to assess any penalty.
Neither did the IRS.
Well, yeah. The other thing, and I know the board ignores this to a certain extent, but all of these transactions, the establishment of the trust in 2002, the tax return filed in 2003, the sale of the house in 2004, the distribution in 2005, the termination and distribution in 2008, every one of these was reported to the IRS. The IRS never had a problem with any of these. It's just these arguments by the Franchise Tax Board. So, and now we come to the notice problems and statute of limitation problem. The FTB argues that it's not required to give notice to a separate taxable entity like a trust. With a separate tax ID, it's an irrevocable trust. And they argue that they gave notice to the Holman, and by providing notice to the Holmans, that was notice to the trust. First of all, the FTB is proposing to change the status of a trust from a tax-exempt trust to a grantor trust. That is like the FTB exchanging the status of a corporation. Don't you have to give notice to the corporation that you're changing its status? It's a separate taxpayer. And secondly, even if we assume that the notice to the Holmans in 2010, when they received their preliminary determination letter, and the preliminary determination letter said it applied to the 2004, 2005 individual tax returns of the Holmans. But even if you say that notice applied to the trust, that notice occurred a year after the statute of limitations applied to the trust. There was never notice given to the trust within the statute of limitation. Similarly, the Franchise Tax Board has argued that the Holmans gave them an April 29, 2009 extension of the statute of limitations for their 2004 and 2005 returns, and somehow that applies to the trust too. Well, as I said, The statute of limitation for giving notice to the trust expired on April 15th, 2009. So when the Holmans extended the statute as to themselves, even if you assume that that extension as to themselves somehow applies to the trust, you can't extend a statute that's already expired. The trust statute, they already noticed, expired before the Holmans ever extended their own statute. In summary, it's very hard because we've been going over this now for many years. And as I said, this trust was established in 2002. It's sold. The Holmans have paid taxes on every one of their transactions. They received a distribution in 2005. They paid California and federal taxes. They received the large distribution in 2008. They paid their taxes on that. What the Franchise Tax Board wants to do is now say, let's go back to 2004, and you have to include that capital gain in your personal income. And by the way, it's too late to file for a refund on all the taxes you paid on all the distributions that came out of that trust. Too late, but we want the money from 2004. That is not only, well, it's just unfair. And they basically, the Holmans, they want to unwind a transaction in which the Holmans paid $2.2 million to a charity. The Holmans paid taxes on all the distributions they received from this charitable trust. And now the Franchise Tax Board wants to go back and say, well, you have to amend all that stuff, you have to change all that stuff because of our argument that it was not a tax-exempt trust in April of 2004 when it sold this property. And the theories of the Franchise Tax Board in this are tenuous. They're not supported by the code and the regulations. And frankly, the damage to the Holmans has been caused to a great extent by the delay from the Franchise Tax Board. Franchise Tax Board made 5 separate document requests to the Holmans, and they complied with every one, but it took 2.5 years. They kept coming back with new document requests, and then they spent 2.5 years leaving us in limbo while they decided which hearing officer they're going to be assigned to. This is not only an incorrect application of law, it's unfair to the taxpayer. They paid their taxes. What are they going to do? Go back and ask the charity for the $2.2 million back because it never was a tax-exempt entity? That doesn't make any sense either. So I would ask the board to look at this transaction, look at what the law and the interpretation that the Franchise Tax Board is trying to make, and look at what's fair and what Mr. Holman has done. This is a man who's a philanthropist. He's not someone who's tried to escape his taxes. In fact, he's paid millions of dollars in taxes. He's not someone who's tried to escape his obligation to a charity. In fact, he's paid substantial money to charity, and he continues to pay money to charity. So I would ask the board that it look at this and take a hard look at what the Franchise Tax Board has done in this matter.
Thank you very much. Members, let us go to the department. The department has 10 minutes to make their presentation. We certainly would encourage the department to share with us their thoughts relative to the concerns expressed by the taxpayer.
Thank you, Chairman Horton, and good afternoon, board members. My name is Sonia Woodruff, and with me today is my colleague Adam Seuss, and we represent the Franchise Tax Board on this matter. Appellants were the grantors, trustees, and beneficiaries of a trust intended to be a charitable remainder trust. Appellants improperly administered that trust by making an excessive distribution to themselves to the detriment of the charitable remainder beneficiary and by engaging in self-dealing. They violated state and federal law in doing so, and they're now subject to tax on the gain from the sale of the trust's sole asset, which happened in 2004. After creating that trust in December of 2002, appellants transferred only one asset to trust, their Carmel residence, which they continued to live in through much of 2003. They took a charitable deduction in 2002 for the value of that future remainder interest in the trust, which was over $820,000. They acted as the sole co-trustees and income beneficiaries at all times during the administration of the trust. And they made no distributions from that trust until 2004, resulting in when appellants sold the Carmel residence on behalf of that trust for approximately $8.2 million, resulting in a capital gain of over $3.1 million. Now, appellants argue that the distribution did not happen until 2005, but they reported the distribution on their 2004 personal income tax return and the trust reported it on its 2004 information return, although it did not pay any tax. Now, in addition to the self-dealing that happened when appellants lived in the home and deducted amounts for cleaning and insurance on the trust's return, a significant problem occurred when appellants allocated all of the trust's capital gain to income instead of assigning it to trust principal and preserving it for the charitable remainder beneficiary, as all the federal and state all the relevant state and federal laws require. Because they treated the gain as trust income, they distributed over $1.1 million to themselves, which exceeded the appropriate amount by $1 million. If they had distributed the correct amount to themselves, the ultimate gift to charity would have been substantially larger, by nearly $300,000 by my calculation. Because they failed to act in accordance with the requirements of a valid charitable remainder trust, the trust became subject to the grantor trust rules. Appellants as the grantors should have paid tax on the entire capital gain. In addition, appellants as trustees failed to pay tax when due and became personally liable for that tax when they distributed most of the trust's assets to themselves in 2008. So before getting into the technical details of the law and why this distribution is problematic, it's important to note why any of this matters. Trusts often have two classes of beneficiaries. First, the current income beneficiaries who are entitled to receive distributions of the trust's income, as defined by the trust provisions and by state law, and the remainder beneficiaries who have a remainder interest in the principal assets of the trust. So trust accounting principles provide some basic rules on how to allocate trust receipts between income and principal in order to protect the interests of both classes of beneficiaries. Now, for charitable remainder trusts, Congress set forth some rigid rules regarding how these trusts can function because the remainder beneficiaries are charities. The rules present a significant benefit for taxpayers that did not exist before. Taxpayers can take a current deduction for the gift of a remainder interest to charity if they do it in the form of a trust that complies with all of the rules. Appellants took advantage of that current income tax deduction in 2002 when they created their trust. However, they failed to operate the trust in accordance with the rules, and so the trust became subject to all of the regular rules that would be in effect absent the special charitable remainder trust rules. So appellants claim that the 2004 distribution was a make-up distribution under the trust's NIMCRUT provisions because of the large capital gain from the sale of the house. The problem with this argument is that it only works if the capital gain is allocated to trust income. And all of the relevant state and federal laws tell us that the capital gain should have been allocated to trust principal rather than income and accumulated for the charitable remainder beneficiary. The federal rules require that pre-contribution gain must be allocated to trust principal. The Carmel property was the sole asset contributed to the trust by appellants, and so the capital gain from its sale should have been added to trust principal. The Treasury regulations also clarify that a charitable remainder trust must comply with all of the requirements of the code and corresponding regulations in order to receive tax-exempt status. Now, appellants have also argued that allocating that capital gain to income was appropriate under Nevada law at the time, but that is simply not correct. When you read the relevant Nevada statute in its entirety, you see that trustees do not have discretion to allocate between principal and income if they are also beneficiaries of the trust. And of course, appellants were the sole income beneficiaries of the trust, and so they did not have discretion to allocate to income under Nevada or California law. So in light of the excess distribution, the trust failed to qualify as a valid charitable remainder trust and was no longer exempt from the grantor trust rules. But this result is also appropriate if you look at appellants' dealings with the trust as a whole. They transferred the residence to trust, but they continued to live in it. There was no independent trustee, and they made distributions to themselves of principal and income. When they decided to terminate the trust for their own personal reasons, they did so without judicial approval and without notice to the state attorney general. So they acted as the grantors of the trust, and they should be treated accordingly. As the grantors, appellants should have paid taxes on the entire capital gain earned from the sale of the Carmel property. Now, appellants also argue that the trust should have received notice of the assessment, and because notice was sent to them as individuals, that the assessment must fail. But this argument lacks merit for several reasons. First, because the trust failed to qualify as a charitable remainder trust, the grantor trust rules apply. The grantor trust rules provide that a trust will be disregarded and all items of income, credit, and deduction will be treated as received by the grantors individually. Appellants were the grantors, and so it was appropriate to provide notice to them in their individual capacity and within the statute of limitations applicable to their personal returns. Appellant's representative executed timely waivers of the statute, and respondent ultimately provided timely notice of the proposed assessments to appellants as individuals. Second, at the time of the assessment, appellants had terminated the trust and distributed all of its assets, so there was no trust to assess. Respondent could have correctly assessed appellants as transferees of the trust assets or as fiduciaries who became personally liable for the tax when they distributed all of the trust assets without first paying the appropriate tax. But under any theory, appellants were the appropriate persons to be assessed and to receive notice of the assessments. They did in fact receive notice, and that notice was sufficient to provide them with their due process rights. It was clear from respondents' early correspondence that the trust and its operations were being examined, and appellants were the only persons in control of all of the relevant documents and the information related to the audit. So appellants have argued today that the distribution actually happened in 2005 rather than 2004. But if that's correct, then they failed to make any distribution in 2004, and that failure to make a distribution clearly violates IRC Section 664D, which requires distributions of the unitrust amount to be made not less often than annually. So under Section 664 and the Atkinson case, the trust failed to qualify as a charitable remainder trust, and the grantor trust rules would apply. Appellants have also argued that it's too late to file tax returns for tax years 2005 through 2008, but there likely would have been no advantage to filing amended returns for those years. All of the trust income should have been distributed to appellants in those years, so they would have been reporting that income and paying income tax on it anyway. So there shouldn't have been much of a difference for filing amended returns. And in concluding, I just want to underscore the fact that appellant's 2004 distribution had the effect of reducing the amount that should have ultimately gone to charity by almost $300,000. And this is exactly the type of consequence that the charitable remainder trust rules were intended to avoid. Thank you.
On rebuttal, please.
There's a couple things there. Think about this, that the Holmans were entitled to approximately $600,000 a year on 7.1% of $8 million. If the trust didn't have the money, as the FTB contends, they didn't have the money to make a distribution to them, that annuity obligation doesn't go away, it accrues. The trust has to, as soon as it has some money, has to make a distribution. So how is the charity harmed if the charity receives the benefit of what they would receive after every annuity payment is made? If the trust was terminated in 2008 and the trust had not paid more than, let's say, $100,000 or $200,000 a year during all that time, the trust would have to pay that accrued annuity to the Holman. So the charity doesn't get it. The charity got exactly what it was supposed to get. The other thing is that she's talking about 2004 and 2005. The Holmans received the distribution in April 11th, 2005. IRS rules specifically state that if the distribution for a prior year is made before April 15th, then the trustees include it on the prior year tax return. So they did do that, and they made actually the $1,200,000 and some thousand was 2 distributions. They're only entitled to $600,000 a year, so they accrued the distribution because remember, the trust received an $8 million assets in 2002. The Holmans didn't. The trust didn't have an asset, didn't have money to give to the Holmans in 2003, 2004 until 2005. The other thing that she mentioned is that Nevada law doesn't allow adjustment. Nevada law allows an adjustment if there's an adverse party. There was always an adverse party here. the Parasol Foundation had, the more the money went with the 2.2 million, they had their own counsel, they had their own review of this item, and they were a charity. The Attorney General can also review this. The IRS can all, the Holmans weren't just say they could do anything they wanted. They would be, they were beholding a fiduciary duty to the charity and to others. And when the FTB cites this failure to operate as a charitable trust, the statute says that the trust must operate and be set up as a charitable trust. It doesn't say that the penalty for failing to operate as a charitable trust is you lose your tax-exempt status retroactively. That's not what the statute says. And the Holmans did include all the distributions they receive on their tax returns. They paid tax on all of those. There was no tax avoided here. And the final thing is what the Franchise Tax Board wants to talk about, that this money, this capital gain, should have been allocated to corpus. Okay. If they're correct, then the trust can't become a charitable, or can't become a grantor trust as to that principle. Because 664 gives specific examples that says, as to items of income, the trust becomes a grantor trust. Well, the Franchise Tax Board is arguing that's not income. That capital gain that the trust got is principal. So they're arguing both sides. They want to say, okay, you had to treat this, for distribution purposes, you had to treat this as allocation of principal, so you shouldn't have taken it. But for purposes of whether you're a grantor or trust or not, we get to treat it as if it's income, and therefore you get to treat the whole thing as income to the Holmans. That's not what the statute says. They're trying to argue both sides of an issue. They got to have it one way or the other. If it's income, then the Holmans made the proper distribution. If it's not income, then it's allocated principal, and that portion of it cannot be a grantor trust as to that portion. That's what the statute specifically says. I think I answered as many questions as I can remember.
Okay. Thank you very much. Discussion, members? Member Harkey?
Go ahead.
To the appellant, you're indicating that the distribution was made April 2005?
Yes.
What evidence do we have in the record that the distribution was made at the time?
We have the 2005 tax return that I provided the exhibits, which the Holman's individual return, which shows them including the distribution on their 2005 return.
1 second. You're saying it's on the 2005. My notes indicate that it's on the 2004 return.
The trust 2004 showed it on their return. But it's on the Holman's 2005 return.
My records show that it's on their 2000, it's on the individual 2004 and the trust tax records as well. I will take a second look. My next question, you comment about the time frame from the time that the assessment was sent to your client to the time that you received your hearing. Can you give me those dates, please? From the time that you received your assessment to the time that the hearing was started.
We received, the Holmans received the preliminary determination letter in November 2010. They received the notice of proposed assessment on February 24th, 2011. They filed their protest letter 2 months later. And then in May of 2011, the Holmans were informed that their protest letter would be assigned to a hearing officer. On November 11th, 2013, the Holmans were informed by the FTB that the case had finally been assigned to a hearing officer.
And when did you have your actual hearing?
It took place, I believe, in March of 2014.
Thank you, sir. Franchise Tax Board, what evidence have you presented that the distribution was made in 2004?
Well, I believe that they reported it on their 2004 personal income tax return, and the trust also reported it on its 2004 information return. let's see, we do have the return here, so I can take a look at that to confirm.
Okay. Perhaps your colleague can look at that, and I have a follow-up question regarding the dates. From the time that the Franchise Tax Board acknowledged a protest in May 2011 to the time that the actual hearing took place in 2014, looks about 3 years, give or take a month. Is that your normal processing time for hearing of this type of case?
It can sometimes take a longer amount of time when it's a more difficult case. We have, fewer protest hearing officers that are able to look at difficult cases.
Okay. To the Franchise Tax Board, this excise tax that the appellant referenced under federal law, does California have that law?
We do not conform to the self-dealing rules. Yeah, under IRC Section 4941. So, but it is worth pointing out that at the federal level, the self-dealing taxes are actually significantly more onerous than what the FTB is seeking to do. It's correct that they can assess a 10% penalty at first, and then if it's not corrected, that penalty can go up to 200%. So it can be extremely burdensome.
Okay, thank you. And then finally, to the appellant, I just want to get clear on this property, the property that was placed into the trust in 2002.
Yes.
And it was previously owned by a partnership.
Yes.
Was it income property or was it their personal residence?
It was both, I believe. I believe it was initially purchased as investment property, and then they used it as a personal residence for some period of time.
Did they use it as a personal residence during the 2002 year?
Yes.
And the record indicates at some point during the 2003 as well.
For the first 6 months, yes, they did.
And then it was sold April 2004, and
Yeah,
at some point.
they rented it the second half of 2003. It sat vacant for 4 months in 2004, and then it sold in April of 2004.
Okay, thank you, both parties.
Member Harkey.
I may have to do this in several little bits. Charitable remainder trust.
Yes.
Is there any restrictions on living in the house after you? I thought one of the purposes was that if you passed on, that, your property or the percentage of would go to a charity, but I didn't believe there were restrictions on living in it. Can you explain?
Well, in this situation, what they had hoped to do was to sell the property as soon as they contributed to the trust, but they were unable to do it. And so rather than leaving the property vacant, they lived in it. They paid rent to the trust. They paid it as many expenses as they could. But, the self-dealing rules are pretty clear that if there is a self-dealing transaction, it would be this type of thing where this is not open to the general public. This is not something that was held out for rent. So by staying in the trust, you could certainly make a good case for the fact that they did self-dealing for 6 months. But then they corrected that self-dealing. That's exactly how the statute applies, is if you are doing an act of self-dealing, you need to correct it. You need to get out. You need to stop it. And they did it for a short period of time. It didn't hurt the charitable beneficiaries because what they were trying to do was to get the thing ready to be sold, and they couldn't sell it, so then they rented it, and then they sold it. I mean, the purpose behind the charitable remainder trust is to take just such an asset like this, where a taxpayer has highly appreciated property, whether that's stock or whether that's bonds or whether that's real property, and to give the taxpayer the break of saying, you don't have to pay tax on this as long as you agree to leave it to charity. And this is, this is a wonderful thing about the U.S. tax law is it encourages charitable giving.
Yeah,
and that's what exactly
more
occurred.
my question,
Okay.
was it just, I see, because I'm confused on this, because I thought and I did not bother to ask this question of my staff, but I thought on the charitable remainder trust that you could in fact live in it. So your trust agreement, though, that when you set up the charitable remainder trust, was that you were not living in it.
No, they were living in it and they intended to sell it. And then they were unable to sell it, so they continued living in it. But what I'm saying is under the IRS code, if that is self-dealing, then the penalty is 10% of whatever the value of the self-dealing was.
Okay.
Certainly, the IRS does not revoke a charitable entity's charitable status for a small self-dealing transaction. That just doesn't happen.
Okay, let me ask the department, because I still don't have the exact answer. Are there charitable remainder trusts that allow you to continue to live in the property?
Well, that would run afoul of the self-dealing rules under Section 4, IRC
Okay,
Section
so what you're saying is
9.1.
no?
No.
I just want yes or no. That's what I was looking
Sorry.
for, yes or no. Okay, so I misunderstood just personally the charitable remainder trust. So that gets that off my book. So what the FTB, what you're saying is they failed to qualify as a charitable remainder trust because of that issue, living in the house. They did pay rent. Is there any allocation for that in the law? That
Sure.
if you're paying rent, you've kind of made up the difference.
Well, first, the trust failed as a charitable remainder trust because of not just because of the self-dealing, but also because of the excess distribution. And so that was, and that could also be considered self-dealing under the self-dealing rules.
Okay, let me stop you on the distribution, because I have a
Sure.
question on that too. What we heard is that the distributions could be cumulative if you didn't have the money to distribute the first year that you accumulate them.
Right.
And what I heard the appellant saying is that they, in fact, accumulated over 2 years.
Right.
Because they didn't distribute in 2004, and they did in 2005, but it was for 2 years. What
Right.
is your...
So what the kind of trust that they had was a NIMCRUT trust, and that allows you to distribute the lesser of the income of the trust, that under trust accounting rules, or a fixed percentage of the trust. And what you can make up is the difference between that income and the fixed percentage, but only in a year when there's enough income so that the income exceeds that fixed percentage amount. And the only way that they can get there is by allocating capital gain to income, if that makes sense.
Okay, so if I understood your argument correctly, and correct me, you're saying that the trust ceased to become a charitable remainder trust either when they were living in it or when they failed to make the distribution.
Right.
Which is it in your mind? Is it
Well, I think the excessive distribution was probably the substantial error, the biggest error. And, I just want to point out that they did, in fact, report that on their 2004 personal return. I've got the return here. But both. I mean, the self-dealing is further indication that they failed to treat the trust as a charitable remainder trust.
Okay, one of the questions that one of my staff kind of brought up is that appellants did not really establish themselves as fiduciaries. How do you respond to that?
Well, they acted as the trustees of the trust, so if they weren't the fiduciaries, I'm not sure who could be considered.
I was
fiduciaries.
Questioning that. Just go back here. How do you explain you explain the hearing process is just taking a long time. Also, I have another question. As for the statute of limitations on the 2004 trust, in essence, what happened is you audited personally and then decided to reach back to the trust. When did the trust dissolve?
The trust dissolved in January of 2008, I believe. Right.
Okay, so you would have had opportunity to audit 2008 but you went back to 2004, which was beyond the statute. How do you explain that?
Well, we were looking at, I believe how it started is that we were looking at the sale of the residence, and that because that happened in 2004, we changed, direction, started looking at 2004 and asking questions about the trust. But I do want to point out that we began, although we began as an individual audit, we were asking questions about the trust pretty much from the get-go. So back in September and October of 2007, we made it pretty clear that we were asking questions about the trust, and they were providing answers as well.
Okay, but by the time you got to the trust, the statute of limitations had expired, correct? For 2004? As I read it, because we seem to be real sticklers in here about the statute of limitations, so I want to be sure we're being balanced on this.
Sure. So the date that we received the first waiver of the statute of limitations was April 29th, 2009, I believe. So that would have missed the statute of limitations for assessing the trust based on the trust's return, information return. However, appellant's individual return was filed in October, so we actually had additional time to assess them individually. So it was timely as to them individually. And because we treated it as a grantor trust, the trust is disregarded for tax purposes.
And you're treated as a grantor trust because you felt that they failed to qualify as a charitable remainder trust on the two issues that we mentioned.
Right.
I may come back to the taxpayer, but I have to, I'll defer to somebody else.
Mr. Chairman?
Yeah, Mr. Runner, then Ms. Stovall.
Just a quick question. How is this treated on the federal level?
It was treated as charitable remainder trust established. There was a tax deduction for the amount of the charitable remainder that was allocated pursuant to IRS table, so they got an income tax charitable deduction in 2002. In 2004, when the trust sold the house, the trust filed the tax returns, but it didn't pay capital gains tax at the federal level on the gain because it's a tax exempt entity. The 2005 distribution, the Holmans paid tax on that distribution at the federal level. They paid California tax as well. In 2006, whatever distribution they got, the Holmans paid tax on it. 2007, they paid tax on it. And then in 2008, when the trust terminated, the Holmans received about $5.2 million after giving $2.2 to the charity. And the Holmans paid tax on their 2008 return, federal tax return, on that $5.2 million distribution. So federally, it was always treated as a tax-exempt charitable trust. The Holmans were always treated as beneficiaries who received a distribution that was taxable. And the way the distributions are calculated is what kind of income did the trust have? If it had ordinary income, then the Holmans paid ordinary income tax on the distribution. If the trust had capital gain, then the Holmans paid capital gains tax on the distribution. And this whole idea of capital gains tax or capital gains somehow cannot be used for distribution. Think about this from a practical, if you buy that argument. Think about how much money you make on your savings. Let's say you got $8 million in trust and you're making 1% on U.S. Treasury bills, 1.5%. But the IRS says you got to pay 7.1% per year to the beneficiaries. If you can't use anything but income, how do you ever make a 7.1% distribution? You have to use capital gain, you have to use, and that's why Nevada law allows an adjustment. And this is called the whole investment theory, but all states have gone to it because think how difficult it would be. Because what happens is the remainder beneficiary then ends up with a whole bunch of money, and the income beneficiary never get nothing unless the trustee can find an income investment that's going to pay 7.1%.
If there was some self-dealing in the issue with either in the process, you've identified what the kind of the federal cure is for that. What have you identified is the state cure for that, and what's your basis for that?
I have. as far as I know, there is no state cure, there is no state penalty for transactions of this. If it's self-dealing, then the IRS specifically treats it this way. As far as I know, there's nothing in the state of California that says if you've done something that's self-dealing, that we have the authority to terminate your status. I don't know of any status.
So that I mean, that's basically what the state did. They terminated the status of the trust.
Based on the two things they said the trust did.
Let me go back to FTB. What's the basis for the ability to terminate the trust when it comes on self-dealing?
You mean to disregard?
Authority.
To not give it tax-exempt status. That's under IRC Section 664D and the regulations thereunder, as well as the regulation that exempts charitable trusts from the grantor trust rules. That regulation tells us that charitable trusts as defined under 664D will be exempt from the charitable trust rules. So we're really looking at the statutes and the regs.
And that's and you believe that's the authority to actually terminate it as opposed to identifying the income differently or posting it or identifying differently. You actually terminate the trust.
We don't terminate the trust. The trust.
You revoke the trust.
We revoke the tax-exempt status of the trust. Correct, yes.
Why was there never an audit of the trust?
Well, we began auditing the individuals, but we did make it clear that we were asking questions about the trust. And so if we had audited the trust, all of the same questions and the same notices would have gone to appellants as trustees. So, yeah, we didn't think to name them as trustees in that correspondence, but the same people that would have received the audit letters did in fact receive those audit letters.
Questions, would you again, I'm not familiar, but when you say you had questions about the trust,
sure,
you equate that the same as an audit?
Yeah, I mean, as part of the individual audit, we were raising questions about the trust.
Let me ask the taxpayer, in regards to that, the fact that they would identify the fact that the audit or questions would equate to an audit.
I think the Franchise Tax Board rules specifically state that they have to give notice of an audit. It's under the taxpayer's Bill of Rights. They have to tell people that we're auditing the trust. They didn't do that. And just to say that they asked questions about the trust, we understood they were asking questions about the trust because the trust made the distribution. It would just be like if they asked questions about an LLC because an LLC distributed $1 million to the Holmans. That doesn't mean they're auditing the LLC or the corporation. It just means they have questions about it. And my understanding of the rules is if you're going to audit any taxpayer, and the trust was clearly, they say it's a grantor trust for tax rules, but it's still legally a separate trust. It's a separate entity under California law. You can treat
Let me ask FTB, when you say you ask questions instead of an audit, an audit is obviously there's a process that is in place for both the protection of the taxpayer and the state when you go through it, when you open up an audit, notifications, all those issues. I guess I had trouble saying, I almost feels like, I sense almost like there was a sense to avoid that kind of notifications and information and responses that you would get from a taxpayer by simply asking questions. Right? Do we undermine the rights of the taxpayer when all of a sudden we're taking information out of the trust, we're not auditing the trust, and therefore the taxpayer doesn't get the normal notifications, awarenesses, defense that they normally would in an audit?
No, I think in this case, we were really just looking at it as a grantor trust. We were looking at the trust to make sure that it, qualified as a charitable remainder trust, and because we determined that it didn't, it was a grantor trust. And so our,
Well, did you start asking the question, again, when did you decide that it was a grantor trust? After you asked the questions, or I'm trying to figure out when it was that you kind of opened that door to look at it as a grantor trust as opposed, and then basically revoke the status of the
well, I guess
charitable trust.
certainly by the time we provided them with notice of the proposed assessment, but probably at some point during the audit, when we started receiving information about
During the
trust.
audit of the individual, that gave you enough information to go ahead and revoke the charitable without auditing that trust?
Correct. Correct. I mean, we were looking at it as a grantor trust.
But I guess I'm struggling with that. You were looking at it as a grantor trust, but when did but you created, you identified it that way without actually doing an audit of the trust, correct?
Sure, yes.
Okay.
That's true.
Okay, thank you.
Chairman, just real
Member Stowell.
follow-up questions. I did ask about where in the record to the Franchise Tax Board that you believe that they had the distribution in 2004?
Right, and I do have the 2004 return here. I'm not.
Do you have it as an exhibit in your opening brief as well?
I don't know that I have the entire return attached as an exhibit.
Okay.
Let me see here.
Can you tab it, and could board proceedings please get me a copy, or get the members a copy? And then my question kind of, and what Mr. Runner was questioning, that it seems like the audit started at the individual level, and you're inquiring about items that were reported or not reported on the individual tax return, and you inquire about the trust status and concluded through your audit that it did not meet these requirements.
That's
Now, I know the appellants, you're arguing that the trust didn't receive notice and the statute of limitation had expired for the trust when the individual waiver was signed and when the notice of post-assessment was issued to the individual.
Not the notice of post-assessment, the preliminary determination letter.
When that-
Before
anything.
Before anything. In both of those, the extension of the statute of waiver by the Holmans and the preliminary determination letter were after the statute of limitations expired as to the trust.
Level. To the, I understand
Okay.
that point.
All right.
To the Franchise Tax Board. When it comes to statute of limitations, which we are very strict about.
Sure.
Is the statute of limitations to limit the assessment, or is the statute of limitation with respect to notice? I'm seeing that the individual statute was still open and you could still assess on their return, and you had asked questions about items reported or not reported on their return. Do you have to have an open statute at the entity level to have an assessment, a valid assessment at the individual level?
I don't believe so. Because it's a grantor trust, it's disregarded for tax purposes, so it really just is treated as if it was received by the individual grantors themselves, and that's how we looked at it, and that's how we treated it.
Okay, thank you.
Member Ma.
Okay, so I just have a couple of questions on, maybe to the attorney, on the excess distribution as well as the self-dealing.
Okay,
Can you correct them?
yes. You could have,
Right. And so,
if the trust had been given notice within the statute of limitations that, one, it had done an act of self-dealing the first 6 months, but that had already been corrected.
right.
And so
by
in July or in April of 2005, if they had said, listen, you made an improper distribution, an excess distribution, then we could have replaced the funds. But as I said, what the IRS normally does is they say, okay, that was an improper distribution. Don't make a distribution in the next year or put money back you got the next year. They're always correctable. And the structure that the Congress and the IRS want is they want charitable
right.
entities.
Right.
if you say a charitable entity loses its charitable status every time a trustee makes a mistake or an alleged mistake, then most of the trusts that I work with, that I know, they would be revoked. It happens all the time. You make an improper investment, you make an improper distribution. As I said, the accountant did this in good faith. He calculated what the distribution was, and there was no damage to the charitable beneficiary. It was just a timing issue because the trust still owed that money. Even if they'd only distributed $100,000 in 2005, they still owed the money to the Holmans.
Right, so that's my understanding, is if you don't have enough to distribute, then you wait for a subsequent year,
And
you
then
kind of make it up, and then hopefully everybody's whole at some point.
Right.
So you
And
don't
then-
get dinged if you don't make your 7.5% distribution, and you just kind of wait until either, the end of the trust or you terminate the trust.
Right.
But you don't necessarily get your license or the exemption pulled.
Well, as I said, then every CPA would be shaking in his boots every time they did a calculation. What if they're wrong?
Right. And then the second thing, I do agree with you that the trust is a separate entity, created under a separate code. They file their separate tax returns. So they should have their own timing with regard to notices and statute of limitations.
Right.
So in this case, are you saying because they didn't notice the trust, the statute was not on the trust, but it was actually the individuals?
The statute expired as to the trust, and they never gave notice to the trust. Up to this day, they've never given notice to the trust. What they're arguing is that their preliminary determination letter and their notice of assessment should have been enough notice to the Holmans that the trust was being changed, its status being changed. But that's not the way the law works. I mean, it's a separate legal entity, and it needs to have separate notice and the procedure followed. Because look at it this way. They're saying it was a grantor trust based on their investigation.
Mm-hmm.
But grantor trust status, that occurs at the trust level.
Right, and you
It
have
doesn't
to
occur
designate
Right.
that you're creating a grantor trust through the trust documents,
Right.
filing, the appropriate, you
Right.
can't change
And
the document.
And people do it on purpose. It's another estate planning tool to have what they call a defective grantor trust, where you set up a trust for legal purposes, but you intentionally include a provision that makes you a grantor trust. And so defective grantor trusts are estate planning tools as well. But that's not what occurred here.
Right. Okay. That's all my questions for now.
All right. Question of the department, what are the rules as it relates to the distribution of income? What percentage is the amount? Just want to clarify. It's really
Sure.
not complicated.
Well, for a NIMCRUT, which is what appellant's trust was, you can receive the lesser of either the income of the trust or 7.1% of the trust assets. So it's not that appellants were entitled to receive a fixed percentage. They would have received the lesser of that trust accounting income or this fixed percentage of the trust assets. So there could, in fact, be years where they wouldn't receive anything because the trust had no income. Or they would receive, a very small amount, which was the trust accounting income. So I just want to clarify that it's not like they're entitled to receive 7.1% that has to be made up in other years. It can be made up if the trust has a large amount of income in a later year, then it can be made up to the extent of that income, but only to the extent of that income.
To the extent of that income being to the extent of the previous 7%?
Well, they can make up that 7.1% to the extent that there's enough income in that year to go back and make up for previous years.
Maybe if you place some hypothetical numbers on it, it might be clearer.
Okay. You have hypothetical numbers?
Well, are they allowed to, let me just change the question, are they allowed to toll the amount?
In what regard? Are they?
From year to year to year to year, and
Right.
at some point, take a large distribution in excess of the amount of the percentage allowed in law.
So, okay, so for example, if in year one, the trust had, so here, this trust is a good example. In 2003, they had, I believe, only loss. They had no income, so there was no income to be distributed. In 2004, they had the large capital gain. Now, had that capital gain not been capital gain, if it had been some other kind of income that could be attributed to trust income, then they could have taken that $1 million of income and say, okay, well, last year we should have, we could have distributed 7.1% of the fixed assets, so we can make it up in this year. But only if you have enough income to make up that amount from the prior year.
Is that the case in this case?
No, because the capital gain had to be allocated to trust principal, so it wasn't available for distribution to appellants who were the income beneficiaries.
And so when the ultimate distribution, how much was the ultimate distribution in excess of the allowable amount?
In 2004, it was $1 million in excess of what they should have distributed. They should have distributed about $130,000.
Okay. The curing of the self-dealing, California does not conform with the Internal Revenue Code. To what extent?
So we don't conform to the self-dealing rules. However, we do conform to Subchapter J. So all of the trust rule, the grantor trust rules, the rules regarding charitable remainder trusts, we conform to all of those rules.
If California was to use the Internal Revenue excise tax rules in this case, would the liability be higher or lower?
Well, actually significantly higher. If we were to conform to the self-dealing rules under Section 4941, they could have been liable for up to 200% of that excess distribution amount in 2004.
Okay.
Because they never repaid it. And, that's worth mentioning as well. Appellants never took any steps to remedy this excess distribution. They never tried to repay it. They never tried to seek judicial reformation of the trust to make it acceptable or to, have a court look at this and approve of it. And those are the kinds of things that you see happen on the federal level. There are many private letter rulings where people are requesting that the IRS look at their actions. And in pretty much all of those occasions, people, trustees requested approval from a court for their actions. They repaid any excess amounts to the charity or to the trust with interest, and they gave notice to the state attorney general, and none of those things happened here. And so that's really a big part of the problem.
Question of the appellant, is there a reason you didn't cure the excess distribution and the act of self-dealing?
Because we didn't get notice that it was a deemed excess distribution until 2009.
Because they weren't audited.
Because we weren't.
Your argument is the department has to advise you that the calculation is in excess of the 7%.
The
That you had a
IRS.
loss in the previous period, and therefore, when you went forward, that you had actually distributed the money as a capital gain. Therefore, you had made a decision therefore it wasn't income, and so it wasn't qualified. They had to advise you of that. Is that your argument?
No, it's not my argument. It's that the IRS never did that.
No, the Franchise Tax Board.
In 2009, the franchise did that. They said, you did something wrong, excess distribution, after the statute of limitation had applied to the trust.
So they should have advised you in 2004.
If that's what they were going to do, if they were going to tell us that there was an excess distribution. But once again, I go back to the practical numbers here. As she just said, there's a makeup provision. So if they had advised us in 2009, let's say within the statute of limitations, that this was an excess distribution, then we could have paid it back, or we could have taken a lesser distribution in 2008. But as I said, what really happened here was, let's assume that in 2005 we only took $130,000. that meant the trust from 2004 and 5, or 2003 and 4, still owed the Holmans $1 million. When the trust terminated in 2008, the trust had to pay that $1 million to the Holmans. That's the law. That's what the trust requires. So it was made up. What she's saying, it wasn't made up, it was made up. It's just a timing issue.
Yeah, the challenge here is that there's one word in all of that, if. It's not what happened. So, and as much as I appreciate that if there is a violation or non-compliance with the law, that it would be nice to have the Franchise Tax Board advise you that your calculations were wrong. They're not obligated to do that. It's incumbent upon the representative of the taxpayer to make the correct calculations. And I'd love to be able to review every return and advise folks in that regard.
Mr. Chairman, if I might, that's not what we're saying. We're not saying they have to review every return. We had a professional person, a CPA, calculate and used a reasonable basis for calculating the distribution. We had no reason to suspect that it was incorrect.
I appreciate that. Question of the of appeals. Just for a point of clarification relative to the non-conformity with California on the excise tax provision, can you just distinguish the two? And as it relates to this particular case, I mean, it appears that we're bouncing back and forth between the Internal Revenue Code and California law. And when we do that, I think it's appropriate when there's conformity. But to argue federal law that California doesn't conform to creates, confusion and a challenge. It's not, we're not bound by laws that we don't conform to.
That's correct. California does conform to the Section 4 Charitable Remainder Trust, 664. California also has the law the same as the grantor trusts as well. They're different. They're treated differently, obviously, for a grantor trust. They're sort of disregarded. So losses and gains will be reported directly on the personal returns. Whereas a charitable remainder trust, they're actually, under the law, provided tax exemption for a large amount of taxes, all federal income tax, not some excise tax. So there's a distinction between those two. When we get to facts where California law does not incorporate federal law, such as we're talking about 4941 with the self-dealing, the provisions for fines and corrections about that, it seems that we are talking about something that applies to federal but not to state, and so we should stick to statutes that we have available to us.
Right. So our analysis or decision is based on California statute.
Correct.
Gotcha. That's all for now. Member Harkey?
Okay. What I keep hearing is that the Franchise Tax Board is saying that you were a grantor trust. And I think you don't establish when you determined that. You just kind of determined it and did not let them know that you were considering them a grantor trust. Is that correct?
Well, we let them know that through, as appellants have said, the determination letter and our ultimate NPA, our notice of proposed assessment.
Right, so that was several years after. That was beyond statute of limitations, and it looks like it was probably, 2011?
2011 was the notice.
Okay. So you just assumed it was a grantor trust and we didn't have any sharing of information so that they could dispute it or they could go back and make corrections?
Well, we advised them of that, I believe, along before the notice was issued. So with our determination letter, we advised them of the fact that we were looking at them as a grantor trust. And it's also important to remember that the very same people who were, who did receive notice, the appellants as individuals, were also the trustees and were also the sole income beneficiaries.
Yeah, I understand that, but I'm not so sure at what point they knew you had considered them a grantor trust, because I'm not so sure that I know at what point you considered them a grantor trust.
Okay. I would probably have to go back and look through some of the audit correspondence to determine exactly when we first advised them of that.
Okay, I would like to have that information.
Sure.
From somebody. I need to know when you were advised that you were a grantor trust. Because I think a lot of this is statute of limitations in my mind. I totally understand your case that the FTB is making, and I, somewhat concur. But I've got a real problem with how this was communicated, and I think that makes a big difference on anyone's ability to correct the issue.
Sure.
For the taxpayer and advocate, when the house sold, you distributed $2.2 million.
No.
No, how did that go to?
When the house sold in April 2004, there were no distributions made. The $8.2 million went into brokerage accounts and stayed there.
Okay, now what I overheard is that the charitable foundation or whatever, the beneficiary of the charity that was the beneficiary did receive income.
They
or
received
received their
$2.2
portion.
million in 2008.
In 2008, so
Yes.
that was, okay.
And they weren't,
That was at the termination of the trust.
right, they weren't supposed to receive the charitable distribution until both the Holmans were died.
Right, I understand that. So
Okay.
that's- Okay, so you did pay taxes personally.
Yes.
In the total amount of taxes that you paid personally, what is the difference between what they're asking for and what you already paid? Is there, can you,
Well, $5.2 million they reported on their 2008 tax return. $1.2 million they reported on their 2004 tax return, excuse me for the mistake. But they paid tax on it. On the distributions they received, they paid tax on it.
I guess what I'm trying to do, I have a problem with the notice part of this, and I also have a problem with you having already paid the taxes and we're reassessing them again under a different form. So I'm trying to find out what equity here. Can you answer me? And I know this is probably coming off the wall, but I was, had a different opinion when I walked in here than I'm having now, and I'm kind of moving back and forth because I want to be sure I've considered everything. If they had been notified that they were a grantor trust, what would the difference in the tax liability have been if they hadn't made the because if they're a grantor trust, they wouldn't have had to distribute the $2.2 million in 2008.
Correct.
And are you assessing taxes on that $2.2 million as well?
We are assessing taxes on the amount of gain that was not already taxed. So it was a total capital gain of 3.1. I believe they paid taxes on 1.1, so it's about $2 million of capital gain that went untaxed.
Yeah, which sounds like the amount that they can't get back.
Right. Yeah, and I think that it's important to remember that part of the reason that the distribution to the charity was as large as it was is that they decided to terminate the trust early. So had they allowed the trust to run its term, it would have been, the ultimate amount that would have gone to charity would have been something closer to the amount that they deducted in 2002. And they did get that deduction back in 2002 for $820,000. So we didn't adjust that, and so it would be kind of allowing a double deduction to allow them to deduct the value of the remainder interest again in 2008.
Excuse me, we didn't deduct the value of the remainder interest. The trust distributed $2.2 million to the charity. There's no deduction. It was a tax-exempt trust. The Holmans didn't give them $2 million. The trust did. That's the whole point.
In 2002, the Holmans deducted $820,000.
Right, they were entitled to like 10%. 10% deduction in
Margaret.
2002, but 2004 is where the year that's kind of in question, so, yes.
No, I just wanted to.
I'm sorry, I know we shouldn't have back and forth, so I apologize. I have not manned this meeting correctly, but I'm trying to get the information. We're basically charging them taxes on the amount that they can't get back that they distributed, thinking that they had a charitable remainder trust. Because you're saying that when they distributed that, they may have thought they had a charitable remainder trust, but you don't believe they did. You believe they had a grantor trust, but they weren't notified. So therein lies my conflict.
Sure. Well, the only thing I can say to that is that the regulations under 664D did exist at that time, and it was pretty clear if you look closely at the regulations, the pre-contribution gain should not be allocated to income. There's nothing extraordinary or new about these rules. They were in existence at the time that they made the distribution, and they were advised as well.
And to the taxpayer, I have some experiences with trusts, and I know they come with a long list of instructions, and don't touch this and don't do that, and be sure you do this, and call us before you move, before you touch anything, before you decide to do anything, call us. And that's from my tax attorney. And so, you have to read those things. You have to be sure that you account properly. I guess there are some ways to correct it, but did your client not understand the rules? Because it seems like in your instance, we're in essence, blaming the CPA for a wrong distribution. You're saying it's not wrong, it's cumulative. But that being said, it was, you're relying a lot in your documents on CPA's validation.
Well, I wasn't involved at that time. All I know is that the CPA looked at the fact that the trust owed 7.1% for 2 years, and now it had sufficient income in his mind, because under Nevada law, capital gains can be called income, and this was a Nevada trust. And so he calculated that amount. Then the future distributions were all based on 7.1% of the remaining amount in the trust. So I'm not sure how we would have known that this was an improper distribution. And I think it's being missed here because the FTB keeps arguing about a grantor trust. That's a separate determination. It's not just because you lose your tax-exempt status that you automatically become a grantor trust. You have to meet certain criteria to be a grantor trust. So let's assume that the trust lost its tax-exempt status. That doesn't make it a grantor trust. They have to prove other things. And they're arguing that because we used capital gains as income, we made an improper distribution. But the 664 rules provide specifically that a trust does not become a grantor trust as to principal. So they're arguing that the capital gain was principal under 664, but then they're also arguing that the trust became a grantor trust. It may have become a grantor trust as to income, but it didn't become a grantor trust as to the $8 million in principal. They still haven't gotten over the hurdle of proving that it was a grantor trust. There's two steps here: revoke the charitable, and then how do you treat it if you revoked it as a charitable trust? You can just treat it as a irrevocable trust. It pays tax.
So Nevada law, you can use capital gains as income.
The trustee can make adjustment to the capital gains, or to the difference between income and capital gains, providing there's an adverse party. And in this case, there's an adverse party because there was a charity that was supposed to receive it. There's an attorney general that could enforce those laws. So they're saying that's okay. We just determined it's a grantor trust, and therefore none of the audit rules, none of the notice rules, nothing applies. That, to me, is just, at what point do they say, well, we can treat an entity as if it doesn't exist? That's not what the rules say.
And had you not distributed to that charity, you would have probably been sued, correct?
Yes.
I assume.
Exactly.
Because you had a party involved. Right. Okay,
exactly. Well, they certainly would have committed tax fraud.
Yeah, okay.
Mr. Runner?
Yeah, just to quickly, for FTB, did the taxpayer meet the criteria for a grantor trust?
Yes, they did. Under the grantor trust rules, Internal Revenue Code Section 677, a trust where the grantor retains an interest in the income without the consent or approval of an adverse party that is going to be treated as a grantor trust, and that's the problem here. While the charity was a remainder beneficiary, they had no ability to consent or approve to the distributions. So there was no adverse party exercising any kind of control over the distributions. And so this would be a grantor trust under IRC Section 677.
Let me ask the taxpayer's opinion and I got that.
There is an adverse party. There's a remainder beneficiary. That's like any trust where the grandkids are the remainder beneficiaries. That's an adverse party if the trustee takes a whole bunch of money out. What they're saying is because...
So the issue of a lack of an adverse party is the path to get to the grantor trust?
Right, the lack of the
Let me ask you, appeals. Is there an adverse party in this, in your opinion?
We may have to think about that one a little bit. Sorry.
Let me just add a caveat for me, Mr. Runner. Also presume that, respond that if the trustee is not the beneficiary, I think that may be a determining factor in your response.
Go ahead.
I would think the adverse party would be the remainder beneficiary.
Isn't that what the taxpayer is saying?
Yes.
Yes. So if that's the path, I'm sorry, I must have misunderstood. I thought you said
Sure.
the path to go to a grantor trust was that there was no adverse party.
So I think it might be clearer if I read IRC Section 677.
Maybe.
The grantor shall be treated as the owner of any portion of a trust, whether or not he is treated as such owner under Section 674, whose income, without the approval or consent of any adverse party, is or in the discretion of the grantor or a non-adverse party, may be distributed to the grantor or the grantor's spouse. So it's not just the existence of a remainder beneficiary who could be an adverse party. They have to be able to consent to or approve of that distribution, and they had no such control. In fact, I don't think they were even aware of the 2004 distribution.
Let me ask the opinion of the...
Well, you could say that about every trust, then, that leaves money to a remainder beneficiary. There is an adverse party under the law. They're saying that they have to be aware that they have a right to consent. They have a legal right to object. Any remainder beneficiary has a legal right to sue a trustee that makes an improper distribution. That's the adverse party they're talking about. So to me, in this case, you have a charity that is protected by the law, protected by the Attorney General, and if we had known that we needed under 676 to get their permission, we could have done that. But that's not what happened because we gave them the money.
Let me ask an issue in regards to this, because some of this seems to me is around the timing of the taxes paid.
Yes.
The argument that the FDB is making is that there was 2004, there's a distribution and taxes weren't paid. But
No.
the taxes were paid
Yes.
in 2008.
Yes,
Is that a fair understanding?
that's a fair understanding. And the taxes were paid in 2004 on the distribution.
On the distribution at that time, they believe the distribution was
Incorrect.
was incorrect.
Right, but the taxes were still paid. There wasn't a tax free to the taxpayer. It was, the sale was tax exempt. The sale was tax exempt. The only way you treat the trust at the time of the sale as tax exempt is if you say the distribution relates back to the time of the sale. And I have not seen any citation to law that says a subsequent act relates back to what the trust did in April of 2004. That's not the way the law works. You can't relate back subsequent acts to treat something as different at the time it did it. Otherwise, everybody would be worried about subsequent acts causing a transaction that you did in an earlier time to be treated differently.
Let me go back to FTB then. Why, again, so the calculation distribution was incorrect in 2004.
Right.
Do we not believe that they paid the proper, If that was the case, what was the taxes paid on in 2008 then, in your opinion?
So they paid taxes on what they received in 2008, which was, I believe, $5.2 million.
Mm-hmm.
What happened is that there's basically $2 million here that did not get taxed from the capital gain. And, you know, I think their argument is that ultimately that $2 million went to the charity. However, the problem is that they already took a deduction for the value of the remainder interest back in 2002. So we can't allow an additional deduction for the value of the remainder interest that actually went to charity because they already got to take it back in 2002. So the reason that it was even as big as it was, the gift to
Let me
charity.
ask you, did you take a deduction in 2002?
Yes, $800,000. But we didn't take a deduction in 2008. No. 2.2 million went from the charitable trust to the charity. The Holmans didn't take a charitable deduction, and there's no double dipping.
And how would you disagree with that?
I don't disagree with that. I'm just saying that if we had allowed an additional amount in 2008, that would be a double deduction. But there was $2 million of gain that went untaxed.
Okay, thank you.
Further discussion, members? I see appeals as chit-chatting. Maybe there's a clarification statement might be coming out of appeals without leading them.
What was the question?
In previous questions, I think they might want to
We're
share some thoughts.
Simply
So
reviewing
I
the
don't-
numbers, but nothing has come forth of it yet.
Okay.
Thanks.
Member Stowar.
I'm looking at your notice of action. The Franchise Tax Board previously assessed an accuracy-related penalty and then withdrew it. Can you discuss why it was assessed and why it was withdrawn?
Sure. The appellants argued that they had relied on the advice of professional advice, and we accepted that and withdrew the penalty on that basis.
So it was originally assessed for negligence, understatement, suspension?
Yeah, I think it was
One of
just the accuracy-related penalty, so it was just a misstatement of tax.
So it was withdrawn because you accepted it was advice of a CPA?
That's correct.
Okay. Oh, Mr. Runners. The purpose of California law is primarily to protect to ensure that the trust was set up, and one of the purposes is to ensure that the charitable organization gets its equitable share, and in allowing individuals such as myself and others to set up trusts, they have strict rules in which we have to comply with inherently to avoid allowing not a double deduction, but a double exemption, either the exemption by virtue of not paying the taxes or a direct charitable deduction wherein we have the here before us. It's very unfortunate that the decision that the appellant was not made aware earlier in this process and was not able to cure this, because if they were able to cure it ultimately and handle it properly, ultimately the charitable organization would have got more money, California would have got all their taxes, and we would not be here in front of us today. The CPA or accountant or advisor who prepared this just made a mistake. But I don't necessarily believe it's incumbent upon California to pay for his mistake. Further discussion, members? Hearing none, is there a motion? Moved by Member Stowell, take the matter under consideration. Second by Member Harkey. Without objection, members, such will be the order. Thank you very much for appearing before us today. The board will take your matter under consideration later on this evening and send you a written report of our decision.
Thank you.
Thank you.
Thank you.
Ms. Richmond?
Our next matter is item C, Sales and Use Tax Appeals Hearings. Item C1, New NGC Inc. Please come forward. This taxpayer is granted an additional 5 minutes for the presentation.
Mr. Njija, as the taxpayer sets up, would you please introduce the matter in this case?
Good afternoon, Mr. Chairman and members. I'm Jeff Njija on behalf of the Appeals Division. The appeal before you presents one unresolved issue, which is whether there is any overpayment of tax or tax reimbursement with respect to claimant's purchases of 5 specific materials which were used in claimant's manufacturing process.
Welcome to the board. I believe that the taxpayer has some exhibits there that they might want the members to look at a little closer, maybe, or it's your call. If you want to begin to distribute that now, we would pass that over to Ms. Richmond's team, and they'll pass it around to the members, but it's entirely up to you. I'm actually stalling a little bit to allow you to get comfortable and prepare for your presentation. At your convenience, please introduce yourself for the record and commence your presentation.
Thank you, Mr. Chairman, and good afternoon, members. I'm Joe Vinatieri on behalf of National Gypsum, or NGC. To my left is Linda Falcone from Ryan and Company, and to my nearest left is Dr. Sudaraman. And I just indicate to the board that I know it's a little bit late, and I've got a situation relative to a council meeting this evening, so I'm going to try to keep this as short as possible, but we need to make sure that we get all the facts on the record. So with that, good afternoon, and thank you for the opportunity to be heard. This case raises the important tax policy issue of the taxability of various materials that go into the gypsum wallboard making process. As you know, there are a slew of annotations going back to the 50s regarding whether materials are utilized as a manufacturing aid and subject to tax, or whether materials are, 1, physically present in the finished end product, and 2, whether the materials primarily serve a beneficial purpose, magic words, with the intention that these materials remain in the final end product. To be candid, the annotations seem to go back and forth with differing interpretations regarding differing materials with differing outcomes. But in the late 90s, new standards were mandated and new technologies were formulated resulting therefrom. So as such, it's important to have actual scientific expert testimony regarding our materials here at issue. And with that, I'd like to introduce you to Dr. Sudaraman, who possesses a doctorate in analytical chemistry from Baylor University and a postdoctoral fellowship in crystal growth kinetics from State University, New York, Buffalo. He's the principal scientist for National Gypsum and will briefly illustrate the beneficial purposes, there's the word again, for the raw materials in question via a PowerPoint presentation. Dr. Sudaraman.
Okay, thanks, Elijah.
And before we go any further, does everyone have the handouts in front of you?
Mm-hmm.
Yes, we do. Thank you. Dr. Sudaraman.
Thank you. At the outset, I would like to thank the chairman and the board members for your valuable time. And I would like to tell in advance, if I'm going too fast, or if you have any problem hearing my accent, please stop me, and please do so. In our wallboard production, the raw materials at issue are naphthalene sulfonate, acid tartaric acid, potassium sulfate, and alcohol ethoxy sulfate, and Versionax. Among those 5 products, acid tartaric acid and potassium sulfate, they are used in special boards. And all these materials become part of this final product and remains in the core, and this can be extracted and analyzed if you need it. If you go to the slide number 3, just want to talk about the basic reaction that's happening in our wallboard production process. We receive gypsum rock from our quarry. The gypsum rock is crushed, ground, and made powder, and heated to stucco, which is calcium sulfate hemihydrate. To that stucco powder, we add water, convert that to gypsum. This is called hydrolysis process, hydration process. And our board contains 95 to 97%, depending on the board weight. We make different kind of boards, different products. Depending on the board, 95 to 97 of the board board is made out of gypsum. And the 2% is the back and face paper, and the remaining is the raw material that goes into the into that board. And there is no byproduct produced in our process. And in the next slide, if I may, number 4, the final end product qualities. These materials are, as I say, integral part of the core, and it remains there and serves the following: purposes. Lower the board weight and increases the dry strength. When I say dry strength, that's the nail pull value. And sag resistance and moisture resistant, and improves paper to core bond. These properties are key properties we have to meet. Reason why, one, our customer demand these qualities in the board, plus ASTM and UL. ASTM is American Society for Test and Materials, and UL is Underwriter Lab. They have specifications for these materials, also certain requirements, quality requirements, we have to meet them. And in the absence of this material, there's visible flaws you can see on the surface of the board, like cockles, blisters, and those, and the surface is unsmooth, and also it makes the board core inferior, and also as a result of the strength goes down. These are all not accepted by our customers, who are the end users. The next slide, what I'm going to do, I'm going to talk about the raw materials purchased for resale individually. If I may draw your attention to slide number 6, naphthalene sulfonate is used in all board for the purpose of hydration and enabling the crystal to be longer and thinner. It's an integral part of the core, even after drying. It stays in the finished product and creates a strong core, which optimizes the dry strength, and also it maximizes the humidify bond. Without this material, the boards are susceptible to cracking and paper peel. That's not good. As I mentioned earlier, all the boards that we prepare have to meet the ASTM and UL requirements. That's very critical. If they don't meet, we cannot sell it. So it has to meet the ASTM requirements. And in next slide, acid tartaric acid, it can also be called tartaric acid. These goes into special board on high ceiling boards, and also hard boards, also in manufactured housing. This purpose of this material is to create water-resistant coating on the crystals. This material adsorbs to the surface of the crystal and prevent any moisture attacking the crystals. Without this material, this material stays in the core and create sag-resistant property, which is heavily demanded in highly humid conditions. For example, take Florida, Louisiana, or the coastal area where the temperature is 90 degrees and 90% humidity. These boards have to withstand those kind of very harsh condition. And it provides tensile strength and compressive strength to the board. And since it's absorbed to the crystal surface, it remains in the final product, prevent the crystal hydrolysis. In general, most of the minerals, they tend to dissolve in water. As we speak, these boards are all breathing. They are absorbing moisture and releasing moisture. And what happens, high ceiling boards, when they absorb moisture, the crystals tend to dissolve a little bit. In a high humid condition, it's much more worse. As a result of that, the crystal weakens, and then they can very easily break. The ceiling boards not only withstand the high humid condition, it has to withstand the gravitational force, because gravitational force is pulling. When the board is in horizontal, it's a different case. If it is in vertical, it's a different case. So these boards have to meet this ASTM requirement. In 90s, ASTM, they revised the specification. It used to be they allowed the deflection to be 30 millimeter. They decreased to 8 millimeter. And we have to immediately take that into consideration, make the board that meets the requirement. So that's why we add tartaric acid. We adsorb to the surface and then coat the surface and prevent the crystal absorbing moisture. As a result, it doesn't break or sag. And the next material is potassium sulfate. This is used in specialty board. We call it extra protection board. As you see, then two blocks from here in the stadium, you can see the purple board. That is the XP board. And it creates larger crystals in the core, and it stays in the core even after drying. In the finished product, it produces a moisture-resistant property of the core, according to ASTM, which allows the moisture absorption to be less than 5%. If it is above that, we cannot sell the board, because these boards goes into highly water traffic area, like bathroom, kitchen, and gymnasiums, where you have high amount of moisture you encounter. Also, this material improves the dry strength of the board. Without the material, board are susceptible to moisture, absorb moisture, and the paper can peel off, and also in highly humid and moist environment, mold and mildew can grow very easily. So it prevents the mold and mildew growth. And on slide number 9, alcohol ethoxy sulfate is used in all the board for purpose of incorporating fewer number of bubbles into the core. It stays in the finished product and significantly improves the board strength as we reduce the board weight. 20 years ago, board weight used to be about 1,800 pound per 1,000 square foot. Now it's about 1,400. That's what the customer demand. As we reduce the board weight, we have to maintain the quality of the board too. How do we do that? We have to use new technology, maintain that strength in the board. And it optimizes the strength and also sag resistant and bond due to very good paper to core bond. I will explain it in next slide how it works. Without this material, you could have seen one of the board that does not contain soap, that's very heavy. So we make heavy board. And it creates inferior core structure, which affects the strength and the bond. If you go to slide number 10, please bear with me. Look at the figure on your right-hand side corner. That's a normal board. We did calculate. In the core per square cubic inch, there are about 22 to 27 or 30,000 bubbles. And those are like 10 to 15 microns in size. In between those bubbles, look at the white surface, that's a solid mass. They are about 10 to 20 micron size width. When crack propagate at the paper, on the top, it can very easily propagate through the core, through the bubbles. Bubble walls are the weakest link. It can go to the bubble and then go to the next bubble, and it can propagate very easily and then crack the board. And if you look at the figure on the left-hand side of your slide, it has lesser number of bubbles. What we had done, we reduced the surface area of the bubbles, and also the mass in between the bubbles have increased. There's a solid mass. When crack developed on the paper, it goes to the first bubble. In order to go to the second bubble, it has to do more work through the solid surface to get to the second bubble. That means you have to apply more force for the bubble to propagate along the board. That tells you, that means the board strength is more. So that increases the strength of the board, the dry strength of the board. And also, if you look at the paper to core board, the brown line, that's the paper on the face and back. If you look on the right-hand side picture, the number of bubbles underneath the paper is too many. So under that circumstance, the paper can peel off very easily because the bond between the paper and core is very minimum, not too much, because too much bubbles, they can peel off very easily, and it can suffer a humidified bond. Whereas in the picture at the bottom and the left-hand side corner, the paper exposed to the solid mass. That gives more strength to the paper and core, the core, which gives pretty good paper to core bond. And lastly, Versanite. This is used in all board to create needle-shaped crystal. This ingredient remains in the core, and it's a chemical reaction. Unlike other material, it depends on the pH factor in the process. It optimizes dry strength and also improves the humidified bond and paper to core bond. In the absence of this, like I said at the early, you can see visible flaws like cockles and unsmooth surface and blisters. These things can be very easily seen when people paint the wall. And these are all no-no for our customers. We cannot sell those boards. And finally, in the appendix, if you look at the slide number 13 and 15, slide number 13 and 14, it gives you the overview or like a bird eye view of how the board is, the gypsum board preparation process. On the slide number 14 gives a picture how it is being made in the plant. So if you have any questions,
I think, Dr. Sudaraman, can we ask how much time do we have left for our presentation?
Probably less than a minute.
Less than a minute, so I'll reserve my remarks for rebuttal.
Thank you. Members, let us go to the department. The department has 10 minutes to make their presentation. And we'd ask that you commence with your introduction for the record, please.
Good afternoon, Monica Silva, and with me Lawrence Mendel and Kevin Hanks for staff. Staff agrees with the recommendation of the Appeals Division in this matter. Contrary to claimant's argument, its purchases of the 5 chemicals at issue were primarily for use in the manufacturing of gypsum wallboard and not for physically incorporating the chemicals into the finished wallboard, and therefore the purchases are not exempt from tax. The law provides that tax applies to the sale of tangible personal property to persons who purchase tangible personal property for the purpose of use in manufacturing, producing, or processing tangible personal property, not for the purpose of physically incorporating it into the manufactured article to be sold. Examples of such tangible personal property used in the manufacturing process include machinery, tools, and as relevant in this case, chemicals used as catalysts or otherwise to produce a chemical or physical reaction. The court in the seminal case in this area, Kaiser Steel, recognized the board's Regulation 1525 to be a primary purpose test. Thus, with respect to chemicals, if a chemical is purchased primarily to act as an aid in the manufacturing process, the purchase is taxable even if some portion remains in the finished product. On the other hand, if the chemical is purchased primarily for incorporation as a component of the finished product, the purchase is not taxable despite the fact that some portion may be lost or otherwise dissipated in the manufacturing process. In determining the primary process of claimant's purchase of each chemical at issue, the fact that the chemical has a beneficial effect on the finished wallboard is not determinative, since any chemical utilized by a manufacturer during the manufacturing process, regardless of whether it was purchased for use as a manufacturing aid or for incorporation into the final product, will necessarily have some beneficial effect on the final product, or why else would a manufacturer use the chemical at all? The test then to establish the primary purpose is whether the chemical was purchased primarily for use in the manufacturing of the wallboard that claimant sells, or alternatively was the chemical purchased primarily for incorporation into the wallboard to be sold, where the chemical serves some functional purpose as a result of its physical presence in the finished product. Based on claimant's description in its submissions of the manufacturing process, the 5 chemicals were primarily used as manufacturing aids for their chemical reactions in the manufacturing process. Let me now review each of the chemicals. First, the naphthalene sulfonate. According to claimant, the naphthalene sulfonate is added to disperse the solid particles to maintain a homogeneous slurry mix without any lumps and enables the stucco to hydrate completely during the drying process and forms a crystalline structure which helps make the wallboard stronger. That's basically a high-tech separator, a manufacturing tool in a chemical form. Yes, we certainly accept that this dispersing of the solid particles increases the overall board strength and makes for a better wallboard for the consumer, and yes, we accept that there's a measurable amount of the naphthalene sulfonate left in the final wallboard product, but what is left in the final wallboard is as a result of the use of the chemical during the manufacturing process. Based on claimant's description of the use of the chemical, the primary purpose of the naphthalene sulfonate is the chemical reaction that disperses the solid particles in the manufacturing process. One way to look at it is that it could have been a piece of machinery that dispersed the solid particles, but obviously this is a high-tech process. What the naphthalene sulfonate clearly does, its primary purpose, as claimant has described, is to act as a dispersing agent, and that happens in the manufacturing process. That is its primary purpose as a manufacturing aid, and tax therefore applies to its purchase. Now looking at the tartaric acid. According to claimant, the tartaric acid is added as an ingredient to the slurry and subsequently chemisorbs to the crystal surface. As a result of this structural modification, the tinsel and crystal are increased, causing an improved resistance sag. As I understand it, this process keeps the wallboards from sagging. As claimant has described, the coating prevents the dehydration of gypsum during the drying process. But it's not the tartaric acid's presence as an ingredient in the finished product that keeps the board from sagging or create some other essential use. It is instead the use of the tartaric acid during the manufacturing process, whereas claimant has explained it chemisorbs to the crystal surface, and that prevents the dehydration of the gypsum during the drying process. The fact that some measurable amount remains in the final product and has an overall beneficial effect on the final wallboard isn't the determining factor. Of course, the use of tartaric acid is going to have some overall beneficial effect, as does every chemical used, or why would claimant use it at all? What must be examined is where is its use of primary benefit. Here it is in the manufacturing process when it chemisorbs to the crystal during the drying process. Once it does that in the drying process, the tartaric acid has fulfilled its purpose. It is not an essential ingredient added for incorporation to the final wallboard. As claimant has itself described, its use of the tartaric acid was primarily used as a manufacturing aid during the drying process, and tax therefore applies to its purchase. Now looking to the potassium sulfate, commonly referred to as potash, according to claimant's description, potash is added as an ingredient to increase the supersaturation of the slurry mix. As a result of the addition, the rate of nucleation increases, which increases the stucco hydration rate and provides the snap set. In addition, it changes the morphology of the gypsum crystals, making a smaller surface volume. It serves to swell the gypsum crystals and promote crystal growth. The patent claimant provides for this process is potash as an accelerator. The potash accelerates the crystal growth. As claimant has provided, if potash is not added, stucco hydration is delayed and this wallboard does not set before entering the kiln. Therefore, based on claimant's own description, the use of the potash is in the manufacturing of the gypsum. It accelerates the crystal growth. Once added, its use is completed in the manufacturing process. Its presence is a result of the chemical reaction, the acceleration, caused by its use in the manufacturing process. Therefore, its primary purpose is as a manufacturing aid, and its purchase was properly subject to tax. Now looking at the alcohol ethoxy sulfate. Claimant has explained that the alcohol ethoxy sulfate foams in a manner that produces large bubbles. Therefore, as I understand it, its primary purpose is to make bubbles in the manufacturing process. Once that is completed in the manufacturing process, the chemical's presence is not a primary ingredient with an essential function in the final wallboard. Its use as a high-tech bubble-making machine has occurred in the manufacturing process as a manufacturing aid. We certainly accept that the use of the chemical has an overall beneficial effect in that it causes a lighter wallboard, but its contribution, its primary use, is its bubble making in the manufacturing process. Therefore, as a manufacturing aid, the sale of the alcohol ethoxy sulfate was subject to tax. Lastly, the Versanex. Claimant has described the Versanex as a chelating agent that bonds with calcium. The addition of Versanex as an ingredient helps to reduce lump formation by controlling the rate of nucleation without affecting the stucco hydration rate, which, as claimant has further explained, it is used as a set retarder in the wallboard. It slows the hydration of the stucco and controls the fluidity of the slurry before the setting process. Once again, this chemical is used in the manufacturing process for the chemical reaction that occurs in order to help reduce lump formation because lumps impact the structural integrity of the finished wallboard. Claimant doesn't want lumps to form during the manufacturing process, so Versanex is added to slow the hydration of the stucco before the setting process. Therefore, the primary use of the Versanex is as a chelating agent in the manufacturing process. It is not a chemical added as an ingredient in the final product. As claimant has described the use of the Versanex, it's not an essential ingredient in the finished wallboard, and it does not provide a beneficial effect as a result of its physical presence in the finished wallboard. Instead, while a measurable amount of the Versanex can apparently be found in the final wallboard, the chelating is completed in the manufacturing process before the setting. Therefore, the primary purpose of the Versanex was as a manufacturing aid to slow the hydration of the stucco, and therefore the sale of the Versanex to claimant was a taxable sale. In conclusion, we are in agreement with the recommendation of appeals that the claims for refund for the 5 chemicals be denied.
On rebuttal, please.
Yes, at issue today is the plain language of Regulation 1525. And let me read you A. It says, tax applies to the sale of TPP to persons who purchase it for the purpose of use in manufacturing, producing, or processing TPP, and not for the purpose of physically incorporating it into the manufactured article to be sold. Examples of such property are machinery, tools, furniture, office equipment, and chemicals used as catalysts. Chemicals used as catalysts or otherwise to produce a chemical or physical reaction such as production of heat or the removal of impurities. So the first question here is, whether the materials in question were purchased for use in the manufacturing process and not for the purpose of physically incorporating them into the manufactured article to be sold. Now, you just heard testimony from Dr. Sudaraman that the materials in question were indeed fully incorporated into the manufactured wallboard to be sold. All the material was physically incorporated with none of the materials escaping or dissipating in the process. They all went in. Second, Section A gives several examples such as chemicals used as catalysts to create a chemical or physical reaction such as the production of heat or removal of impurities. Here, the materials in question do neither. There is no chemical reaction in any of these except for Versanex in certain circumstances. So there are no chemical reactions. Secondly, the materials here, there is no production of heat, as is specific in the regulation. A, there's no removal of impurities. So the materials in question flunk the specific words of the manufacturing aid test of Section A. But we got to look at the second test, which is B. And it says tax doesn't apply to sales of TPP to persons who purchase it for the purpose of incorporating it into the manufactured article to be sold, as an example, any raw material becoming an ingredient or a component part of the manufactured article. And the word components, very important. B is precisely the point. As you heard from Dr. Sudaraman, the materials in question are indeed a component part of this finished wallboard that we're looking at. It's all around us here. It's everywhere. And the materials we're talking about provide critical characteristics to the final end product that's demanded by consumers and the ASTM standards that Dr. Sudaraman talked to you about. No, and UL, Underwriters Laboratory. So earlier I referred to the confusing and disparate nature of the various and very old annotations for property used in manufacturing. And the staff in the board summary states, and they said, quote, there is no evidence that the materials provided a benefit. There is no evidence. Well, I choose to strongly disagree. So I want to go to one specific annotation I think that's very helpful here, and it's annotation 440-1853. It's called determining factors. And it says this. It says, in determining whether an item was used in a manufacturing process or became part of the finished product, there are two factors to consider. First is whether the product is in fact physically present in the finished product. And if so, a second factor is what is the function of the item in the finished product. If it primarily serves a beneficial purpose in the finished product and it was put in with the intention that it remain, it may be purchased for resale, even though it may have served a secondary purpose, such as a catalyst. And that's an annotation from 1992. So let's apply that annotation, staff's own annotation, to the facts here. First, is the item present? Are these materials present in the finished product? The answer is yes. Everyone, including staff, agrees with that. Second, what is the function of the item after the product is finished? And the annotation provides, quote, if the item still serves a beneficial purpose, the item is a component part of the finished product. So in the annotation at issue were painting materials that were applied to automobiles, and because the materials in general improve the durability and protective property of the paint, it was held that the materials became, here's the word, a component part of the final product. So now you've heard ample testimony from Dr. Sudaraman regarding, he used the actual words durability, same as in the annotation, the lighter weight, the moisture resistant properties, the imparted strength to the finished wallboard as a result of these materials. So therefore, in this very annotation, the materials herein meet both tests and they may be purchased for resale. And there are other annotations such as 440.2150, and it says, quote, incorporated for the primary purpose of imparting desired physical characteristics, close quote, that are in accord with our position. Now, let me make one last statement regarding Kaiser Steel. This case is not Kaiser Steel. We all know the case. Kaiser attempted to purchase various materials without tax that were used in part of its steelmaking process, and as Rate 1525 indicates, acting as a catalyst to produce a chemical reaction for the purpose of removal of impurities. Once again, those impurities came out in the physical form of slag, which was then sold to other people. And the slag was a byproduct of that manufacturing process. Hence, Kaiser was all about slag, a byproduct. Here, there's no byproduct whatsoever. None. None. So many of the staff annotations that we see are based upon the Kaiser Steel case set of facts. But those facts are inapposite with our facts, and the court was very clear. Quote, "It is evident from the record that Kaiser's dominant motive or purpose in purchasing the materials in question was to use them in removing the impurities from its molten steel, a purpose other than resale." So much of the staff position relative to our materials is actually predicated on this byproduct mentality that we find coming out of Kaiser, and it must be rejected because it doesn't apply to the facts of our situation. And I might just add that California is the only state where we pay tax on materials. We're the only one. There's 18, and that's 18 states. We're the only one. So I just want to say in closing, this is an interesting case. It's a case where I don't think the annotations, I don't think the staff has stayed up with the changes in technology standards, and I think it's something that the board needs to look at very closely, and I would ask the board to look at using the two-pronged beneficial purpose test of the other annotation that I just talked about. Thank you.
Discussion, Member Runner.
Yeah, let me, the chemicals that we're dealing with here, we would identify those as essential to the, for the sale of the product.
Yeah, absolutely.
Can they be replaced? Could you replace one of the chemicals with a machine or a tool?
No.
No.
And the chemicals themselves are all fully a part of then the end product.
Yes.
Let me go back to the annotation that they used, the 1992, in the issue of present and function. Why doesn't that annotation apply here?
I'm sorry, which number was that one?
It was their 1992 annotation. I don't. What was the number on it?
440.1853.
Yeah. Why wouldn't that annotation apply?
In that one, it involves certain items purchased and used in applying paint to automobiles,
Okay.
specifically hardeners and catalysts. As described, they remain in the final product, and in the final product, they provide protection to the paint by helping the paint film retain gloss and prevent chipping, and in general, improve the paint films. This is not similar to the chemicals in the current matter. Here in the final wallboard, claimant has not provided evidence that the chemicals act in a manner in the final wallboard. What the chemicals do, their purpose, to diffuse, to accelerate, to make bubbles, that all occurred in the manufacturing process as a manufacturing aid. As the chemicals sit in the final product, they've been used. Yes, some measurable amount remains, but their primary use was completed in the manufacturing process. We're not saying they don't overall also have a benefit. We wouldn't use them if they didn't have a benefit. We recognize that.
Yeah, I'm trying to see if we're nuancing that a bit too much. Okay, so in this particular paint issue, it was applied to the issue that it made it harder to chip. Is that what you're telling me? The paint stayed better?
Like a paint, like the paper, like the rock, like,
Right.
you know, an item that's actually functioning in the end product.
Okay, well,
as
let me
opposed
ask,
to a
which one of these
manufacturing aid.
chemicals do not function in the end product?
I mentioned tartaric acid. It coats the crystal surface. In a highly humid condition, the crystals can absorb moisture and weaken. So this protects the
So the issue of mildew, they keep mildew. They keep-
potash.
So why isn't that the same? Why isn't that the same in terms of being able to keep it dry, mildew, strength, all those issues? Why isn't that the same as function in regards to paint that doesn't chip as easy?
Well, as claimant had described the products, is added as the ingredient in the slurry to do the chemisorb in the crystal service. Its function, its use, its aid is in the manufacturing process. That's how it's described by claimant.
So you would interpret that as not, as being able to, the function itself, the function, that clearly has function after the product's done, right? I mean, it made it stronger, it made it drier, so it has a function.
It does provide, each one of these chemicals provides an overall benefit for their final product.
A function in the final product, and it's present.
Yes.
Well, it is present, but its use, its work, what it does is as a manufacturing aid in the manufacturing process.
Okay, let me
Which
go to
then
these.
lends
Again,
itself to the overall benefit.
Yeah, I don't know. To me, I think we're trying to nuance that a little too tight. Let me ask you about the issue in regards to, you mentioned in the discussion about something that could be done with a tool or a machine as you were going through that, bubbles, they could be done by a machine. Is that true? Could you actually create a machine that would create that
Well,
kind
at
of?
this point, as claimant has said, I mean, we're now very much involved in high-tech processes. We don't do it with little bubble makers like kids do. We use chemicals. And we recognize that. We recognize that now chemicals are used as manufacturing aids. They're catalysts. They perform functions that otherwise in some
Let me ask,
form
are these-
either didn't happen or there now no need for machines. You use a chemical.
Catalyst is a key word here, isn't it?
It is one of the words, catalyst or otherwise.
Are these catalysts that are in there? Well, how would you define catalyst?
Catalyst.
Taxpayer.
Catalyst, if you say like you have two reactants,
Mm-hmm.
and then I want the reaction to go forward, I add a catalyst, and you get the product, the catalyst, I can take it out and then reuse it again. That's catalyst. Catalyst, it doesn't get destroyed during the chemical reaction. It can be reused for further reaction, proceed the reaction. That's the catalyst. Catalyst does not get destroyed during the chemical reaction. In chemistry, chemical reaction, A plus B gives C plus D, totally different product. As I say at the beginning, stucco, when added water added to that, stucco is calcium sulfate hemihydrate. When added water, hydrolyzed, and gives a totally different product, which is gypsum. Gypsum is calcium sulfate dihydrate.
Okay.
So that's the chemical reaction.
Okay, thank you.
I just have
Member Stowar.
just a couple of questions. To the petitioner claimant first. On your PowerPoint presentation, page 7, acid tartaric, you indicate it stays in the finished product and it prevents hydration of gypsum.
Yeah.
What is it preventing the hydration?
Normally, these boards breathe as we speak. They absorb moisture and release, depending on the temperature inside the building, and then in between the cavity, in the studs, they are breathing. And in the ceiling, the same thing. In a highly humid condition, like in Florida, or like in the bathroom, or in a kitchen, or where you have too much of water, the water content, high humid content. So the paper is not like plastic. It is porous. It absorbs moisture. And when the moisture in a high humid condition, when it touches the crystals, as I say, minerals tend to dissolve a little bit in water. As this amount of water or the humidity, they tend to affect the crystal. When the crystals weaken, then they're going to break, and then it's going to sag. So the tartaric has absorbed to the surface, prevent the moisture touching the crystal, absorbing the crystal.
Okay.
Absorb, yeah.
So when someone buys that product and they build a building, they build a house that's in this area, is it happening now?
Yes. As I said, the question is the sagging?
No, I'm just trying to get an understanding that, is it preventing it once a customer buys a product and they build whatever they're building, because you have this acid in the product, is it continuing to prevent hydration? Like, I'm just trying to see, does it only do it during the manufacturing process, or does it continue at the end of the product as well?
It continues doing that. Okay. This is, as I said, this goes on special products we call high-strength ceiling board, and then in the HUD board, and also manufactured housing board. We don't know where they put the manufactured housing. So in a highly humid condition, they tend to sag. And the ASTM revised the specification that reduced from 30 millimeter to 8 millimeter. So in order to meet that, we add tartaric acid, which coat the surface and prevent the sagging. It continuously happening, yes.
So, and then my next question is on page 8, which inhibit mold and mildew growth.
Yes.
Is that happening now after the end product?
It prevents, yes. In a normal board, that's also a special board. These boards goes into bathroom, kitchen, gymnasium, swimming pool, those kind of areas. They use this board where you have humid condition, too much of moisture, the perfect condition of a perfect humidity and temperature, mold and mildew can grow like crazy. So this board prevents the mold and mildew. That's why they use the XP board in the arena. Here you can see in
the New Kings Arena.
So those boards has the ability to prevent mold and mildew properties. These are special boards.
Okay, thank you. To the department, at least for those two, do you not see those as having a functional use at the end of the product?
I think the overall benefit that they are to impart, it definitely is in the final product, but what it did to do that, its use is in the manufacturing process. For the potash, it's a accelerator. It accelerates crystal growth. It makes the crystals grow. That's a manufacturing aid. And the other one was the tartaric acid. And again, I agree that it improves the resistance and I see the overall end benefit, but I don't understand that its use is actually being used in the final product. It's the chemical reaction in the manufacturing process is where it's used.
Okay. To the department are two appeals. There's two appeals. There's a comment in the hearing summary regarding the tax reimbursement and use tax. And there may be a need for a re-audit.
Yes.
To identify the tax deduction. Will you speak to that, please?
Yes, if the taxpayer were to prevail on all or some portion of these chemicals, it would be entitled to a claim, it would be entitled to a refund of the use tax that it directly reported to the board, use tax that it would have paid to out-of-state retailers. Any tax reimbursement paid to California retailers is a tax-paid purchases resold deduction that would be available to offset any remaining tax liability after the refund of the use tax and any other sales tax liability that they had. We're not able to discern how much of either claim is tax-paid purchases resold deduction or use tax. The concern would be over-refunding a tax-paid purchases resold deduction when there's no liability to offset that against. And a re-audit would allow the department to go in and look and verify tax-paid purchases and the amount to allow, if any.
Okay. Thank you. Thank you both.
Question of appeals. There's language in the annotations that refers to a dual purpose. Can you shed any light on the dual purpose concept?
Sure. That's the crux of these cases, is that there's a use of these chemicals in the manufacturing process, and there's a benefit to the final product. And so we've got a manufacturing aid that is present in the final product. The question and the task for the board, and it's a question of fact, is there a functionally, does the presence of the chemical in the final product cause a functional benefit? In other words, by its presence, is it serving the purpose? The example for these sheetrock boards may be if one were to have a chemical benefit. I don't want to say chemical benefit. It's undisputed that it's used in the manufacturing process, whether it's a catalyst, chemical, or otherwise. It's used in that process. If it also made it, say, glow in the dark in the final product, there's a functional purpose in the final product by its physical presence being served, as opposed to being merely inert and present after the process was done. And that's the essence of these cases. The two chemicals that were mentioned, the tartaric acid being one, I'm hearing two different things. One being that during the process of creation, it creates the crystals that are water resistant. I don't know, and I'm not cross-examining, but my question would be, is the tartaric acid by its presence, so let's say it's sprayed onto the wallboard after the fact. Is that making it water resistant, or is it the result of that process that made the chemicals change somehow such that the chemicals in the final product is what makes it water resistant?
Well, maybe the department or the appellant can answer that question. Let me rephrase it so it comes from the dais, but clearly the chemical, well, not clearly, but from my perspective, the chemical causes, well, how about this? Can you share with us what happens, what does the chemical do to the, how does the two chemicals interact, and what happens when they do? When they're mixed together in the manufacturing process, what happens to the crystal? What does the chemical nephenine sulfonate do to the wallboard? Or what does it cause it to do?
Yeah, like I say, it makes a hydration to go efficiently, and enable the crystals to be longer, a needle-shaped crystal.
So
which in part
it causes the wallboard to separate during the manufacturing process.
The tiny particles.
Tiny particles. That chemical causes it to separate.
Yeah, but it's not a chemical reaction.
I'm not debating that, but that the function of the chemical at that point is to cause it to separate, and then once the chemical interacts and it causes the other chemical to separate, what happens then? Then it goes to, what's the next phase? Then it goes to the curing process?
Yeah, it goes to the drying process.
And what does the chemicals do in the drying process? It just goes back to its natural, the drying process. What's the purpose of the drying process?
The drying process, we are adding excess amount of water.
And what's the purpose of it?
The purpose of it is we want a pretty good fluidity so that we can fill the envelope. If you look at one of those figure on 13, how the board is being made, we are pumping about somewhere between 1 to 2 tons of material.
And then once you're finished with the curing process, does the product itself at that point, once it's finished, does it meet all the specifications?
Yes. Yes.
It's harder, it's more water resistant at that point.
Yes.
The chemical that remains in there, is it there in the substance, or in the fact that it's there in substance, does it continue to do something?
It remains in there. For example, take tartaric acid. It's absorbed to the surface of the crystal and makes the crystal not to absorb moisture and then weaken. So if I don't have tartaric acid, then I cannot use it on high-strength sealing. That's why we call high-strength sealing board. And that particular board has to have tartaric acid to give that particular property that we need.
Question of the department. I think what the taxpayer is saying is that the tartaric acid, when it's combined with the crystal, it causes the crystal to elongate. And in doing so, it creates a metabolical structure that is water resistant. And that happens in the manufacturing process. But what also happens in the manufacturing process is that it attaches to the crystal. Correct me if I'm wrong.
Absorb to the crystal.
Absorbs or attaches?
Adsorb. AD.
Adsorb. Okay.
Adsorb.
Adsorbs to the crystal and forms a layer that in and of itself enhances its stability as far as water being water resistant. If that was to occur, what would be your view?
It's a new fact to me that it becomes its own layer of something.
Well, let's make sure that is a fact.
Because at first I thought you were talking about the naphthalene sulfonate, so I thought we sort of.
We've got to. I'm just talking about the tartaric acid now. I don't want to state that as a fact, and I don't want to put it on the record as a fact. I'd rather ask the question: is that what happens to the tartaric acid? What's its metabolic form and purpose after it's going through the curing process?
They adsorb to the surface of the crystal and remains there.
And given that the taxpayers testify that it absorbs to the crystal and it remains there, does it serve any purpose?
Yeah, this serves the purpose. It creates a sag-resistant property. It doesn't allow the board
It contributes to it. In and of itself, it's not going to stop it from sagging. It just contributes to it, possibly?
If I don't have that, then I have heavy sagging.
So the original chemical process that caused the crystal to elongate, strengthen, be more water soluble, that in and of itself is not sufficient? That serve no purpose in
No,
doing that?
any minerals, there's a solubility product. That's a pretty constant. So they tend to absorb moisture and tend to be weakened. Once it weakens, then it's going to break down, crack the board. So this adsorbs to the surface and prevent the water getting into the crystal, so that the crystal is safe and it doesn't allow the board to sag.
And is that part of the breathing process that you talked about?
Yeah, breathing, yeah. So as I said, it is in a high, this is used on highly humid condition area. This is like a special product. Like I say, it goes into high-strength ceiling boards, hard boards, and manufactured housing boards.
So it sounds to me as if the testimony is that it serves a dual purpose, and that this particular chemical serves a dual purpose, if it does. What is the department's view?
That the primary purpose is as a manufacturing aid in the manufacturing process, where it chemosorbs to the crystal surface, where it makes the crystals.
And so there would be no allocation where it's being used here and used here?
If something actually is a manufacturing aid and also has a function in the final product, that its actual presence in the final product is as some sort of hardened coating, then we would consider that to be a component part. However, if the function of the chemical is, for instance, in the drying process, by either retarding the drying process or accelerating the drying process to make sure all of the moisture is removed from the final wallboard, then we would say that the function occurs during the drying process, during the manufacturing process, and therefore it's a manufacturing aid. But if it is a dual function where there is actually a benefit by its presence in the final product, then it would be a component part.
If I may clarify, what he said is that if the board were to find that these chemicals served a functional purpose in the final product by their presence, we don't get into whether it was 5149 or 8020 or 99-1, any amount of functional purpose in the final product, so long as it's being served by the physical presence of that chemical in the final product, which is the Kaiser Steel thesis that we've all followed. The board has historically treated that as a purchase for resale, even if there's a significant component that is manufacturing. So I think what you perhaps were meaning regarding the dual purposes, any amount of that secondary purpose, so long as it's for resale, would qualify. So the question before you answers the whole thing.
To the department has any evidence that the testimony is that it forms a protective layer, is not what happens in the chemical, I'm going to call it a chemical reaction process, because in my mind, a reaction is a reaction, whether it combines, separates, moves, any of that.
We are relying entirely on the material provided to us
By the
claimant, and looking at that material and reading whether there is a chemical reaction, as you say, during the manufacturing process, or whether its actual presence in the final product is a presence that imparts a benefit into the final product as a component, as opposed to simply something that enhances the manufacturing process.
A question of appeals, my understanding in the, just to go back to, I just need the clarification, in the Kaiser Steel case, the board did allow a apportionment of the of the material and the cost and so forth. Is there any distinction in the Kaiser case from the notion or the legal theory of apportioning the amounts used? And part of the challenge we have here is the argument that nothing happens in the manufacturing process, when clearly it does. I mean, there's a reaction that takes place, and the chemical serves a specific purpose during that manufacturing process.
My understanding is that the Kaiser Steel Court did not allow any kind of allocation or bifurcation. All of that was purchased, the aluminum was for use as manufacturing aid.
I think what it said is that if an allocation, if an allotment can be determined, then they would say that it would be allocated. But I think in the Kaiser Steel case, they just wasn't able to make that determination.
But the way this board has interpreted it is that, and I'm repeating myself, so I apologize, but we technically don't allocate. If you were to find that there were some portion that was used in the final product by the benefit of its, by function of its presence there, we wouldn't engage in any kind of an allocation. We've allowed that as a sale. I think that the paint annotation is an illustration of that. No doubt it had a manufacturing component, but by its presence in the final product, it also served the purpose of making the paint harder. That was allowed as a sale for resale.
So might I respond, please? Let's get to the bottom line here. Some of us have been around a long time. Maybe not that long, come to think about it, but there's always been, when it comes to manufacturing aids, a bias, in my opinion, on the part of the staff, that if there is a chemical reaction, and once again, there's not a chemical reaction here except with respect to Person X. There might be a physical reaction. There's no chemical reaction. But the staff has always said, if there is a chemical reaction, it's a manufacturing aid. If there's a chemical reaction, there's a manufacturing aid. That's always been the bias. And the problem is, with that bias, that it does not comport with the reality of what's been going on currently in terms of how there's been technological changes. And
not to interrupt you, Mr. Vinatieri, but the discussion relative to our tartaric acid is kind of going in your favor.
I understand that, but okay.
I mean,
I'm sorry, it's just very frustrating because
here's a follow-up question to the historical debate, is that if you took the tartaric acid and injected it at the end of the process, would it have an effect? The answer is probably no. That it has to be injected in the beginning in order to accomplish the end objective, which says that something happens in the manufacturing process. The law, as the Kaiser case, draws a distinction saying that if there is some allocation there, you can make an allocation. Our legal staff has advised us that we don't do that. The board traditionally has not done that. So if you can establish a beneficial purpose at the end, irrespective of what happens in the beginning, it could be 90%, but there is a clear purpose and benefit at the end, then you've established a sale for resale, which I'm at somewhat of a disadvantage on the tartaric acid because the department is not able to say that that chemical forms a layer and it attaches and it has a soluble value, but the taxpayer has testified that it does. In that situation, I believe I'm bound to believe the evidence before me, which is evidence provided by the taxpayer, that it does. The other chemicals I am familiar with and did spend quite a bit of time with them, and they just seem to be there. They don't seem to really accomplish any objective. The objective that they accomplish, the nephenate and sulfonate, is separated. It continues to be separated. It's just to withdraw it would cause a breakdown of all the chemicals, and as well as the potassium sulfate, the alcohol ethylene sulfate, and the versanine. So, but the acid tartaric seems to have some kind of benefit. Anyway, Member Harkey.
Thank you. I would like to point out that tartaric acid can be purchased for resale for beer and wine. So I think we've got a pretty well-established record on toporic acid.
And what does it do to the kidney?
No, I know, who knows, but it can be purchased for resale. So I'd like to go to I can't pronounce it, naphthalene
Naphthalene sulfate.
Naphthalene sulfate. There you go. I was trying not to lisp, but you need to pronounce that. Okay. Looking at the annotation, which is the one that we are all reviewing here, annotation 440.1853. First is with the item is in fact physically present in the finished product. And it is, I believe. The second factor is what's the function of the item in the finished product. If it primarily serves a beneficial purpose in the finished product and it was put in with the intention that it remain, it may be purchased for resale, even though it may also have served a secondary purpose as a catalyst. So it doesn't matter if it served as a catalyst. It's like, what was its intent? It's used for the purpose of hydration in your display, enabling the gypsum crystals to be longer and thinner. It optimizes the dry strength and creates a stronger core. I believe I asked you, or I'd like to ask you, if you remove it, what happens?
This is the
Okay,
board without.
May I see that board? Bring it up here for the. So, looking at this, I can clearly see it's wrinkled and the paper's kind of fraying, and it doesn't look like anything you would want to sell. And one of my questions on a lot of these is, can you take them out? If you can take them out, then they're probably not part of the permanent item, which I believe that this in itself kind of displays that it needs to be in there to form this board. So how does the department respond to that?
I agree. It does improve the board. We don't dispute that. But it doesn't do that by its presence right now sitting there in that board, in the finished product, like, say, the paper or the rock. It performs its function in the manufacturing process and is added to disperse the solid particles to keep the slurry mix without lumps, because they don't want it to look poor. Nobody's going to buy it. So I'm not disputing that it doesn't have an overall benefit. Certainly everything that they put in this product has an overall benefit or is required by their standards.
Well, but it says in this annotation that if it primarily serves a beneficial purpose in the finished product, and if it was put with the intention that it remain, does it primarily serve a beneficial purpose?
In the finished product? I would say it doesn't, sitting there in the finished product.
Okay, it's out here. So this is without it. So with it, it's a flat board, I believe, just, a saleable board. So I do believe it serves a purpose here. And even though it may have served a secondary purpose as a catalyst, I'm not a scientist, so I really don't know if it was a catalyst or it wasn't. We assume it had some way of elongating. They say it enables the gypsum crystal to be longer and thinner. So there it is with it inside, and here it is if you remove it. So this truly is not a product that you can use. This is, and so my contention is that it is actually a part. It's made with the intention that it remain inside. So I think on that case, is it physically present in the wallboard? Yes. Does its presence in the wallboard serve a beneficial purpose? Yes. It optimizes strength, maximizes strength between paper and core. So I would like the board to consider the potential of this product as well, or this chemical as well. I think we kind of hit on a little bit of potassium sulfate. Okay, potassium sulfate is the product that is for the boards that are for moisture?
Yeah, moisture. Yes.
Moisture. So for that, is it physically present in the wallboard?
Yes.
Does the presence of potash in the, or excuse me, yeah, does the presence of potash in the wallboard serve a beneficial purpose? And what is that beneficial purpose?
It reduces the moisture absorption because the ASTM required minimum 5 or less than 5% absorption, so it meets that requirement.
Okay, thank
And
you.
also, those boards are all mold and mildew, prevents mold and mildew growth.
Now, I am having a problem reconciling the Versanex. Does it have a physical presence in the wallboard? Yes, it does. Does the presence of Versanex in the wallboard serve a beneficial purpose? I think we've got a problem saying yes to this. It causes a chemical reaction. This is one of those products that really does cause a chemical reaction, and so its purpose is really in the manufacturing process. So I would have a hard time supporting that. The only one left is the alcohol ethoxysulfate. Okay, this is the one with the bubbles. So it's used, explain to me how that works. Taxpayer, Joe, either one of you.
Currently, our customer demand lower weight wallboard. As I said, it used to be like 1,800 pounds per 1,000 square foot. Now it's 1,400, and now they want to even go further down with the board weight. As you bring the board weight down, the quality also goes up, but we have to maintain the quality. In order to maintain the quality, we have to use this alcohol ethoxysulfate to reduce the board weight and maintain the quality of the strength of the board. As I showed on one of the slides about on the figure, how the bubbles or the solid mass in between the bubbles increases the strength. That's what it does. If I remove the soap, the board is very heavy. You can feel this one also. It causes this paper blow and cockles.
That's without the alcohol?
Without alcohol ethoxysulfate. You can take the control board and this one you can feel the weight.
Yeah.
Okay, so it does have a presence in the wallboard, and it serves a beneficial purpose because it increases the volume of the bubbles? The size, the volume. They're little
Yeah,
and
actually
big, and it decreases cracking and sagging.
Cracking, yeah.
Now, if you hadn't used that and you kept the bubbles small, how thick would the board, or what would you have to do to the board in order to meet the requirements?
If I don't use the soap, I will be making like 2,000 pound per 1,000 square foot board.
And what do you have to make?
1,400.
1,400.
That's ASTM, correct?
Yeah, board weight, but ASTM requirement for the nail pull, which is the dry strength, is 80 pound force. And then the humidified deflection should be 8 millimeter, or the sag distance. And the humidified bond should be almost 100%. Humidified bond, when you expose the board to 90% humidity and 90 Fahrenheit for 24 hours, and when you peel the paper off, it should not come off the board. If it comes off, it's a failure. So we have to meet that.
Okay. Thank you.
I just want to go back to Mr. Njiji just to make it clear, relative to the law, even though the board can certainly ignore the law, but the law as it relates to apportionment, Any thoughts on
The language of Kaiser Steel, the result of their vote was that they did not, but the language of Kaiser Steel was that it could be done, and to the extent that you can identify the percentage of the purpose for one versus the other, an allocation could be made.
Then I wanted to go to the
That'd be complicated.
appellant relative to the process and the chemical. The potassium sulfate, not including the potassium sulfate will result in this. Is that correct?
Not including potassium sulfate?
In the process?
Yeah.
And when will this occur? At what point, let's say you didn't include enough, the appropriate amount, it would cost this, or if you included none? Well,
I didn't understand the question very well. When will occur?
my apologies, let me restate. The potassium sulfate, when you include it, the purpose is to avoid this and to make sure that the
Potassium, that's for, I believe that is soap, alcohol ethoxy sulfate.
here's the other one with the bubbles.
Yeah, okay, the other one is lignosulfonate, I believe. If I don't put potassium sulfate, then the critical thing is...
The chemical that causes this to, paper to attach and to avoid this
The wrinkling.
wrinkling.
That was naphthalene.
Naphthalene sulfonate.
Naphthalene sulfonate. Okay,
yeah.
so the naphthalene sulfonate, at what point does this occur? Is it
We can see it immediately.
this occurs if you don't include naphthalene sulfonate?
Yeah, I completely took it off, yes. We don't
You completely took it out?
Yeah.
And if you included it, this wouldn't occur?
It didn't, yeah.
And when would it be smooth?
Yes.
At what point would it be smooth?
Immediately.
Immediately. And the manufacturing process would cause this. At some point, you include it, you do it right, it comes out smooth. Okay. So the benefit occurs during the manufacturing process to cause those chemicals to do whatever they do to come out smooth. I get the argument. Let me take it to the secondary argument. The secondary argument is that after it is added, it causes the needle likes to separate, and then the curing process causes it to hard smoothly, and it's got hard and accomplishes all of its objective. It stays in the product, and at that point, it converts from a liquid into a powdery form. Is that correct?
Yeah, the naphthalene sulfonate contains,
and when
it's
it-
not a solid, it's a liquid form. So when the liquid, when you dry, it becomes solid inside the core.
Becomes solid, and so it's in here now
Yeah.
in a solid form. Okay, so my concern with that is that the purpose of it hardening and so forth is that the reverse chemical reaction, if you were to put it under intense fire to cause that, which is one of the ways that it would cause it not to be as hard, the absorption rate would remain the same with or without the chemical, because the chemical served its purpose and accomplished its objective. So if you could actually remove it, the benefit in its powder form, it doesn't make it any stronger than it's already made it in the manufacturing process.
If I remove that?
No, not if you remove it. It has to go there, the reaction has to take place, and then afterwards, after it's out, if you were able to remove it, which you can't, because the process of removing it is going to destroy the board, as I understand that.
Oh, yeah, we have to destroy the board to analyze the sample, yes.
Yeah.
But it's in there. If you want to do that, we can extract the board. That, like I say, the 98% of the board is mostly paper and gypsum. The other remaining is the other ingredient, and we can extract the material and then analyze it, yes, but we have to destroy the board and then do that.
The, what's this other one? The potassium sulfate. the annotation, the annotation, let's see if I can remember, 440 point something that dealt with this particular chemical.
440.1853?
No, 440.1234, I think it is, to the department. What does that annotation say?
Gypsum for wallboards. The last paragraph says both retarders and potassium sulfate are used to produce chemical or physical reactions during the manufacturing process. The retarders are used to delay drying, and the potassium sulfate is used to produce a snap set. Although the retarders and potassium sulfate remain in the finished gypsum, their physical presence does not have any beneficial effect whatsoever. Accordingly, these chemicals are purchased primarily for use in the manufacturing process. I'll also point out that 440.1330 also deals with potassium sulfate with essentially the same conclusion,
And
that they're used in the manufacturing of wallboard to either retard or accelerate the drying process, and thus their purpose is fulfilled during the manufacturing process.
And what is the process of developing an annotation? What do we go through today? Is that
An annotation results from...
not a results? What's the process?
The process...
The board
is,
wants to promulgate an annotation. What does it do?
we write an annotation and submit it to the board. And if you will, let me look up the exact process.
Mr. Horton, while we're waiting for that, if I could just add, just related to the one annotation that we're looking at regarding gypsum for wallboards, 440.1234, where they're talking about the use of retarders and potassium sulfonate to produce chemical reactions in this manufacturing process. It's somewhat akin, when I look at this, this analysis, somewhat akin to what we're looking at with the tartaric acid, in the sense that that product is also used to prevent the dehydration of the gypsum during the drying process. It appears as though it's very important that the gypsum and the slurry mix dry at a consistent rate, that the material itself be a consistent, uniform, homogeneous consistency throughout this process. So I think what we're trying to describe is just how these chemicals are used in this manufacturing process as an aid in drying this material uniformly, having it be a consistent and uniform material throughout the thousands of feet of wallboard that get created. This dehydration process and the wetting process of the material, critically important. They don't want one edge of this product to dry at a different rate than another. It also has to be consistent. That's where the bubbling action comes in, again, as an aid to make sure that we've got a homogeneous slurry that they're producing. So it has, ultimately, at the end of the day, the characteristics that they're describing that we all agree are benefits to wallboard. But really, it aids in this manufacturing process to make sure that you've got a homogeneous, uniform material that's dried and produced, identically, so that we get the smooth dry board of the type that we're seeing around us today.
Okay. I mean, I get that that there's a chemical reaction that takes place during the manufacturing process, and that the benefit is accomplished in the manufacturing process. There's no debate about that. Kaiser Steel took that up in this deliberation, and I believe that the law says that you can and you should do an apportionment and an allocation when the allocation is warranted. But it's up to the board, as Kaiser Steel so stipulated. The inherent challenge for the agency is to dispute if there is a benefit subsequent to an additional benefit the two benefits, a dual purpose, and that dual purpose environment where the chemical actually does something other than just existing as 2% of its mass, which doesn't necessarily contribute to any more strength than the other 98% does, and is incidental to the process. I get that. The distinction, and I understand why the annotation exists. I understand the historical analysis. People spend far more time in developing that annotation, research, and analysis than we're spending here on the board. So I get the importance of the annotation in the process. The tartaric acid, the testimony is that it attached and has a water-resistant characteristic. Now, I don't hear the department saying it doesn't. I don't hear the department having any evidence that it doesn't. So therein, it has a dual purpose. The rest of these chemicals, the primary purpose of forming the bubble and enlarging happens in the manufacturing process. The acid combines, it enlarges, causes it to grow, and then it sits there as a powder, or whatever form it's in. Anyway.
Did you? Sorry.
No.
Yeah.
I'm
The
good.
annotation process?
I'm good.
Okay.
Further discussion, members? Hearing none. Member Rundle, tape moves to take the matter under submission, second by Member Ma. Without objection, members, such will be the order. Thank you very much for appearing before us. A very interesting discussion. We should probably continue this discussion with a bunch of chemists. But in light of the responsibilities of the board, I'm sure we'll fulfill our responsibilities in that regard.
Thank you.
Okay, thanks, Chairman and other members. Thank you. Thanks for your time.
It also messes with the super.
Yeah, it does.
I messed up.
Ms. Richmond, what's the next matter before us?
Our next matter is item F, public hearings. Item F1, proposed amendments to emergency telephone user surcharge regulations, 2401 definitions, 2413 exemptions from surcharge, and 2422 returns and payment.
Discussion, members. We have Mr. Andrew Quee. I saw him. You okay? I thought I saw you trip earlier.
Oh, no, I'm good, thank you.
Okay.
Whenever you're ready, I can proceed.
Good, please.
Good evening, Chairman Horton and members of the board. I am Andrew Quee with the board's legal department, and with me today is Brad Heller, also with the legal department. We request that the board vote to adopt the proposed amendments to the emergency telephone user surcharge regulations, 2401 definitions, 2413 exemptions from surcharge, and 2422 returns and payments. The amendments to regulations 2401 and 2402 clarify a direct seller's prepaid mobile telephony services surcharge reporting requirements, and the amendments to regulation 2413 make the regulation consistent provided by the United States Department of State, Office of Foreign Missions. Thank you.
Move to adopt.
Moved by Member Harkey to adopt, second by Member Ma. Yeah. Without objection. Members, in that this matter is before us publicly, I sort of feel compelled to express a concern relative to our previous action. That is that the presumption of a submission, sending of a letter consummates a contractual agreement between the board and the agency is concerning, giving the opposition to this particular tax throughout the state of California from various individuals who are expressing their concerns, I think is wise to look at, to make sure that that is cured. And what I'm speaking of is the first quarter in which we were having challenges and notifying the impacted parties, having them consummating an agreement between the impacted parties, and having the establishment of passing of a resolution, establishment of a contractual relationship, and bringing that forward in a timely manner. I understand all the challenges that existed at the time, and want to express my concern about whether or not those were valid contracts. No further discussion is necessary unless the members would like to have that. I'm not asking you to respond, I'm just expressing my concern. There's a motion and a second. Without objection, such will be the order.
Our next matter is item F2, proposed adoption of prepaid mobile telephony services regulations 2460, administration, 2461, exemptions, deductions, credits, and special applications of tax, and 2462, refunds of excess charges collected.
Members, we have a witness here before us, Ms. Brenda Narayan, with many service. Welcome to the Board of Equalization.
Good evening.
Ma'am, we'll hear from the department. Department will introduce the matter, and then we'll come back and accept your testimony.
Thank you.
Yes, again, I'm Andrew Quee, and with me is Brad Heller from the Legal Department. We request that the board vote to adopt proposed regulations 2460, administration, 2461, exemptions, deductions, credits, and specific applications of tax, and 2462, refunds of excess charges collected. The proposed regulations implement, interpret, and make specific the application of the Prepaid Mobile Telephony Services Surcharge Collection Act and the Local Prepaid Mobile Telephony Services Collection Act. We are available for any questions if the board members have any.
Thank you. This one, too, members, I have a similar concern, 17,200 concerns about the overcollection of taxes inappropriately and the fulfillment of our obligation to notify the cities about the option and AB 1717 provision in order to collect these revenues. But that being said, let's hear from our witness.
Thank you. Good evening, Mr. Chair and board members. I'm Brenda Narayan, representing Muni Services. Our public agency clients include over 60 jurisdictions in the state with a UUT, or utility user tax. For the past 5 years, we've worked closely with various state, local, and industry stakeholders on this issue. We especially appreciate all the work that has been done by the board staff to implement this program. Muni Services supported AB 1717 from 2014, which is the law behind the regulation, and we're pleased to support the final proposal. The future of AB 1717, that has a 2020 sunset date, will depend on keeping the cost of implementation at a reasonable level. We are poised to help to maintain reasonable costs in collaboration with the board and our clients. And finally, we are excited that local governments will have new collection mechanism in place for prepaid wireless revenues. Thank you.
Thank you very much. And thank you as well, Muni Services, for getting the word out to all the cities and
You're welcome.
ensuring that they take full advantage of these additional taxes revenue that will come to the city.
Thank you.
Even though we'll be blamed.
We didn't pass the law.
I know.
I support
Yeah,
it, clearly support it, but is there a motion, members?
So moved.
Member Harkin moves to adopt staff recommendations, second by Member Stowell. Without objection, members, such be the order.
Thank you.
Thank you.
Ms. Richmond?
Our next matter is item G, tax program non-appearance matters consent. Item G1, legal appeals matters. These items may be taken in one vote, and sub-items 5, 6, and 7 were pulled.
Noting sub-item 5, 6, and 7 has been pulled, and members, any note of non-participation, you'd like to review of these items? Move adoption. Move adoption by Member Rowan, second by Member Ma. Without objection, members, such will be the order. Ms. Richmond?
Our next matter is item G2, franchise and income tax matters. Sub-items 8 and 16 have been pulled. These items may be taken in one vote.
Noting sub-item 8 and 16 has been pulled. Any wished non-participation member? Any pull for further review? Hearing none. Member Stowar moves adoption. Member Harkey moves second. Without objection, members, such will be the order. Mr. Richmond.
Our next matter is item G4, sales and use taxes matters. These items may be taken in one vote.
Members, these items are on consent. Any non-participation? Like to pull any items? Hearing none. Moved by Member Ma, second by Member Runner. Without objection, to adopt staff recommendation. Without objection, such will be the order. Ms. Richmond.
Our next matter is item G5, sales and use taxes matters, credits, cancellations, and refunds. These items may be taken in one vote.
Any non-participation members would like to pull any items? Hearing none. Move adoption of staff recommendation by Member Runner, second by Member Harkey. Without objection, members, such will be the order.
Our next matter is item G6, special taxes matters. There's only one item.
Member Ma moves adoption of staff recommendation, second by Member Harkey. Without objection, such will be the order.
Our next matter is item G7, special taxes matters, credits, cancellations, and refunds. These items may be taken in one vote. Sub-items 5 and 6 are constitutional functions. Therefore, the Deputy Controller may not participate in these items under Government Code Section 7.9.
Noting sub-item 5 and 6 is constitutional office, members will take that up first. On to sub-item 5 and 6. Member Harkey moves adoption. Member strike that. Member Ma seconds. Without objection, such will be the order. Members, now we'll move to items 1, 2, 3, and 4. Is there a motion?
So moved.
Member Harkey moves. Member Stowar seconds. Without objection, members, such will be the order. Ms. Richmond.
Our next item is item H, tax program non-appearance matters, adjudicatory. Item H1, legal appeal matters. There's only one item.
Mr. Njija is here to answer any questions. Remember, any discussion? Is there a motion to rescind the November 17 vote, members? Moved by, maybe there needs to be some discussion. Members, this is an item that was on the November G1 calendar. The taxpayer had requested that we take under consideration the interest and whether or not the interest should have been abated. We were in quite a bit of rush and did not give consideration to that. Taxpayer, neither did the taxpayer have an opportunity to testify at that particular meeting because we moved the agenda through the process without pulling this particular item. So it's more of a technical than a substantive issue to allow the taxpayer an opportunity to testify to their concerns as to whether or not the board should take up for rehearing the interest abatement issue, if I recall correctly. Is that helpful?
It's helpful.
It's helpful.
I didn't pull it, but I'll be happy.
I did look at the, excuse me, Chairman?
Yes, sure.
I did review the request for a petition for, if I get the right term, rehearing, where they raised the issue of interest. And let me back up. In the initial hearing back when we were in Culver City, I don't think they talked about requests for interest abatement or cancellation, but they did make a strong case on what the taxable measure should be. And the board agreed to reduce the taxable measure, and by that, the interest automatically went down to a very small amount for what was in dispute. The balance of the taxable measure, the petitioner had already agreed to years in advance and had the ability to pay that portion at any time, and they made a decision not to. So I don't see why we need to rescind and provide basically a decision on whether or not the rehearing should be granted. I believe that the recommendation that was in the vote, was it December, was a valid recommendation by staff, and I do not think we need to do it.
I appreciate that. Further information for members' consideration. During the time of the deliberation, there was discussion about whether or not the error that occurred, the ultimate error that occurred, was in fact that staff had contributed to it. I believe I had thought so. Other members had thought that the staff had contributed to it, but for some reason we just didn't get around to taking it up to determine whether or not the involvement of staff caused the interest and positioned the taxpayer not to be able to actually cure or pay the interest in advance.
Understand. I'll make the motion to rescind if you would like. I don't recall the entire case.
Thank you. As a courtesy, I would second the motion. There's a motion in the section, objection noted. Ms. Richmond, please call the roll.
Mr. Horton?
Aye.
Mr. Runner?
Aye.
Ms. Harkey?
Aye.
Ms. Ma?
Aye.
Ms. Stowers?
No.
Motion carries.
Thank you.
So just for clarification, the rescission is on the board's prior vote to deny the petition for rehearing.
We
With
gotta
this
take-
motion
right.
to rescind it, what will come back in February will be the petition for rehearing. So the board would then again vote on the merits of the petition for rehearing.
Exactly. Ms. Richmond, what's our next matter, please?
Our next matter is item H2, franchise and income tax matters. Sub-item 2 was pulled.
Sub-item H2, sub-item 2 is pulled. Members, to the sub-item 2, H2-1, to the demand penalty discussion members. Mr. Eppolite is here to answer any question. Is there a motion, members, to adopt staff recommendation?
Move to adopt staff recommendation.
Member Stowar moves to adopt staff recommendation, second by Member Ma. Without objection, members, such will be the order. Ms. Richmond?
Our next matter is item I, tax program non-appearance matters. I1, property tax matters. These are constitutional functions, therefore the Deputy Controller may not participate in these matters under Government Code Section 7.9.
Noting non-participation by the constitutional officer, deputy, Ms. Stowar, is a motion by Member Runner, second by Member Harkey, to adopt staff recommendation on all items without objection, noting non-participation. Without objection, members, such will be the order. Ms. Richmond?
Our next matter is item I2, offering compromise recommendations.
Move adoption by Member Harkey, second by Member Stowar. Without objection, members, such will be the order.
Our next matter is Chief Counsel matters. Item J, rulemaking. J1, petition.
J1. Members, before you introduce the case, we have a witness here, Mr. Bill Duplessis, with the Advocate's Office, California. Bill, you got to fix your writing here. But at any rate, welcome to the Board of Equalization. Ms. Richmond, please introduce and continue. My apologies.
Item J1, petition to
Mr. Duplessis.
amend. Petition to amend sales and use tax regulation 1569, consignees and lienors of tangible personal property for sale.
I presume Mr. Claremont is here. Please introduce the issues in this matter.
Good evening, Chairman Horton, members of the board. I'm Scott Claremont from the Legal Department. With me is Lawrence Mendel. I'll provide the department's recommendation with regard to the petition from the California Pawnbrokers Association to amend Regulation 1569, consignees and lienors of tangible personal property for sale. The petition seeks to add subparagraph 1 to the regulation pertaining to the taxability of the transfer of personal property between a pawnbroker and the original pledgor. Specifically, the petition would add clarifying language to, quote, allow the original pledgor to redeem the personal property from a pawnbroker within 6 months of the expiration of the grace period as a non-taxable event. We recommend that the board deny the petition in its entirety because the transactions that the petition seek to make exempt from tax are retail sales under the sales and use tax law, for which there is no exemption or exclusion. To create such an exemption through regulation would not be within the scope of the board's regulatory authority. As brief background, these are transactions which a person has previously put property up for collateral or pledged property as security for a loan with a pawnbroker. And then the person defaults on the loan and title of the property transfers to the pawnbroker or vests with the pawnbroker. These transactions are governed by Division 8 of the Financial Code, and as particularly relevant to this discussion, Section 21201 of that division states that when the property vests with the pawnbroker, quote, "The pawnbroker shall become vested with all right, title, and interest of the pledgor, or his or her assigns, to the pledged article to hold and dispose of as his or her own property." In other words, once the property vests with the pawnbroker, he or she holds it free and clear, and the former pledgor has no more right to it than any other third party under the financial codes. We note that the legislature just passed SB 300 effective January 1st, 2016, which made various changes to this division, one of which we describe, it relates to entering into a second loan. And without getting into too much detail, essentially they said that second loan has to be entered into prior to it vesting. So the one right, which actually isn't germane to this issue, but the one right that that former pledgor had to the property no longer exists. They literally have no right to it that any other third party would have. So turning now to the, and I'll add that in the Senate analysis of that bill, they said the clarification does not deprive borrowers of their ability to regain their pawned item and merely requires them to purchase the item from the pawnbrokers. With that in mind, turning now to the sales and use tax law, as you are aware, the sales tax is imposed on the retail sale of tangible personal property. In California, less specifically exempt or excluded by statute. The use tax is imposed on the purchase of tangible personal property from a retailer for use in California, again, unless specifically exempt or excluded from statute. Here, as I've discussed, there's nothing in Division 8 of the Financial Code that would distinguish a retail sale from a pawnbroker to the former pledgor, and there's also no provision of the Revenue and Taxation Code that would exempt or exclude sales to the former pledgor from tax. So therefore, this petition is essentially trying to create an exemption for sales for which there is no exemption or exclusion in statute. Pursuant to Revenue and Taxation Code Section 7051 and Government Code Sections 11342.1 and .2, the board is authorized to adopt rules and regulations consistent with and not in conflict with statute, notwithstanding any policy interest that may exist in seeing pledged property returned to the former pledgor. Enactment of such an exemption would simply not be within the scope of the board's regulatory authority. Accordingly, we recommend that the petition be denied in its entirety. Thank you, and I'd be happy to answer any questions you have.
Welcome to the board again.
Thank you very much, Mr. Chairman and members. Thank you for the opportunity to come before you. This is a very particular and very tightly crafted exemption that we would be requesting, or regulatory change, for a relatively short period of time, and certainly the legal's analysis of the fact that it is a policy is certainly correct, and the policy would be one that I would hope that we could make it through the rule-making process. Perhaps that can't be done, I'm not sure. But the public policy, obviously, is to return someone's item that presumably they've already paid sales tax on, and return that, be able to vest that property back with the consumer. And what they do with it afterwards really is not the subject of our discussion here today, whether they were to, for instance, enter into a new loan, which is the subject of SB 300. That was actually sponsored by the California Pawnbrokers Association. Or whether, in fact, they would walk out of the establishment and have full vested rights in that property. Anyway, I wanted to thank the board for all their help. Member Harkey's office and Member Maw's office, Member Runner's office have been very helpful, as has the controller's office, in trying to, I guess, familiarize me with your procedures and how this thing goes. We'd like to get to that public policy. If it's possible to do it this way, we certainly want to do it this way. We certainly can seek a legislative solution as well.
Member Harkey?
Hi, we worked on this very, very hard.
You did. Thank you very much.
Sure, sure. The intent is good, you know, that somebody comes in and they can't get their property back right away, but they come in a little bit later, and these are not wealthy people, and they just want to get their property back, and then they have to pay sales tax on it, which is no small amount in California and many other states. So I really do appreciate the effort. The OAL process, they pretty much deem this dead on arrival. Are you?
Appears so.
Yeah, it appears so. Are you still wanting the petition granted, and if so, for what purpose?
Well, the option that remains to us, I put in a spot bill last week at the Ledge Council deadline, of course, and your office was very helpful in helping us craft language which would have sensibly give you the
latitude.
The latitude to do it. If that's certainly the only option we're left with, then that's what we'll do. We were hoping, obviously, to have the support of the board in doing so.
Well, if we grant the petition, knowing that it's going to be dead on arrival, does that help you?
Yes.
Oh, okay. Now you answered my question. Sorry, thank you. So not to fly in the face of any analysis or staff, we kind of know where this is going, but I would move to grant the petition. I think it's a well-deserved understanding that it probably will need some legislative action, but I would like to at least get the ball rolling or show support for this.
Second.
Thank you.
I'll second it.
It's been moved by Member Harkey, second by Member Maul to grant the petition. Discussion, Member Runner.
Yeah, I'm perplexed, and I think I understand the process here, and I think what we're trying to do is identify the fact that there is a specific concern out there where you have individuals who feel like they're trying to get their property back, but yet they're having to pay a sales tax on it because of some timing issues. And probably, I think we all would agree it needs a legislative fix. I guess I'll be supportive only because I think if this is the path for a legislative fix, that's the way we need to go. And if moving it forward, I would want us to expedite then the issue with OAL to get that. I think we pretty much have all identified that it's not within our realm in terms of what they believe in our ability to regulate. But we need to expedite it so that you can indeed do that. I'm a little nervous, quite frankly, about moving forward an item to OAL that we know probably is going to get declined. I'm not sure that's the best issue.
Been done.
But I think, I understand the purpose, and I think we just need to expedite in order for us to get a piece of legislation moving.
Thank you.
Chairman? I do understand the concern of wanting to return the property back to the original owner at the lowest cost possible, but I do not support accepting the petition at this time because it requires a statute change instead.
Here's my concern as well, is that I share the similar concern, is that at some point you fly in the face of adversity. Adversity eventually begins to ignore you, And so by going to the Office of Administrative Law, asking for a regulatory change that we all know is a legislative change, and in that the entire board sort of supports this, we might be able to serve as a catalyst by initiating a legislative process or rulemaking process, and they're taking a look at it, which says that we're doing the analytical work in order to establish the law. We're doing the interested parties' work so that whoever authors this bill, and we're building the momentum under the leadership of those committees, we're building the momentum necessary to move the bill forward. I think that's a much more effective way, and I don't think we accomplished that by just sending it to the Office of Administrative Law, because they're the only ones going to look at it, and they're the only ones going to say yes, and at best you're able to tell to the public that the board decided to send it to the Office of Administrative Law, and that doesn't communicate anything. But if the board decide to take the matter up and meticulously look at it and make some assessments, evaluation, come to a conclusion, file a report, we become effective in my mind. And I'd be more supportive of those types of actions as opposed to flying in the face of Office of Administrative Law. But that's, I think that works. I think that gets us where we need to be. Member Harkey?
How would that play out? How would you be handling that to a separate?
If we considered the legislative proposal in the legislative committee, Member Ma would have the option of conducting interested parties meetings, and during that process, we would develop a viewpoint. We could develop a report that the board would issue a report that has an analytical analysis of the benefit and so forth. So, and that it be concurrent with the legislative process. So, and then the board would take a support and concept position, and now you have a public discussion, public debate, full with transparency, and I think that accomplish your objective as opposed to the silent discussion with the Office of Administrative Law.
So, Mr. Chair, so the at least what you're talking through there is the issue of identifying the fact that we are questionable if we in regards to our ability to regulate, but then create then a legislative solution that we would sponsor that would help accomplish that objective. Does that?
That's very generous. I appreciate that.
I mean, I think we're all hesitant about what we're trying to do in regards to moving forward. And I think we're all sensitive to the issue. I would, again, like I said, I'm hesitant in regards to trying to deal with a regulation process. So I'm certainly satisfied. I would say if it's something that we can expedite. I think the other issue you may run into, and that is I think you will be to such a truncated timing on having us run through AOL. By the time you get it, I'm not sure you'll be able to accomplish what you want to do in this legislative year anyhow. And this may be a way to actually accomplish that within the current legislative year. So I tend to agree with the chair in that might be a better solution.
I'd like to withdraw my motion, and can I make another motion that we refer?
Give direction.
That we refer and this to the legislative committee under Ms. Ma, and that we try to facilitate legislation that accomplishes the goal.
Excellent.
Do I have a second?
Second.
It's been moved by Member Harkey. Strike that. Member Harkey withdraws her motion. Maker of the second also withdraws the motion. Motion is no longer up for discussion. There's been a motion by Member Harkey to submit this on their concept to the legislative committee. Second by Member Stowar to bring it back to the board expeditiously, considering the legislative process, even if it comes back in the form of a report from staff. I would imagine that the board would direct staff to begin the process of deliberating on this and developing a report that provides the board with an analysis of the benefit of this, given the view of the board that it is beneficial. And we might even call it the Claude Parrish bill, because this has always been his issue. Let's call it that. Call it the Parrish bill. I'm just kidding. I'm not kidding. I would love to be able to call it that, but I don't think I can get away with it.
He'll be calling you to that. You made him famous.
Okay. Without objection, such will be the order. Thank you very much. Appreciate it.
Thank you very much.
Our next matter is a Section 100 change, Item J2, Fee Collection Procedures Regulation 3500, application of the Fee Collection Procedure Law.
Thank you, Mr. Heller. Please place it on the record expeditiously.
Absolutely. Good evening, Chairman Horton, members of the board. I'm Bradley Heller from the board's legal department. I'm here to request that the board vote to authorize staff to complete Rule 100 changes to Regulation 3500.
Thank you very much. Member Harkey moves, Member Moss seconds. Without objection, members.
Thank you.
Such will be the order. Ms. Richmond?
Our next matter is the administrative session. Item N, consent agenda. We have retirement resolutions. Item N1, adoption of retirement resolutions for Carol X. Dodd, Peter Lee, Althea H. Mitchell, and Oscar Villasener. The members of the board wish to extend their sincere and grateful appreciation to the retirees for their dedicated service to the State Board of Equalization and to the state of California. Their congratulations on their well-earned retirement and best wishes to them, their families, for continued success, happiness, and good health in the years to come. We have item N2, adoption of board resolution for Jeffrey L. McGuire, which was presented earlier today. Item N3, approval of board meeting minutes for December 16, 2015. Item N4, proposed revisions to Compliance Policy and Procedures Manual, Chapter 2, Registration, Chapter 5, Returns, Chapter 7, Collections, and Chapter 8, Consumer Use Tax. And I believe there is also another resolution that is to be adopted.
I don't know. We've been dealing with so many different things. Please
Good
refresh our
afternoon.
memories here.
Chairman Horton and members. There is another resolution acknowledging the positive work that the California Women Lead provides to all of the women here in California, as well as recognition of the recipients of their 2016 Women of the Year and Mover Awards.
I
think this resolution is supposed to be presented at their reception scheduled for tomorrow afternoon.
Okay. Members, with your permission, we'll take up N1, N2, N3, N4, acknowledging the two resolutions before us. There's a motion by Member Harkey, second by Member Runner. Without objection, members, such will be the order. Thank you very much to all our retirees. We certainly appreciate your service over the years, accumulating 121 years of service for the Board of Equalization. And we look forward to an opportunity to bring you back, although I think that'll be relatively difficult after you have a few months of appreciating retirement. I look forward to that opportunity myself. Ms. Richmond, what's the next matter?
Our next matter is item O, adoption of board committee reports and approval of committee actions. Item O1, legislative committee.
Item O1 and O2, members, Business Tax Committee, we have an opportunity to review that. On the Legislative Committee, Member Stowell moves to adopt, Runner moves to second. Without objection, such would be the order. Business Tax Committee, Member Marr moves to adopt. Member Stowell seconds. Without objection, such would be the order.
Our next matter is item P, other administrative matters. Item P1, the Executive Director's Report. Item P11, update on resolution of State Controller's Office Board of Equalization review.
Welcome to the Board of Equalization. Would you please introduce yourself for the record? Selves for the record.
Good afternoon, Mr. Chairman and members of the board. My name is Cynthia Bridges, Executive Director. Joining me this afternoon is Ms. Julia Finley, Acting Chief, Financial Management Division, and Mr. Joseph G., Staff Services Manager with Acquisitions Branch of the Administration Support Division, both of which are in the Administration Department. Shall I proceed, or shall we have them?
Please.
Okay. We are here today to provide a brief update on our ongoing actions to resolve the issues identified in the State Controller's Review Report of the Board of Equalization's internal accounting and administrative controls, specifically the retail sales tax fund, allocation process, accounts receivable balance, and office revolving fund administration. On behalf of our entire team, I am pleased to report that substantial progress has been made on two of the three key issues, the RSTF allocation process and the OR administration. Staff from the Financial Management and Human Resources Division, Sales and Use Tax, Technology Services, and Administration Departments have taken significant steps which are enumerated in a PowerPoint, which I believe that you have in front of you. And with your permission, I would like to submit for the record. We share the board's concern, of course, that an independent expert be retained as soon as possible to review and validate the BOE's actions and to make recommendations for necessary reforms in the policies, practices, and procedures which currently govern the BOE's financial management practices. To that end, staff has prepared a statement of work for the procurement of an outside consultant to conduct the review. We are going to use that statement of work in preparing an RFP packet, which will be completed by this Friday, January 29th, 2016, and issued immediately after completion of a 3-day review by board members. We will work with DGS to expedite what generally is an 80 to 95-day process, and once the agreement is executed with the consultant, it is our intention to have the work completed within 30 to 45 days and submitted to you, their report submitted to you for approval. Thank you for your direction and responsiveness to our team, and this concludes my report. Of course, we have Ms. Julia Finley, who's available if you have any questions specifically related to some of the actions that we have taken. And then, of course, if there are any further questions regarding the procurement process, Mr. Joe G. is available to answer those questions.
Well, thank you very much for your report. Members, I'd like to make a recommendation that in order to expedite this process, given the timing, that we ask Member Ma and Member Stowall to take the leadership in assessing and evaluating the scope, as well as the RFP process, and delegate them the authority to make the decision in the RFP process in the selection of the appropriate candidate to provide the Board of Equalization with this service. Subsequent to a 3-day review, that the information will be submitted to all members under a 3-day review, but we would request their indulgence and their leadership in that regard. Unless they object, such will be the order. The board will receive and file your report, and please be cognizant of the direction of the board in this regard.
So just for clarification, shall we send the packet to Ms. Stowers and Member Ma, or?
The process, as I understand it, would be to send the package to Member Ma and Member Stowall to have them review and assess it. They will participate and assist in the development or the finalization of the scope. Then that scope is to be submitted to all members under a 3-day review. Once the RFP is submitted and we begin to get people responding to it, the board is deferring the authorization and the selection to Member Ma and Member Stowall in order to expedite the process. Otherwise, it would be required for us to take it up at the subsequent board hearing, which might not be allow us to expedite. So without objection, such would be the order of the board. I know this, I just kind of came up with this, so any questions? You guys got it?
Yes.
All right, good.
Thank you. Just wanted to confirm.
All right, appreciate it.
Thank
Ms. Richmond?
Our next matter is item P12, status reports on the Revenue Recovery and Collaborative Enforcement Act and the Tax Recovery and Criminal Enforcement Team.
Good evening, Chairman, members.
Welcome.
Randy Silva, Chief of the Investigations Special Operations Division. It's my pleasure to give you an update this evening on what we've been doing with AB 576. The Revenue Recovery and Collaborative Enforcement Team Act, also known as RACE. It's a pilot program established 2013, and it has a final report due in 19. The purpose of the legislation was to create a multi-agency enforcement team to combat tax evasion related to the underground economy. At the time the legislation was approved, In the legislature, the governor issued a signing letter designating the Department of Industrial Relations as the lead agency to provide some oversight to the effort. The race team is comprised of a core group and an advisory group. The core group is the Franchise Tax Board, the Board of Equalization, the Employment Development Department, and the California Department of Justice. The advisory group is the Department of Industrial Relations, Department of Insurance, Department of Consumer Affairs, Department of Motor Vehicles, and the Department of Health and Human Services. The legislative objectives were to institutionalize collaboration among agencies to combat the underground economy through shared data, intelligence, and joint coordinated effort. Evaluate the benefits of a processing center to receive and analyze data, share complaints, and research leads. Provide participating and non-participating agencies with investigative leads where collaborative opportunities exist for felony-level criminal investigations. Measure performance by monitoring the progress of enforcement, collaboration, and evaluate the processes and operations. Report on those outcomes and make recommendations. Basically, the agencies all got together and formed collaborative work groups. There was a steering committee to implement, create a governance framework, monitor and evaluate the program on an ongoing basis. That was kind of taken, the lead was taken on that by Department of Industrial Relations. There was a data analytics group, which was to develop a plan for a proof of concept. That was taken on by the board. There was an intake system, develop a complaint intake system for external inputs. That was also taken on by the board. And then criminal investigations, investigate criminal cases. That was taken on by the Department of Justice and the board. The governance framework highlights are the core team, investigate multi-agency felony tax evasion. Leads are given to the Labor Enforcement Task Force, the Joint Enforcement Strike Force, and advisory agencies as appropriate. The Tax Recovery and Criminal Task Force, TRACE, was adopted as the basically it was adopted as the enforcement, it's getting late.
I know, very late.
Enforcement for race. The Department of Industrial Relations documents, implements, and monitors program activity. They ensure coordination to make sure we're not overlapping our efforts, and they're tasked with filing a report with the legislature. There was an interim report done, and that was, I believe, provided to the members. This is just a quick organizational overview of the information flow according to the framework. And the data analytics group was all the agencies coming together, primarily the core agencies, to develop a proof of concept. What we did is we brought in program staff, investigation staff, information security officers, disclosure officers, and disclosure attorneys from each of the agencies. The objective was to take a broader look at data and how we can use data using predictive analytics and look at opportunities with that data, coordinated outreach, coordinated joint audits, reduced no change audits or no work audits, coordinated enforcement, and greater interagency transparency. All the agencies have gotten together, agreed on a proof of concept, and really just have to sign an interagency MOU once there's available funding. An intake system was developed with all the partnering agencies that provides an opportunity for the public and other agencies to submit complaints directly to the TRACE task force, or they can opt out to one of the specific agencies or partnering agencies. They can submit those complaints on via website or mobile phone. They can also come back at a later date and update their initial complaints. Complaints not meeting the felony or multi-agency felony criteria are referred to other agencies as appropriate. The Criminal Investigations Work Group is TRACE. The TRACE Executive Board is all the different managers or high-level executives from the different agencies come together and they elect a chair. The chair is elected annually. Oversight of the overall TRACE operation is provided by a Deputy Attorney General who is cross-designated as a U.S. Attorney. That gives us the opportunity to prosecute in both state or federal court. Day-to-day operational oversight is with a DOJ Task Force Commander. What that does is provide us the opportunity to look at cases and prosecute them in totality. For example, with the Board of Equalization, our statutory authority is just limited to BOE-related sales tax charges. By bringing in DOJ, we can also look at other charges, so we're capturing the totality of the criminal activity. This is just a quick snapshot of the two task forces that have been set up to date. One is in Northern California. The one in Northern California has been running about a year and a half, and there's one in Southern California. The one in Northern California is hosted by the Board of Equalization at 621 Capitol Mall. The one in Southern California is hosted by the Department of Justice in the City of Commerce. There's interest potentially of having FTB host something in the Bay Area, and the Attorney General's Office hosting something in the San Diego area, provided there's future funding. By the numbers, quickly, what we've received so far is 239 complaints. 62 complaints have been triaged to other agencies. 100 of those complaints are in preliminary or full investigation. 8 prosecution cases in process. 10 cases have already been successfully prosecuted. Just to give you an indication of the kind of cases they're prosecuting, pirated DVD movies, unlicensed, untaxed OTP sales, sales of counterfeit brand name designer sunglasses and watches, operation of illegal slot machines that were placed in different retail outlets in California, as well as sales of those slot machines, sales and counterfeiting of NFL and NBA sports merchandise, perjury, falsification of DMV records, and unreported use tax. A case that started out as a human trafficking case ended up with pimping, pandering, bribery, and tax fraud. The dollars that are represented here, the $60 million, represent cases that are currently under investigation. The $2 million represent cases that have been prosecuted where it's either been billed, money has been seized and is sitting waiting application, and or there's court-ordered restitution. The $5.7 million are some of the cases that are currently in the prosecution process. Some of the accomplishments for RACE, AB 576 to date, are the development of the government's framework and the agreement to use that framework by all the participating agencies, a web-based complaint intake and triage system, the TRACE website, which is hosted by the Board of Equalization, enforcement performance metrics agreed to by all the agencies and reported, TRACE task force operational collaborative enforcement. Again, it's tied to broad-based community partners, and leads are flowing in. Again, Sacramento and Los Angeles are we're currently operating out of. The analytics proof of concept plan, the scope of work draft, which is going to be signed any day. And again, if there's money, then we'll pursue an analytics effort. Some of the next steps are report to the legislature. Report was just done at the end of December, which was requested by the Assembly Committee on Revenue Taxation. That's a preliminary report. It was done by the Department of Industrial Relations with input from all the participating agencies. There's a final report required, I believe, at the end of 2017 or December 2017. What we would like to do, and I'm not asking at this point, but what we're working with our other agencies on putting together is potentially a BCP for sometime in August to expand the efforts to San Diego and the Bay Area. That's it. I'll try to make it quick. Any questions?
I want to see you in San Diego. We've been talking about that since I got here, I think, and I think that'd be fabulous. Thank you for your work.
Thank you, Mr. Silva. I mean, the one thing Randy didn't say is that a lot of this exists because of his energy and working with him and his willingness to go forward to the legislature and articulate and describe what this is all about, as well as all the other parties. The inherent challenge that we face is funding. We've been able to, the goal of the objective, at least as I saw it, was to establish the communication, develop the track record, and to be able to convince the legislature that funding would only yield prosecution of criminals, more criminals who are operating in the underground economy. And so I certainly encourage us to continue to go forward to the legislature to seek that opportunity, which may require more interaction with DCR. I think of course, continue to be cautious about any overzealous act against taxpayers who are more in the fraudulent negligence territory as opposed to the criminal territory. And so it encourage us to continue to be vigilant in trying to isolate those individuals and allow the agency to do what it does inherently without the criminal prosecution. We've seen the results of that aggressiveness, and it ain't pretty, and we're fortunate that it didn't get blasted all over the place. I also would encourage participation in the cannabis discussion of the track and trace. There continues to be desire to establish an excise tax at the retail level, which really ties our hands when it comes to investigation on the criminal level, from my perspective, as proven in the whole, when we took on the Russian mafia in the diesel fuel case, it was determined that most appropriate to have the excise tax at the rack level, and then in other cases of the state, they spread it throughout so that the Board of Equalization can utilize this staffing and has the authority to go after these individuals. Other than that, the board will receive and file, and thank you again for your work on this. Discussion, members? Hearing none? Thank you. Ms. Richmond?
Thank you, Chairman. Members.
Our next matter is item P13, CROS project update and actions.
Good evening, Chairman and members. David Gow, Chief Deputy Director. CROS staff is continuing to review the final proposals. The review is progressing on schedule. We are also moving forward with the recruitment of the CROS project director. The advertisement, the position became advertised last evening, and we will make efforts to make sure that it gets broad visibility. As far as the budget for the month of November, we came in at $649,000, which was under the $738,000 monthly budget, and our year-to-date and project-to-date figures are under budget as well. That concludes my report for CROS.
Discussion, hearing none, the board will receive and file. Thank you very much, Mr. Gow. Much appreciated your work. Ms.
Our
Regina?
next matter is item P14, budget update.
For the record, again, David Gow, Chief Deputy Director. Today I will provide you with an update of the board's current year budget expenditure and highlights for fiscal year 16-17 of the governor's budget, which was introduced back on January 7th of this year. I'm pleased to report that the board's expenditures are coming in under budget for fiscal year 15-16. At the end of December last month, we would expect our expenditures to be around 50%. Based on expenditure data, the board's personal services expenditures are at approximately 48%. The operating expense and equipment expenditures are at approximately 49%. And overall, the expenditures are just over 48%. So we are under that 50% threshold at this point in the year. In an effort to improve transparency, board budget highlights will be provided frequently at board meetings such as this. And we will also be providing more detailed monthly electronic reports to your offices starting with this December data that I just reported upon. With regards to the fiscal year 16-17 governor's budget, relative to past years, the state's budget is in good shape. Strengthening state economy is pushing revenues higher. The state's unemployment rate is below 6% for the first time since 2007. The budget is looking at opportunities to address long-term liabilities, such as restoring and upgrading the state's infrastructure and creating a path for state worker retiree health benefits. Included in the proposed budget are contributions to CalPERS for our state budget costs, funding for compensation and health care costs for active state employees, and funding for potential employee compensation increases subject to good faith bargaining under the Ralph C. Dills Act. With respect to the board, the governor's budget provides for 4,852 authorized positions and $598.3 million in funding. This includes 3 of the board's budget change proposals. The first of those is a request for $1.4 million to permanently establish 8.6 expiring limited term positions and 7.2 temporary help positions to address ongoing permanent workload associated with the fire prevention fee program. That's been included. Secondly, the budget provides $5.2 million which consists of 3.3 general fund and 1.9 million in reimbursements in special funds. And that's to permanently establish 22 expiring limited term positions and create 8 new permanent positions to address the increase in combined incoming workload in the Appeals Division's Business Taxes Section and Settlement Programs. And then thirdly, the budget includes $296,000 in federal funds to permanently establish 2 expiring limited term positions for participation in the Joint Operations Center for the National Fuel Compliance Project. That concludes my report, and I'd be happy to answer any questions you may have.
Discussion, Member Moore.
Thank you, Mr. Gow. I appreciate the willingness to just review the budget with us. I had a hard time last year kind of getting numbers, and as a board member, I felt that it is our responsibility to know what's going on. So I appreciate that. I would also like to ask that you put the prior year numbers as well as the current year, just to see how we're doing. Even though you're reading the current numbers, I don't even know what the prior year numbers are. So when you send us the information, I think that would be very helpful. I know that I was concerned when we didn't meet the controller's estimates a couple of the months last year, and if we're not meeting the forecasted revenues, I don't know how that is broken down in terms of the different funds, but I'd like to better understand if we're not meeting the numbers that people are expecting, every month.
Very good.
What else? I don't know when the appropriate time is to talk about contracts, but that is something that I'm interested in. I know that we have a very high dollar threshold for the executive director to issue contracts, and I'd like to, at some point, revisit the limits and what some of these contracts are. I know we got a printout of them, but I'm not sure what all the different contracts are and whether we're following all of the DVVB contracting procedures and posting and all that. So I don't know, at a future meeting, that's something that I'm interested in looking at.
Very good. Thank you. We will address those items.
Okay. Further discussion, members? Hearing none, board will receive and file. Thank you very much, Mr.
Thank you.
Our next matter is item P5, the Administration Deputy Director's Report. P51, Facility Update.
Whenever you're ready, please introduce yourself for the record.
Good afternoon, Chairman Horton and members. I'm Edna Murphy, Deputy Director of Administration. Here with me today is Dave Pepper, Senior Planner, and Sean Bergsteed, Industrial Engineer for Hamel, Green, and Amberson, to present the Progress Improvement Study.
Good evening, members. Mr. Chairman.
Good evening.
I'm David Pepper.
Welcome to the board, sir.
We're here to, thank you, here to provide you with a brief overview of a process improvement study that we've been working on for the last, in the last half of last year. So this process improvement study is for the BOE's headquarters operations, and it is in direct response to the State Auditor's Report 2014-108, asking for some additional support and backup on certain points. Our general findings are that the BOE continues to grow. We'll have a little more detail on that. That your operations are constrained by the 450 N Street facility, that your fragmentation, your current fragmentation between 450 N Street and the 4 annex facilities will continue to increase as you continue to grow. Process improvements, especially in the return processing operations, are possible. Employee-related issues will be reduced with a new facility, and you could operate more efficiently if your entire headquarters operations were consolidated on a single campus. So as a benchmark today, you're occupying about 800,000 gross square feet in 5 locations in Sacramento and West Sacramento. Your growth is projected at approximately 3% per year per our calculations. For for the next 10 years. And that will result in a gross square footage need of about 995,000 gross square feet for a new campus in 2025. So on page 4 of our presentation, we took a look at the square footage that you've occupied in the past and projecting ahead, and the gross square feet needed, which is the blue line. And you can see that those lines intersect at about 2019. So we're projecting that our projected growth for you, that you'll be out of facility space around 2019 unless other space is provided.
Good evening, members of the board. I'm Sean Bergstead. Two primary opportunities exist for the headquarter operations process improvement, and these are effectively most effectively realized on the consolidated campus, as Dave said. These opportunities are a significant reduction of travel-related waste due to transportation of materials, and a reduction in workload imbalance between departments through time of year. With respect to travel-related waste, it is expected that a consolidated campus would reduce 6,500 annual staff miles today to around 2,700 miles in the future. In addition, due to the decentralization of resources among the many floors at 450 North Street, or 450 N Street, there is a potential to better flex staff based on seasonal variation and workload need. A consolidated campus would allow for cross-trained staff to share work throughout the year more easily, reducing workload imbalance and a potential for improved document processing time. It is anticipated that an opportunity for flexing of staff could yield up to 45 personnel years of savings, which would free resources to be reallocated towards other efforts of the BOE. As the BOE looks towards the future, it was determined that predicting growth on headcount will be approximately 3% per year. This is based on an analysis of budget change proposals over the last 20 years. The last 10 years were taken as most representative of the next 10 to come. And this is primarily the reasoning behind that is because of the e-filing that started during that same time frame. With that in mind, it is expected that the headcount would increase from 2,852 today to roughly 3,800 by 2026. So there's a significant growth expected.
So in summary, the recommendation from our study is that you relocate to a new campus, consolidate all of your headquarters operations there, load a mid-rise campus. This is consistent with the findings from previous studies and recommendations that have been out there. A new campus could be either a single-phase project or a multi-phased project. And if it were multi-phased, creating a return processing center for those operations would make sense for a first phase of the campus. So the benefits of taking this path is that it would accommodate your growth. You'd be able to consolidate your headquarters operations on one campus, multiple buildings in all likelihood, but one campus. You could implement some of the process improvements identified in this study. You'd remove some of the facility deficiencies that you're currently experiencing in return processing with technology and with disruptions that will happen with facilities repairs here over time. And you'll see some improvement in employee-related issues, should see improved recruiting and retention and employee satisfaction. That concludes our report.
Thank you very much. I would encourage that we extrapolate those projections of savings in personnel and so forth to estimate what the dollar revenue savings might be to the state of California. The same thing with the mileage. I would transfer that into an analysis of the benefit to the environment and so forth, that type of extrapolation and analysis. The unfortunate thing is that the legislature may very well look at these things from a waste analysis, which one wastes the most, you know, and so as opposed to a revenue analysis, which is very unfortunate, but means that the allocation of revenue is based on, you know, the waste, certain level of waste is acceptable to government, which I don't necessarily agree with, but it is what it is. It's been our experience in dealing with this building. See, I got environmental issues now. So let's see if we can convert that into a language that the legislature understands. Member Ma.
Yes, thank you. So I had an opportunity to meet with Daniel Kim, the new head of the Department of General Services, and I don't know if you've shared this with him, but he was asking us for data, not only space requirements and preferable needs, but also where our employees live, for example, just to have them start. There could be a path, should there be a will and a way, and appropriate location, and everybody pushing the right way. So if you wouldn't mind getting together with Daniel and just giving him this data if it's available.
Yes, and actually, the executives from DGS contacted me today, and they said that they were very interested in meeting with BOE and start talking about next steps. So we'll be scheduling that real soon.
Excellent. Further discussion here?
Good deal.
Hearing none, board will receive and file. Thank you for your presentation today. Ms. Richmond?
Our next item is P52, 2016-2017 Spring Finance Letters.
Next is the presentation of the 2016-17 Spring Finance Letters for board approval. We have 3 proposals today. If it pleases the board, I will present each proposal, then take questions on that item and ask for a motion to approve before we proceed to the next proposal. The first proposal is the Centralized Revenue Opportunity System CROS project implementation phase. The BOE is requesting $58.7 million and 99.2 positions in fiscal year 16-17, and $65.9 million and 115.6 position in fiscal year 17-18, to enable the CROS project to transition from its procurement phase to its implementation phase. The CROS project is an information technology modernization effort designed to expand tax and fee payer service, improve the efficiency and effectiveness of BOE's operation, and enhance its ability to generate increased revenue, reducing the tax gap. The projected revenue is estimated to be $38.8 million in 16-17, $48.5 million in 17-18, and around $200 million per year after the solution has been fully deployed. Are there any questions on this proposal?
Hearing none.
AB 1717
You didn't want a motion?
Oh,
No.
I thought you wanted a motion on each one. I misunderstood.
does that mean you guys are good?
Well, Member Runner brings up a good point. Member Harkey isn't present, so we can take them all at the same time.
We're good. Yeah.
AB 1717, prepaid mobile telephony service surcharge. The board is requesting $2.9 million in fiscal year 16-17, $2.4 million in 17-18, and ongoing for 22 positions for BOE to continue processing the mandated workload associated with Assembly Bill 1717. AB 1717 enacted the Prepaid Mobile Telephony Service Surcharge Collection and the Local Prepaid Mobile Telephony Service Collection Act, which imposed upon each prepaid consumer a prepaid MTS surcharge and local charge to be collected by a seller on each retail transaction involving prepaid mobile telephony service. The legislation went into effect on January 1, 2016. Although this program is primarily administered by SUTD and FOD, it is a new surcharge program and impacts all functions of tax administration, including registration, return processing, collections, audits, appeals, refund, and various support functions. Significant resources are needed to fully implement and administer this new surcharge and local charge program. According to AB 1717, the prepaid MTS surcharge is expected to generate approximately $51 million annually. That's $5 million in new revenue for the general fund, and $72 million annually, $36 million in new revenues to the locals. These revenue amounts are based upon the statutory provision prior to the small seller exemption of $15,000 during the previous calendar year commencing on January 1st, 2017, and adjusted annually by the Department of Finance. Lastly, I have Senate Bill 84, Regional Railroad Accident Preparedness and Immediate Response. The board is requesting $822,000 and 2.4 position in fiscal year 15-16, $893,000 and 4.3 positions in 16-17, and $898,000 in 5.4 position 1718 to administer the provisions of Senate Bill 84. SB 84 authorized a new fee to be imposed on owners of the 25 most hazardous material commodities at the time that hazardous materials is transported by loaded rail cars in California. This bill creates the Regional Railroad Accident Preparedness and Immediate Response Fund. SB 84 does not specify a fee amount, therefore no revenue can be estimated. However, SB 84 requires the fee to be imposed within 6 months of the Office of Emergency Services establishing a fee schedule. The collection of the fee is scheduled to begin October 1, 2016. That is my final proposal.
Thank you. Now, members, is there a motion to adopt spring finance letters? Moved by Member Runner, second by Member Harkey. Let me encourage the department to take a look at 3 different items. One, the whole medical cannabis actions that are out there. Just the mere conversation about medical cannabis becoming legal has increased our workload. Our call center is receiving additional calls. Our outreach effort and to educate folks and to inform them about that is receiving additional pressure, if you will, which is causing members to redirect resources in order to accomplish that objective. More people are actually filing their return and starting to participate in the payment of their tax liability, which we believe that will increase. And if in fact this is determined to be legal at some given point, it's going to have a significant impact on the Board of Equalization ability to enforce and collect all these projected revenues that they're having without the appropriate staff in place. And I think the inherent challenge of the whole BCP process is that we wait until after we see something before we begin to respond to it. This is one of those situations where we need to continue to tell the story about the impact, the negative impact of the cannabis industry without the appropriate ability to enforce the law and encourage compliance with the law. As a result, the Board of Equalization is excluded from the current legislation, no funding for our participation. I think that's an inherent mistake to establish a law or a regulatory process that doesn't have the enforcement and the administrative oversight under consideration as we move through that process. The second is AB 681, member Ting. Although de minimis to some degree, but yet still agreed upon in the legislative process that it would require additional staffing in order to accomplish those objectives. And such that was the case, we ought to move forward in the BCP process. Lastly is the desire for the board to operate at its optimum efficiency as opposed to optimum efficiency in that we are positioning ourselves to provide California taxpayers with the maximum amount of advice and oversight through the audit and compliance process. And indicative of a need there is the fact that significant number, hypothetically 1,000 audits are selected, but yet we only review 200 audits. When in fact, if we had the appropriate staff, we might be able to assist even more taxpayers in complying with the law. And there is a higher point of diminishing returns, and we need to do what we can do to articulate and communicate that to the legislature and the governor, instead of leaving those revenues on the table and then subsequently doing an audit 5 years later and hitting them with a much larger liability. Taxpayers are in a better position to have the advice and information at the earliest possible stage, which would allow them to be in compliance and reduce their liability. In addition to those who may not be interested in complying with the law, it's important that we're there to assist them and encourage them and give them good reasons why they should. And lastly, all of this gives us an opportunity to provide our staff with promotional opportunities that they currently don't have by identifying the need and giving them the option of increasing their capacity to do more, which I believe we can, with additional staff, which provides additional opportunities for the organization. It's a motion and a second. Without objection, members, such will be the order.
Thank you.
Ms. Richmond?
Next are those matters that were taken under submission. Our first matter is B1, Zong Rong Lu and Ying Ma. This was the waived appearance.
I move to deny the appeal and sustain the FTB.
Member Harkin will sustain FTB, second by Member Stowell. Without objection, members, such will be the order. Ms. Richmond?
Our next matter is B2, Michael J. Barkley and Laura Ann Barkley.
I'm going to move to grant this appeal under my belief that we had a protective claim on the tax return.
Member Harkin moves to grant the appeal. Dies without a second. Is a subsequent motion?
Move to sustain the Franchise Tax Board.
Member Storer moves to sustain the Franchise Tax Board, second by Member Ma. Without objection, members, such will be the order. Ms. Richmond?
Our next matter is B3, Robert W. Holman and Margaret E. Holman.
I'm going to move to grant the appeal.
Member Harkey moves to grant the appeal.
A second.
Second by Member Runner.
Have a discussion?
Discussion, members?
It's a very complicated case. I know there were some concerns that the Franchise Tax Board was communicating directly with the individuals and not at the trust level.
I think the timing issues were really key for me. The timing issues as far as going back after the trust. Also, when the FTB determined that they decided that the trust was no longer valid and it became a grantor trust, is very confusing to me as to where that was established and within what time frame. And if in fact that was the case, and that seemed to be their big case, why didn't they notify the taxpayer at that
That's why I was going to comment on that. I mean, first, little insight. When, generally speaking, when FTB is auditing a pass-through entity of some sort or a higher entity and there's owners involved, they would notify the individuals that that entity is under audit, and they mainly notify them because the tax will most likely affect the individual, so they want to let them know that's coming. The reverse generally does not happen because if they're auditing the individuals based on something that's on their tax return that came from a trust or an S corporation, those individuals are either the owners of the S corporation or, in this case, the trustees and the fiduciaries of the trust. So not only do they know what's going on, they're in possession of all the documents to support what they did with their trust stock instrument. As a matter of fact, when the FTB started the audit in September of '07, they basically started asking questions about this charitable remaining trust. So there is effective notification at that trust level that something's not right. With that being said, this whole notice requirements and letting someone know is for the taxpayer who's going to end up paying the tax. In this case, it is the individual. So 1903.3 that says FTB must give notice is referring to whoever they're going to give a deficiency assessment to, not to some other entity. And then the 4-year statute of limitation and the waiver that the individual sign also applies at the individual level. So, in my take on notice, they did do the notice. We may want to raise an eyebrow. Maybe they should have done it a little clearer. But at the end of the day, the taxpayers who were going to have to pay this additional tax knew as early as 2007 before the statute of limitation ran on any taxpayer or entity, that there was a concern with this trust.
Yeah, I agree with you. I understand that you may have known you were being audited, but you never understood at any point in time that your trust was being negated, and all of a sudden you were a grantor trust. When I read this and I went through this whole thing before I came to the hearing, I was definitely in the FTB's favor. After I went through the hearing and I heard and I understood that they had already donated or made a gift to a charity, they treated this as a charitable trust all the way down the line. So I don't believe the taxpayers ever knew they did not have a charitable trust, because they got rid of $2.2 million, which is in essence what the FTB now wants tax on, and they don't have the property. I didn't get that until I sat at this hearing. So I do believe that they treated it as a charitable remainder trust the whole entire time, and that had they had an inkling, they may have, tried to, but I'm not so sure that the FTB established that they had violated. I think that, there were some actions, but I think to just negate the whole trust and tax the amount that was already donated or gifted to a charity is a little bit, I have a problem with that. Okay. So I do think they treated it, they wanted it to be a charitable remainder trust. They treated it as such. When they eliminated it, they did the proper method towards the charitable institution. They followed the law as they understood they were operating. And had they understood they were operating as a grantor trust, I think they would have stepped up a lot quicker.
Okay.
Yeah, I think that's my issue is I think they would have operated differently if they knew that there is going to be this revocation of the charitable trust, and then therefore viewed and looked at looked at as a grantor trust. And I'm not sure, I'm still unclear as to whether or not the FTB really had the ability to actually make that decision in that regard. And I think there was quite a bit, at least some confusion, discussion about whether or not they could actually remove the charity, the charitable trust at that point and assign it a grantor trust. So that's where I'm at.
Okay. I just object to the motion.
Yeah.
I had to just have one more comment. Just when I look at the entire transaction, that it was a personal resident that they were living in, that they wanted to sell, couldn't sell. They put it in a tax-deferred entity so that the gain basically went untaxed until a subsequent distribution. They benefited from a charitable contribution, but yet they're still living in the house. It just doesn't sit well. They say they paid the trust rent, but there was no evidence to support that they paid the rent, but yet the trust takes deductions for maintaining the house. So I respect the member's opinion that FTB did not maybe have the right to revoke the treatment, but I think they did. I think it was a solid audit, and I object to the motion.
I was there prior to the hearing.
Real quick on that, is that one of the facts that was interesting to me is that while they were living in the house, they were actually renting it from the from charitable trust.
But they showed no evidence. They said they rented it, but they didn't show any evidence of them paying rent to the trust. And the trust did not report any income on the trust return from that rental activity. But yet the trust took deductions as if it was rental property.
Go ahead.
Members, I think this is abuse of a tax-exempt structure, trust. Clearly, the evidence indicates that they were able to take the $850,000 deduction to a charitable organization when they first placed the property in. Clearly, the evidence indicates that $1.2 million has gone untaxed, never been taxed, and will never be taxed if, in fact, we rule against the FTB in this case. The law is clear. The unfortunate thing, or the fortunate thing, or the legislative logic behind putting so many restrictions on a trust, saying that you can't just go in and take hundreds of millions of dollars out of a trust and put it into your personal bank account. and still have the benefits of all the deductions that go along with that. The initial deductions and not paying tax on the 1.2 million. Then relative to the intent of the parties, clearly there's an act of self-dealing here that they admit to. The record did reflect that the trust pays the expenses while the individual was living in the property. Although incumbent upon the FTB, in which they've met that burden of the appropriate notification, it's not incumbent upon the FTB to give them advice and to have them do it right. By the testimony of the expert here, it was just a mistake on the part of their CPA, and had they been notified, given the knowledge that they have now, they clearly say they would have went back and cured it. But yet still they never did go back and cure it. And at the end of the day, you have a situation where you've set up a trust for the benefit of a nonprofit. That's why you get the deductions. And the nonprofit, even though they received a portion of the revenue, which is a large amount, nowhere near what they would have received had this been treated properly. And so the benefactors of this mistake is the taxpayers, not the state of California. They're not benefiting. It is not to the extent that they should be in accordance with the law. It is not the nonprofit. They're not benefiting to the extent that they should be in accordance with the law. And those acts it's just difficult for me to award someone and have someone benefit from their own mistakes. But respectful of the thought process of my colleagues.
Okay, so I've been going back and forth on this. First off, obviously it's not a clear-cut case by them living in their home for 6 months. You know, I know that they could cure it as part of, you know, the trust. I also hear what you're saying, Ms. Stowers, that when you're going to audit pass-through entities, usually the notices do go not only to the entity, but also to the, you know, the beneficiaries, the partners, whoever's getting the K-1, so that everybody knows that something is happening. So I kind of hear that. It also bothers me a little bit that they terminated their trust earlier. Usually charitable remainder trusts, you know, continue for a certain period of time so that you can continue to get the tax benefits. And, you know, it goes certain deductions you get for charity purposes, and then the principal, you know, goes to where it's designated. And the fact that this was terminated early, they had excess distributions. The auditors may not have caught it in time, but still I think the trust is still susceptible or open to an audit to make sure that it was done correctly. Whether it was terminated early or it was still in existence, I still think that it would have been subject to an audit. So I am going to be moving with the Franchise Tax Board on this case.
Further discussion, members?
There's a motion and a second. Do you want to vote? Or do you want to, what do you want to do?
It's up to the maker of the motion.
Well, we can have a vote. I mean, I know where it's
As the
going.
first and the second, objection noted. Ms. Richmond, please call the roll.
Mr. Horton?
No.
Ms. Harkey?
Aye.
Mr. Runner?
Aye.
Ms. Ma?
No.
Ms. Stowers?
No.
Motion fails.
Motion to sustain the Franchise Tax Board.
Second.
Second by Member Ma. Motion by Member Stowar. Second by Member Ma. Objection noted. Ms. Richmond, please call the roll.
Mr. Horton?
Aye.
Ms. Harkey?
I'm sorry. This is very confusing. I'm going to lay off. Not going to vote. No vote.
Mr. Runner?
No.
Ms. Ma?
Aye.
Ms. Stowers?
Yes.
Motion carries.
Ms. Richmond, next item.
Our next item is C1, New NGC Inc.
Talk about confusing.
Yeah. This actually wasn't as confusing. I had, I did a total flip on the other one from where I was when I walked in. I'm wondering if we should take these one at a time, because it seemed like we had
One chemical at a time.
one chemical at a time to see where we're going. I originally was thinking of making a motion to grant the claim for refund with the exception of Versanex. I did not feel that Versanex was, I thought that it was a chemical reaction, and that's really what it was for.
I would second that.
Okay, I have a second.
Or what are we doing?
Members, there's a motion to grant the claim for refund on all items with the exception of Versanex. Did I state your motion?
You did.
Member by Member Harkey and second by Member Ma. Discussion, members?
Not too sure about all the chemicals, but I do want to comment that if the majority of the board agrees to grant, that I think the proper method is to go back for a re-audit and look at this difference between use tax and sales tax and determine if something needs to be, whatever that term is, tax paid by.
Tax paid purchases resold deduction.
Thank you. So I would say a re-audit and.
That's fine.
I don't even know if you guys want them to have the option to come back after the re-audit, but definitely a re-audit.
I would add that to the motion. I think that's probably appropriate. Because we really don't know.
With respect to the other chemicals, I see this acid tartic. Let me get to my notes.
So now you're going to
being having a functional use after the manufacturing process. The sodium sulfate, I thought the claimant indicated that even after the manufacturing process is completed, the sulfate continues to inhibit mold and mildew growth. And that's very chemical and technical to me, but I'm just trying to visualize if you have something like this in your wallboards, you don't get mold. And so I'm leaning towards that basically had a functional use afterwards. The other chemicals, I'm not there, but there is a motion in a second.
Okay. Members, again, I mean, the law is very clear to me. I wanted to have the discussion because I wanted the taxpayer to have the benefit of the doubt. And I'm really excited about I'm pleased that we had that discussion. To me, these chemicals, if you were to spray them on the wallboard after, as articulated, I think, by several after the fact, they wouldn't accomplish any objective whatsoever. And they wouldn't make it less resistant to water, wouldn't make it harder. If you just took it and sprayed it on the wallboard, it wouldn't do anything. And its inherent properties is such that it exists there within the body. Even the acid tartaric acid. Tartaric acid. I don't believe it had any effect, but by virtue that the department couldn't dispute that, I feel it's incumbent upon me to give the taxpayer the benefit of the doubt and judge the evidence as presented to us, not the evidence hoped to be presented to us some ways down the road. But again, I respect there's a motion and a second on the floor. Objection noted. The motion stands as it is without any modification, I believe.
Well,
just to order a re-audit.
To order the re-audit.
How do you, just point of clarification, how do you order a re-audit? What does that mean?
The board, if it adopts this motion, would be ordering the department to perform a re-audit, in this case to verify first of the chemicals that the board's voting, this current motion is to grant on all but one. So they've got to determine how much tax applied to the 4 that are granted, how much applied to the 1 that's not, allow that refund, and then to the 4 that they paid tax reimbursement on that this board is also granting, verify the amount that's available to claim as a deduction after allowing the refund of the use tax. That's all far more easily accomplished in a re-audit than anything I could try to present today.
And so how long is this process going to take?
It's a New York case. I was questioning that. We could do a 30-30-30, and Mr. Runner, you had once asked if we were that strict in those timeframes. If more time were needed, I would assume and hope that, subject to the chair of the chief of board proceedings, we would be able to allow more time as needed. But the re-audit usually is I'm thinking it could be done within the 30-day, 30-30-30 process. If extra time was needed to do this, they could do it. And then a 30-30-30, if we went that route, would allow the path to come back. There's also the petition for rehearing process. My guess is this result is acceptable to the taxpayer, so I don't know that we need that 30-30-30. So I'm not suggesting it, but I'm putting it out there as a choice.
Yeah, I mean, I assume what we're trying to do here is the re-audit is basically not a re-audit of.
Not to increase.
Yeah, it's not a re-audit in the sense we're going to go and look at all their books and take a look at everything. Right. This is just to try to identify with each of these chemicals the proper allocation.
And implement this board's order.
Well, strike that.
Isn't that that's what my understanding would be.
Let me clarify. I don't believe that the department has that authority if the motion on the floor actually passes. I think what the re-audit does, it takes a look at excess tax reimbursement and determines whether or not they actually paid the tax to the board and therefore entitled to a claim for refund, or did not pay the tax and therefore not entitled to a refund directly to them, of which they will ultimately refund the funds back to the individuals that they paid it to, I would presume.
They will get a refund of the use tax that they self-accrued and paid to the board, or a use tax that they paid to out-of-state retailers, is subject to department verification. Right. Regulation 1701, I believe it's 1701. The tax paid purchases resold deduction regulation allows the retailer to file a claim for refund. So normally they would have to, as excess tax reimbursement, but that's not this situation. They paid tax reimbursement on something that potentially this board would decide was for resale. So they would have paid they were entitled to a tax paid purchases resold deduction. The only need to verify is to make sure there's a liability against which to offset that.
So that's the nature of the audit.
Right.
It would be mechanical. If the current motion is to.
Right. Mechanical is good. I just didn't want to
It doesn't expose.
Sending auditors to New York.
Right. You're in charge. It doesn't expose further liability. It's not an opportunity to try to increase a measure. It's just to implement this board's order. According to this motion, if it were to pass, you're granting 4 chemicals and not as to 1. They've got to make that happen and then compute the use tax.
And I thought, maybe I'm missing it, but I thought even in the discussion with the taxpayer, they acknowledged that would be something that would need, that they were open to. Did I miss that?
They didn't object.
They didn't object. It was part of the discussion.
I'm not going to speak for Mr. Vinatieri and say he agreed.
Yes, okay.
The other thing I would encourage staff to take a look at, I mean, these chemicals are common chemicals that are being used in this purpose on a number of different levels. And so if the motion passes and it's the will of the board, I would encourage staff to take a look at all the other potential claims for refunds, which will be in the hundreds of millions of dollars relative to this, and to protect those refunds, to move forward to protect those refunds and to notify the industry of the board's decision to do this. Not that I'm interested in protecting them, because I think they owe the tax and the tax is due. Let me be clear here, but I'm just doing my due diligence, my responsibility as it relates to the members to make sure that we cover all that. So motion and second, objection noted. Further discussion, members? Hearing none. Ms. Richmond, please call the roll.
Mr. Harton?
No.
Ms. Harkey?
Aye.
Mr. Runner?
Aye.
Ms. Mobb?
Aye.
And Ms. Towers?
No.
Motion carries.
Ms. Richmond, our next matter.
That concludes our business for today.
Can you believe it?
All right.
Members, the meeting of the Board of Equalization is hereby adjourned.
I get to fly into LA.
I know, that was.